ChatGPT came out in 2022, October, November. If you look at 2022 to date, the Magnificent Seven were 20% of market cap in 2022. Today, they are 36% of the market cap of US. That tells you what happens both to the earnings growth trajectory as well as to the growth when AI comes into your country. That may be a little long stretch for India, but the capex cycle for data centers are going to hit us very soon. So let's take advantage of those names.
Well, hopefully the markets give us enough opportunities to take advantage within specific themes or otherwise. But Vinay, such a pleasure talking to you today. Thanks so much for taking the time out and being with us.
Appreciate your time, guys.
Well, the markets, though, on their part today have taken a bit of a backseat. I reckon the crude price uptick and the fragile ceasefire, if you will. But I must say, relatively well behaved. In some sense, the markets seem to be telling that they do not wish to go down. Now, if they have to be gone down because the conflict escalates, a separate thing. But there's something about the market behavior since last Thursday which is telling you that. Let's see if this holds on, if this recovery holds on as well. But for now, from Hiral, Alex, me and the team that has put India Market Open together, thank you so much for tuning in. But stay tuned because all your questions are answered on Ask Profit up next.
Stock related.
Do we answer that?
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
Presenting the all-knowing, all-powerful
Hello and welcome. You're watching Ask Profit here at NDTV Profit. I'm Mahima Vachharani. With me, as always, is Puneet Zaveri. I think the excitement in the markets was just for a day, and of course, there were developments post that that have kind of led to the pressure that we're seeing in the markets today. Though the pressure is limited right now, but with regards to where the Nifty 50 goes. Let's try to pull that up, down by about 0.6%, 143 points of a downtick is what we're seeing right now. There is slight recovery, of course, from its day's low point, but still the pressure continues. We'll have to wait and watch out for as to how this pans throughout the day. Let's also try to pull up the bank Nifty. It's also seeing a downtick of around 220 odd percent, down by about 0.4 odd percent. The Nifty 50 heat map, if we can. So the counters which were gaining yesterday are seeing some profit booking today. You have Interglobe Aviation, which is down 1.6%, L&T, which is down 1.8%, Petronet down 1.7%. IT continues to be under pressure. Infosys losing the most ground, down 2 odd percent. M&M is something which is also facing pressure today, down 1.7%. And HDFC Bank, Geo Finance, HCL Tech are some of the other names that are in the red. But on the flip side, you have Hindalco, which is topping that chart. Yesterday, of course, slight bit of pressure is what it was seeing, but today up 3.5%. BEL, NTPC, Powergrid, ONGC are some of the names doing fairly well in trades today. Let's try to pull up the sectoral heat map and see as to what sectors are looking like right now in terms of the gains that we saw yesterday in realty. Has that reversed or not? Yes, slightly. 0.8% of a downtick is what we're seeing. Nifty IT losing the most ground, but something that's doing well is Nifty Metal. And defense up 1.8% for the defense, and Nifty Metal up 1.1%. Quickly, if we can try to pull up the advanced decline ratio as well, because the broader end of spectrum is also slightly when it comes to your mid cap 150 and the small cap 50 under pressure. But even Stevens Puneet is what we're seeing in terms of where the advanced decline ratio goes right now, slightly in the favor of the buyers.
Yeah, but we've seen some sell-off actually on the mid cap and the small cap from the start of the trading session. So both actually started in the green and then have receded back again in the green now by 0.2% for the small cap 250 as well. But overall, when you look at the BSE 500 yesterday was a blitzkrieg screen to say the least. Gains of almost 9 to 12% on most, and today as well. Some of them are standing out. Sterlite Tech, ITI, Jindal, HFCL and JVM Auto back again on investors' focus on the stocks doing well. And in terms of losers, you're seeing a 2 to 4% downtake across a few players. E-Clerks, Rainbow Children, Healthcare are some of them as well. But, let's go across and start taking our stock-related queries as well. We have, of course, Kush Bora today since it's Thursday in the studio. Kush, very good morning and thanks so much for joining in today. Also have Shaina Mukaddam, independent market expert on the fundamental side. And to both of you, thanks so much for joining in today. Let me just go across, take the first query now, and this one's, on Anantraj. Now, Ramesh actually has bought shares at 638. And he wants to know whether he should average down now for the next 1 to 2 years. Shaina, would you recommend that? Because stocks slipped yet again below that 500 mark. What would you recommend right now?
Well, he can average. Basically, the data center contribution is going to start contributing 1 year down the line. So it's a total shift in the business. So while I don't see the stock just going one way up, I think the business prospects are good. He can start adding as of now and keep adding over the next 6 months to 9 months in a staggered fashion to get the best return over a 2-year period.
That's the view coming in on Anantraj. Kush, just out of curiosity, yesterday you had, clearly said that, it's time to book profits, right? Considering the up move that we saw. But for somebody who's probably made money in L&T, Indigo, Shriram Finance, etc. yesterday, still has at least some course of recovery, right? Do you think that they should also kind of book profits in the positions that they're sitting on?
So first up, a very good morning. Right, and let me also tell you this. I think the whole book profit thing has become a point of discussion. It's become a point of contention.
Yeah.
Let me clarify once again. If anyone bought stocks or even index from a very short-term perspective, because you've got traders also in this market, right? The markets are massively oversold. So there was a view, keep itne bottom pe buy kare kya. That's when you go out and buy. If it was from a very short-term perspective, then you book profits.
Okay.
If it is a medium-term view, then I think what we are seeing today, marginal profit booking, right?
Correct.
But this is not something to deter from that further upswing that could take the index to 24,500, 24,800 kind of levels. So that's the idea. Now, for your very pointed question about let's say a Shriram Finance or an L&T. See, L&T was something that we mentioned by even 3-4 sessions ago, right? Before the breakout came yesterday. The view is very similar. If you've bought it from a short-term perspective, you should book profits. However, I think stocks like L&T, Shriram Finance, you don't get them at these prices, right? Unless there is an issue in the market that we're seeing currently. So most people don't buy these for trading bets. They buy them from a medium-term perspective. So from that perspective, you should continue to hold stocks like L&T and Shriram Finance.
Okay, all right, so that's the view coming in, of course, a much needed view for viewers who are watching this. But moving on to the next question, I think this is coming in from Mr. A.K. Bhalla, who's writing us from Jalandhar. He says that he's purchased Petronet LNG from a very short-term perspective at the levels of 268, and he's got 5,000 odd shares. Wants to know if he can continue to hold this counter going forward from a short-term perspective. Kush, your view on the charts on this one?
Yeah, looks like a very recent buy, perhaps today also. I mean, that's the price that, that it is at currently.
Yeah.
Look, the primary trend for this one is negative. It has rebounded with the rest of the market, but the rebound started a few sessions ago before the market did. So I think just from that continuation of a rebound perspective, the volumes were higher, RSI indicating an up move. I think you can continue to hold largely because you're at the money right now. So you can continue to hold, but I wouldn't look for very massive gains on this one. A quick trading bet and you should be out of this. 263, that's your stop loss. On the way up, 274 and about 282. Those are your targets. Maybe partially you could start booking profits as the stock inches higher.
Got that view, Kush. Definitely, the stock got hammered because so much of its exposure, almost over 70% of gas inflow coming from the Strait of Hormuz, and hence the most impacted in that LNG segment as well. But going across, taking the next query from Srikanth from Bengaluru, he's actually asking a question on Sedimec Mechatronics. It's an interesting one, a very recent IPO in the auto space. But Shaina, I don't know if you track that counter. Because it was especially at a time where it was so volatile. This was one of the key listings which saw 10 to 12% gains. By any chance, do you track Sedimec, and if any, view for Srikanth?
No, sorry, I don't track new issues so closely.
Correct. Let me go across and probably Srikanth, once the company starts reporting the results, a more defined view then. But watch out for the high customer revenue coming in from TVS itself. So that would be something to watch in the first results post the quarter. But Kush, the next question is for you from Shankar from Bengaluru. He wants to know if Embassy Developers or Sagility could be something to bought at this point of time. Sagility, of course, recovered from the lows of almost 37 odd. But any view on either of those counters?
Yeah, I think, if the gentleman is a regular viewer, they would have heard us talk about Sagility in positive light.
He is,
And you can see the rebound that's already come about, and not just, with the markets prior to that also. So 37, 38, those levels, that it took support there, rebounded from there. I still remain constructive on Sagility. Healthy volumes on this one, 20-day moving average taken out, hitting the 50-day moving average mark. So I remain constructive. If it's from a medium-term perspective, you should continue to hold, or you can even add. Now bump up your stop loss to 39. On the way up, there's a good possibility that the stock could hit 47 and then about 50, 51 kind of levels. So that's on Sagility. Embassy, I'd be a little skeptical. Massive hammering right now seems like a short covering or a rebound from oversold levels.
Okay, all right. The next caller, I think Prashant is calling us from Bengaluru. A very good morning to you, Prashant. How can we help you?
Hi, good morning. My question is on L&T. In a while, I did see the stock was around 3,300, and now it kind of moved up to 3,900 to 4,000, right? So I wanted to enter this particular stock. So want to check if it is a right level to enter now from a midterm to a long-term perspective, or wait for further drops on this particular stock.
Okay, and I believe that you're looking for a fundamental view on this one, since medium to long term is the perspective.
That's correct.
Got it. Okay, Shaina, I'll take this up with you. with taking everything into consideration, of course, the stock ran up yesterday because of the ceasefire announcement. Earlier, when we used to speak about the stock, the execution part was a concern, but now, the Middle East exposure is a concern. Overall, from a long-term perspective, how are you viewing L&T right now, and are these the right levels to make an entry?
Absolutely. See, the Middle East is not only is a concern, continues to be a concern because it contributes more than, I would say, it's around half. Could be about, ranging between 45 to 49% of total revenue. So to that extent, currently it is going through a little bit of a tough phase, which could impact some of their numbers for maybe 1 or 2 quarters. But the order book remains still strong. It's more than 7 lakh crores, which is almost about 2.5 times its revenues. So it is not going to be impacted for a very long time, maybe 1 year time. I think this is a good level to start adding. You could keep a stop loss close to about 3,750 and odds, just in case, this Strait of Hormuz issues and the Gulf War continues for a much longer time. But I think that is a risk that we have for L&T. But I would start buying. I think valuations are not too expensive at current levels, but stagger it over a period of time simply because we don't know exactly when the issues in the Middle East will settle. But once they settle, then you could see a good spike in the stock price. So you can start adding, take a little bit of risk, and keep adding it over the next couple of quarters.
Got the view, Shaina. Quarter 4 becomes so crucial for L&T at this point of time, and of course, the rebuild Middle East would be a long-term opportunity nonetheless, but continue to track L&T at this point of time. The next question coming in from Jeet. Now, Kush, he's been persistent with his questions on HAL at this point of time, and he's asked us many times. So, Jeet, I think you'll have to ask us some other questions also apart from HAL, but he wants to actually buy it for the long term, but he's asking for your view specifically on HAL. Is this a good time to buy?
Sure, great. Jeet, first up, thank you for addressing that to me directly. Let me put it this way, not very constructive on the entire defense pack. I know there is now, a growing clamor, growing noise about how the levels are attractive and all of that. So yes, that's the rebound that could come about. You're already seeing that play out in HAL, right? It's rebounded smartly from those 3,500, 3,550 odd levels. Volume accumulation fairly healthy, nothing massively impressive. But just for that rebound trade, you could go ahead and buy, HAL. I think on the upside, you could well see targets of 4350 and about 4650, correct? But this would then perhaps go into a consolidation phase, if there is no follow through. Stop loss at the 3800 mark. What I still prefer in this space is BEL, MTAR Tech, some of those names, because HAL has gone into a long consolidation phase. Unless some key levels are taken out, a massive upswing from here on, perhaps, will take some time.
Got your view, Kush, but and hopefully Jeeta answers your question. But the next question coming in is on Tirumala Chemicals, another space that saw a good positive response yesterday as well. And Jayesh Parekh actually holds shares of Tirumala at 183, so very close to the current market level. Shaina, he wants a long-term, a 5-year view on the stock. What would you recommend?
Well, I would suggest this is not the right time to get into Tirumala Chemicals. One is that the company continues to make losses. Two is that the overall chemical sector is affected in a big way with whatever is going on in the Middle East, crude oil prices remaining high. So impact on raw materials, they are already making losses. So I would stay away from the stock as of now.
Got your view, Shaina. But let's go across, take our next caller from Punjab, and Gagan has a stock query for us. Gagan, good morning. Welcome to the show. What's your query?
I want to query for Kush. I have a stock PG Electroplast. My buying price is 514 with a quantity of 320.
Okay.
Want the recent views from Kush.
Got it, Gagan. Kush, yesterday, of course, I think from almost just 430, 440 levels, the stock was languishing there and then seen this fillip, but still not run away, right? It's still trading at the 470 odd mark, much below the level. And of course, there has been the fundamental factors impacting the results. But on the charts, would you suggest it's a good time to buy?
Yeah, so first up, Gagan, thank you for directing the query to me specifically. Within this space, the two stocks that I really like, one is PG Electroplast and the other is Syrma. Now, just because the query is specifically on PG Electroplast, the stock already had a massive fall. To Gagan's credit, I think his buying price is actually spot on, because if you see the recovery that started somewhere in August of 25, if you draw an upward sloping trend line, the support for that comes close to that 510, 515 mark, which is his buying price. So I think the entry point is fairly valid. Because of the war, the stock's been beaten down. I think recovery could be underway. It could be a little gradual. I would suggest a hold on PG Electroplast. The recovery that came about before the war could well start once you've got some sort of cool off, in the war. So I suggest continue holding on to PG Electroplast. Like I said, good entry point. Keep the recent lows of 430, 435 as your stop loss. And on the way up, good likelihood of 560 and about 650 kind of levels to be seen in the coming months.
Got your view, Kush. But the other one, and this is another very specific stock that we get so many queries on. It's Ola Electric. Now, Mahati from Hyderabad actually is asking us this question. Holding over 10,700 shares, bought at 32. Now, Shaina wants to know a 2-year view on the stock. The stock's up 13% today, though. So from the low of 22 just a week ago, it's seen massive buying there. But Shaina, what's your view on the stock now? We saw in the month of March, really strong numbers, but has been a consistent underperformer, right? Is this move something to buy into?
Well, I don't think, it's a very safe stock to buy. It's risky. It moves. But at the same, it gives you volatile moves, like, from the highs, it's come off substantially. At the current levels, I would say you could continue to hold it. Because there are some developments in terms of their launches as well as in terms of their manufacturing. So I would say you continue to hold, but you keep a stop loss now. I mean, so there's very little you can say in terms of what would be the bottom. But I would say hold it for now, but keep a stop loss close to about maybe 30 odd rupees or 29 to 30 rupees and hold it for the medium term and see if, the company is able to sort of revive its reputation more than anything else.
Kush, actually, do you have a view? Because it's yet again you're smiling year to year. But any view on the stock?
Yeah, I have a view. It's not very constructive, but just to the credit for the share price movement, at least, and speaking purely technically, if you draw a falling trend line from the high point of the stock, about 150-ish, 160 odd, correct? That long-term trend line, falling trend line has been broken. That resistance came in at about 27, 28. Volume accumulation in the last 5 odd sessions, 10 odd sessions has been healthy. So just to that credit, I would say continue to hold. I wouldn't really recommend, a fresh initiation. And yeah, like Shaina said, 28, 29, perhaps even 30 kind of levels should act as your stop loss. But just for the recent momentum, you could well continue to hold this.
Okay, all right. So that's the view coming in on Ola Electric. The next one is on KPIT Tech. Mulidhar from Bengaluru is holding 440 odd shares at the levels of 698. He says that he wants to hold this from a short-term perspective. At what price can he go ahead and sell? Kush is already sitting on profits of over 7,000 rupees. What is the targets that you're seeing on the charts for this one?
Yeah, so first let me give you a technical view and then I'll give you a strategy as to how do you typically play this, right?
Yeah.
Massively oversold. Right now you're seeing some sort of a rebound. Will it sustain? I have my doubts because there will be selling pressures. Anyone who's been holding on to this for some time will come in and exit. So, a massive upswing on this one, a little unlikely. To Muralidhar's credit, he's bought it at very good levels. He's sitting on profits right now. So from a technical standpoint, support comes in at 680 and on the upside, 780. I'm just rounding it off, 780 and the other level is 835. These are the levels that you should watch for on the upside. That's from a technical standpoint. But from a trading strategy perspective, how you typically play is a trailing stop loss. You would have heard me mention this time and time again. So your buying price or maybe just higher acts as your trailing stop loss and then you offload some quantity as the stock keeps going higher.
Got the view, Kush, and definitely KPIT Tech, another one where Q4 is crucial. We spoke about PG Electroplast. Guidance was expectations was very strong for Q4 to meet those guidance of 5,700 crores in revenue. Continues to be a crucial one, both of these counters. Let's go across to Dilip now from Hyderabad, who has a stock query for us. Dilip, welcome to the show. What's your query?
Hi, good morning, everyone. My query is on Waaree Energies. I bought 250 shares at 3,250 rupees, and I'm looking for a 1-year view on this.
1 year view. Got it. Shine on Waaree Energies. How are you viewing this counter now, and is this a preferred play in the solar and the renewable space?
Yes, I would think so, because it's one of the largest. It's got a presence in the US also. So to some extent, it is, I would say, protected, from a lot of tariffs. I also would believe that in renewable energies, they have got, a lot of capacity that is being added by Waaree Energies. And I would say you can continue to buy. It is a bit expensive. So don't go and buy it at one shot. I would say in such volatile markets, it's better to add on to these stocks which are quality, but add it in phases. If you're holding, you continue to hold. I see an upside if you're holding it for a 3-year period.
Okay, all right. So that's the view coming in on Waaree. The next one is coming in. Okay, we already discussed Ola. The next one is on Cyient. Sudhakar from Bengaluru has said that please ask this question to Kush and wants to know whether what should he do with regards to his 25 shares bought at the levels of 1190 for Cyient. Currently, the price is going down is what he's saying. So he's sitting on a loss of around 8,000 rupees. What would you suggest, Kush?
Sure. First of all, once again, Sudhakar, also thank you for directing the query. My only concern is this has been a rank underperformer for a very long time.
And multiple like that in IT, right? Where the fundamentals and the technicals are just like not matching, in that they've consistently been hitting a low and not rallied actually in this last month, definitely.
And you want to hear something interesting? Even today, when we had an IT discussion, I heard a lot of analysts and experts have a divided opinion, where some of them are saying कि नहीं bottom fishing बनता है, बहुत low levels पे आ गए हैं. Others are saying कि आ तो गए, but यहाँ से कितना चलेगा. So when the street is so divided, it just gives you that hint कि शायद अभी वो consensus नहीं बना है, और जब तक consensus नहीं बनेगा ना, वो massive rally आना मुश्किल हो जाता है. And that is, go ahead, you were saying something?
I think this has been the case it was the case for the last quarter as well, if I'm not wrong, that there were divided views. And I think certainty नहीं है, इसलिए markets को पता नहीं चल रहा है कि क्या करना है with IT stocks.
Very true. And it's been beaten down prior to the rally started, right? We all know the AI issues that came about.
February,
absolutely. तो उसकी वजह से थोड़ा rebound आया है. Now, not very constructive on Cyient, right? I mean, I say that with a heavy heart because he's facing a loss right now. Yes, there is a recovery. What I would suggest is कि अपने buying price का wait ना करें. Once the stock starts moving higher, crosses that 900, 950 zone, start offloading a little bit, because there is massive resistance at higher levels of about 1075, 1080. So before the rest of the market comes in and sell, you might want to start exiting a bit, right? So that's the view on Cyient. Positional stop around 765, 780.
Got your view, Kush, but yeah, definitely. I think post quarter two, stock was down 22% on weak results and hasn't recovered since. But continue to monitor that. Another caller now from Chennai, and Vishwesh actually has a stock query for us. Vishwesh, good morning. Welcome to the show. What's your query?
Hi, sir. Good morning. My name is Vishwesh from Chennai. I would like to seek your guidance on GTL Infrastructure. I bought around 1 lakh shares at 3 rupee 90 paise, and now it is trading at around 1.22. Want to know what is the advice from your side?
Got it. And Vishwesh, at 3.9, of course, stocks, really in terms of market cap also really small. But any particular reason you bought into this, or was it just a tip-based buying in that sense?
I had few scripts from the infrastructure space, which was going good. I thought it's being a penny stock, if I go big, I'll be able to make big. That was the idea.
I mean, I can't blame you on that. I mean, the opportunity looks very lucrative, but I really doubt, Vishwesh, if there would be any view from China, GTL Infra. I don't really track it myself, but any view that you might have by any chance?
See, what I see is that it is turned into profits if you see the December quarter. There seems to be something happening, but if you look at the balance sheet on a superficial level, the losses are huge in terms of net worth. The net worth has actually been wiped off. So this seems to be some sort of a turnaround stock, something happening in terms of M&A rather than rather than the fundamentals and financials. So I would actually not have a view on it. Maybe technically you can see, but it looks like something is happening. So I would say hold. Look at the technicals, if at all, for a penny stock, if you can do something about it.
All right, so that's the view coming on GTL Infra. It's time for our rapid fire round now. Shaina and Kush, you both know the drill. Try to keep your answers as short as possible. The first one is coming in on Sona BLW. Is this a good time to buy Sona BLW? Kush, your view?
Yes, I would suggest yes on that. Stop loss 515.
Okay, the next one is on PFC. Sabita from Hyderabad is holding. She's not given the quantity, but I think she's bought at the levels of 396. Wants to know if she can continue to hold this one from a long-term perspective. Shaina, your view?
Yes, hold. There will be REC will be merged into the company, and the valuations are done.
Okay, JBM Auto is the other one. Arvind from Mumbai wants to know if we can continue to hold this from a short-term perspective. Kush, I'll come to you on this one. Charts for JBM Auto?
Yes, you should continue to hold. Recovery underway. Stop loss at the 595 mark.
Okay, Vijay from Chennai wants to know about Titan. He says that he already holds this. He's not given the quantity and the price. But from a short-term perspective, what is the target that you can expect on Titan, Kush?
Yeah, good possibility that this momentum could take the stock to about 45.75 and 4700 odd levels. But I would keep a strict trailing stop loss because profit booking could come around the corner. Had a good move already.
Okay. The next one is on IT stocks. Piyusha Kunodia says that she wants to invest into 2 IT stocks, either Coforge or Emphasis. 2 lakhs is the amount that she has. Which one would you pick, Shaina, amongst the 2?
I would pick Emphasis of the 2. I believe valuations are good, and I would believe the performance will be decent going forward for the company.
Okay, KC Limited is the other one. Our viewer Ravi Kumar is holding at the levels of 530 and 300 shares is what he has. Wants to know a long-term view on this one. China, KC Limited?
I would say it's a hold.
Okay, Aptus Value Housing is the next one. This is from Ambika, who's writing in from Chennai. By the way, she's saying Kush is a huge fan. She's bought at the levels of 197. Short-term perspective on this particular counter?
Thank you so much for that compliment. I would suggest a hold, keep a stop loss at the 195 level.
Okay, NMDC is the other one. Vijay Kirti from Chennai is holding 3,000 shares at an average price of 91. What's the target price for the next 6 months? Kush, on the charts for NMDC?
Yeah, about 86, 87 is the resistance. So maybe you might want to start offloading once it hits that level.
Okay. Indian hotels, from a long-term perspective, what are the targets that you can expect? Is this the right time to maybe average? Shahina, what's your view on Indian hotels?
I would say you can start averaging. Hotel industry is going to be a little bit of a tough phase for the next couple of quarters. But given the stock price having corrected, you start averaging and you hold it for the next 2 to 3 years. Okay,
ITC, what is the upside from here on? Do you think it can go back to the 400 price point is what our viewer Sundar from Koshi is asking. Shaina, it will eventually, but the time period is something that we would want to know. Any idea on this one?
I would say, I don't know about 400, but I would give a target of close to about 330 over the next 1 year.
Okay, Precall is the other one. Rajalakshmi from Chennai wants to know if he can go ahead and invest in Precall from a short-term perspective. 1 lakh is what he's going to invest. Kush, your view on the charts?
Yes, you can. 555, that's your stop loss, and on the way up about 600, let me round that off, and 630 are your targets.
Okay, Irida is the next one. 500 shares bought at the levels of 133. 2 to 3 months target on this one is what Joe from Kerala wants to know. Kush, your view on the charts?
Hold, exit near cost price or maybe just above, stop loss at 117.
Okay, the other one is coming in on Dr. Reddy's. 100 shares bought at the levels of 1228. Vineet wants to know what should he do with this counter. Shaina, your view?
I would say you continue to hold. Pharmaceutical is likely to do better in this next 6 months to 1 year.
Okay, Paras Defense, 20 shares bought at the levels of 713. What should I do is what our viewer Lalita wants to know from a long-term perspective. Shaina, your view?
I would say hold. Order book is strong. Performance should improve over the next couple of years.
Okay, Kalyan Jewellers, 200 shares bought at the levels of 561. What should be the next course of action for Balasubramaniam? Kush, your view on the charts for Kalyan Jewellers?
You can hold. I would suggest partial exits above 475 and 500, that zone. Stop loss at the 425 mark.
Okay, all right. That brings us to the end of this first rapid fire round. But viewers, time to slip into a very, very short break. We'll be right back answering all those questions that you have on the other side. So do stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Welcome back. You're watching Ask Profit right here on NDTV Profit. Let's go across, take our next caller now from Andhra Pradesh. And Bharat has a stock query for us. Bharat, good morning. Welcome back to the show. What's your query?
Good morning, sir.
Yeah, Bharat, go ahead. I can hear you.
Good morning, sir. I am calling from Andhra Pradesh. I am holding 500 shares of Happiest Minds at the price of 445.
Okay.
So what is the stop loss and what is the target of this price? I will go to Kushbora, sir. And first of all, I thank you very much for your prediction on quality power, sir. Today I booked the profit and I am feeling happy.
Actually, Bharat has been asking us about Happiest Minds for quite a bit. So this is probably the second or the third time he's calling us, Kush. So probably your view this time helps him to finally make his decision on what he should do with this counter.
Yeah, so this is why I love Ask Profit. आपको direct, input मिल जाता है, and
good validation also, na, in that sense.
Some of that as well. But this is fantastic. Bharat, thank you so much for making my day with those lovely compliments. I'm glad that quality power worked out for you. I think that stock particularly has more steam, and you can continue to hold with a trailing stop loss if you're still holding that. But I'm afraid I don't have a similar good news on Happiest Minds, right? Rank underperformer. The stock's been beaten down. The only saving grace, if I can say, is that now on the way down, the volumes have started to shrink a little. So maybe the stock will go into consolidation phase. Your buying price is 445. The stock has resistances at 405, 425 and those multiple levels. So you might want to start exiting as the stock moves higher and not wait for your buy price. That's the verdict. Finally, a stop loss on this one, the recent low of about 360, 365. If that is broken, this consolidation also could fizzle out. So yeah, 365 stop loss, start exiting at slightly higher levels of 400, 410.
Okay, so quality power mein abhi bhi quality hai, but Happiest Mind is not going to make
Not so
investors happy.
Oh, lovely.
Oh my God,
that's a good one.
I really wanted to.
I don't think you heard what Chris said at all. You were just like, okay, I have to execute this.
No, I heard what he said and then I said this. Anyways, the next one is on MTAR Tech. Asa from Delhi is asking whether this is the right time to sell this counter. She's bought at the levels of 3540. So sitting on profits, she's not given the quantity, but wants to know if this is the right time to book profits. Kush, your view on this one?
What's the buy price again?
3540.
Oh, kudos. I mean, splendid.
Yeah.
The entry price, splendid. Riding up until now, magnificent. I want to say book profits, but I will reiterate or I will change that to book partial profits. Now, why do I say that? It is inching closer to overheated territories, right? On the daily setup, weekly it's already there. But the volumes even now are fabulous. So there could be some momentum. It could stay a little overheated for some time. So I would suggest book, about 40%, 50%, depending on your portfolio allocations, right? But don't let go of that completely. And about 40-100, 40-50, let that be your trailing stop loss for the rest of the quantity.
Got that view, Kush. Do you have a line for MTAR?
No,
okay,
not really.
Not really right now. Okay.
Nothing really fits with MTAR.
Fits with MTAR.
I try to.
The next question actually coming from Nagababu from Andhra Pradesh. He wants to know about if it's the right time to enter Max Health or Narayana for the next 5 years. So it's a long-term bet. Shaina, would you have a view on either, and if it's a good time to make that bet for our viewer?
I see the hospital sector is going to do well. So Max Health, they've got 5,000 beds and they are growing fast. I really like the stock, but I think it is expensive at current levels. So I would be buying it, wait for corrections to get into Max Health. They are doing pretty well, second largest hospital. Narayana also a similar story, but I would prefer Max over Narayana, but at slightly lower levels. So wait and watch for any dip to add.
All right. The next one is coming in from Pawan, who's writing us from Bengaluru. Wants to know whether from a long-term perspective, does it make sense to make an entry into GAIL right now? Shaina, your view on this one?
I would avoid GAIL as of now because, there are some issues in terms of the price of gas and the availability. So I would wait. I would not buy as of now. Avoid.
Avoid on GAIL. Also, Shaina, sticking with you because Rajesh from Bangalore actually wants to know about Grow. Now, and he's bought it at 182. Now, I know you said that you don't track all, the IPO listed companies, but this has been around for a quarter, given some decent guidance, decent commentary in Q3. What's your view on the stock, if any?
Well, if you're a long-term investor, yeah, this is a sector to be in, and you could continue to hold. It is actually remaining quite stable, being a new issue, despite being a new issue around at current levels. So I would say you continue to hold. I think the business prospects of the longer term for platform companies in capital markets is strong. So you hold. I would say add NSE when the issue comes up. So though I don't track new issues closely, I would be looking forward to that issue.
Okay, so grow mein growth hai then. I had to say it. I had to, right? All right. The next one is coming in on JNK Bank. This is from Praveen Kumar, who's writing us from Delhi. He says that he's bought at the levels of 124 today. 3,000 shares is what he's bought. 6 months is his time frame. Wants to know if this is a good buy that he's made. Kush, your view on the charts for the next 6 months for JNK Bank.
You're on a roll today, and I'll wait for the JNK comment also. But I think he's identified a good stock. I don't know if he's a viewer of the show regularly, but if you'll recall, before this fall came about, we had discussed on JNK Bank. Even on the morning show, we've discussed JNK Bank multiple times. Long consolidation phase, nearly about 2 years, 2.5 years of consolidation phase coming to an end. Above that 115, 120 zone, the stock is in that breakout zone. It's a good buy. I would suggest a hold. Keep it as a positional bet rather than a momentum play. Keep a stop loss slightly lower, so 117, 116, that zone can act as your stop loss. And this rally has a good potential to take the stock to 133 and about 145 levels. So yes, continue to hold JNK.
Got the view, Kush. The next question, that's coming in, it's on Cummins, and this is from Supriya, who's writing into us from Dubai, and hope everything is good at her end. She's bought at 4835, Shaina, so close to the current market price, and we've actually seen a very strong recovery in the last couple of quarters, Shaina. Is that momentum good on the fundamentals for this counter?
I would say that it is good. I think overall sector is doing well. Order book position is picking up for them. They have got good products, good orders. So I would say continue to hold at current levels.
The next one is coming in on Tata Technologies. Our viewer wants to know the target price for this one. What the viewer is saying is that 1 minute chart gap is going to fill off 30th March. I don't understand as to what he said. Between 509 to 516. I am not understanding this. Kush, are you? And he wants to know the target price for this one.
Is there a buying price mentioned in that?
Not really.
Okay, so first thing, everyone can have their own preference and everyone can analyze the way they want. 1 minute chart is just way too small a time frame. There is far too much noise. Even when I have to do intraday, I go 30 minutes, maybe 15. To some it might seem a lot, but otherwise there's far too much noise, in the sense there's far too much volatility, right? So I personally don't recommend that, but like I said, to each their own. On the whole, the structure is not very positive for Tata Tech. I know there is a gap. In fact, on the daily charts also there is at about 550 odd levels. If you've bought in, that gap support should act as your stop loss at 550.
Got your view, Kush. Let's take the next question now. This one, it's on Thangamayal question coming for you again. It's a slightly more longer term 1 to 2 year view that Gautam wants, but is it a good time to enter?
Yeah, I think I know why Gautam is asking this, because this is one stock absolutely in this space that time and again, even when it wasn't one of the 4 options of KBC kind of questions, ये मैंने add करके बोला था buy करिए. So it's had a good performance. It's had a good run even now. Again, I didn't probably hit the buy price, but it's still a good hold right now.
He wants to enter the stock now.
Oh, you want to enter right now? Maybe you could enter partially now, and if there's a dip that comes about, then maybe enter again. Only hitch there is that the stock has a tendency of going in a long consolidation phase and then giving you that big breakout again. So right now it is in that consolidation phase. Maybe you could enter, but in a staggered manner.
Interesting. 6 months, it's given returns of 103% in these markets. Very interesting. I think we've got our next caller. Ravi is calling us from Hyderabad. Ravi, very good morning to you. What's your query about?
Yeah, very good morning. I have query on KSH International. I'm holding 780 shares. I bought at the time of IPO at 384. My time horizon is next 6 months. Could you tell me what to do with the stock? Shall I hold or shall I sell it?
Okay. Got your question, Ravi. Kush, your view on the charts for this one?
So first up, very limited data. From whatever there is, the stock's in a very, very healthy uptrend. Especially in a market like this, it's not seen any kind of correction. I would suggest a hold, and I would give a stop loss, or rather a trailing stop loss in his case, at 455, 460, that zone. So continue to hold. In a market like this, if the stock is holding around, there is strength.
Got that view, Kush, but let's go across, take the next query yet again now. This one's from Ansh from Australia, and he wants to know about Century Plyboards. Now he's holding 200 shares at 766, Kush, and he wants a very short-term view. Should he continue to hold?
Yeah, for his buying price, he can continue to hold. The stock's consolidating, not really going anywhere. In fact, there have been days when it's seen a massive sell-off on the back of very heavy volumes. So that doesn't really augur well for the stock. So my suggestion, yes, you can continue to hold 200 moving average around the 760, 61 mark. That's close to your buying price. Maybe you want to exit at around that level. In any case, the stop loss for this one, 720, 715, that zone.
Okay, the next one is on Gadgil. Chandrasekhar from Bengaluru is holding 144 shares at the price of 330. The stock is currently trading at 255. Wants to know whether to hold or exit from a long-term perspective. China, I think a lot of people, had seen the momentum in the stock and bought at the, peak levels, and from that, the stock has corrected a lot, is what we've seen. Your view on Gadgil from a long-term perspective, whether you can continue to hold or not?
Well, it's very expensive stock, and they are growing through M&A activity. So it puts it in the slightly higher risk category. But I think as of now, you could continue to hold. You could keep a stop loss close to about maybe 240 type of levels. I think that would be slightly safer. But you could continue to hold.
Continue to hold on Gadgil as well, and I don't want to try Mahima if she has a view on the name of the company. But Shaina, sticking with you for HAL, Coach gave a view on the stock, but Mayur actually sent a very interesting query. He holds shares at 1,300 rupees per share. And I'm really curious when he would have bought it, because he wants to a very long term, a 10 to 15 year view on this counter. He's saying, considering the government's focus and HAL's monopoly, if he should continue to hold, he's already sitting on gains of 3 lakh rupees. But China, the lingering concerns of engines from GE, and that has been a big concern. 8 times of revenue as the order book. Is there a sideways momentum? Should he continue to hold at the buying price? What would be your view?
See, I would believe that it is better to book 50% of the profits of HAL and shift it to some other defense stock as of now. The main reason being that, first of all, now it's no longer going to be a monopoly. There are other sectors, including Adani, which is getting into the defense sector, into this space. So over the longer term, I think you have to keep reviewing the stock. Two is, I think they are having problems in their Tejas. So to that extent, I think the export market, the growth that we were factoring in for the valuations to actually improve and go ahead is actually now a bit subdued. I would believe there are other defense stocks which he can actually shift some of his money to, which also likely to do well. So I would say shift even something like a BL, which is in a similar category, which continues to perform better. So I would say book half the profits.
Okay, all right. The next one is coming in on some of the auto names, in fact, and this is for you, Kush. Our viewer is asking if this is the right time to make an entry into any of these counters. JBM Auto is one, Electra Green Tech is one, and Ather is one. Wants to know that which of these is, looks good to make an entry right now from a slightly long-term perspective.
A very clear standout winner for me is Ather Energy in this space. I've already shared my views on Ola, so I won't repeat those.
Yeah.
But Ather Energy has had, as opposed to Ola since listing, if you...
Electra Green Tech.
Oh, Electra Green, my bad.
Yes.
Oh, my bad. I was talking about Ola, my bad on that. So I'll come back on Electra Green Tech. But Ather Energy very clearly stands out. It's had a good run, consolidation phase, breaking higher from those resistance levels of about 750 or so. So if you want from a medium to a long-term perspective, I think you should bet on Ather Energy. That resistance zone will now act as support. So 750, 765, that is your stop loss. Now, as far as Ola Electric goes, it's seen a sell-off, recovery underway, but I don't typically like recovery candidates unless there are some key resistance levels taken out. JBM Auto, as we said, mildly positive view. But if you have to pick just one, let it be Ather Energy.
You're talking about Electra, right? I think because you said Ola again. That's why I know the name is very catchy.
Yeah, so I am looking at the
Electra chart.
Electra Green Tech chart, my bad. But yeah, again, though the preference still remains Ather, though the verdict is clear.
Right. Okay. Well, that's the view coming in on a clutch of EV plays in that sense. And for Ather, now the number 3 player in the EV two-wheeler space for FY26 has been a stellar outperformer in that sense, and the stock price reflecting that as well. Believe it or not, IPO price was 315 and was down on the first day of listing by almost 9%. So it tells you the perspective of just 1 year. So completing 1 year of listing in April and May this year. Godavari Power and Ispat is the other question which we are also taking on. Chandrasekhar holds 13,000 shares of the counter, not talking about his buying price here, but any view that you might have, Shine, on Godavari Power? What should Chandrasekhar do?
Yeah, I would say that you continue to hold it as of now. It's starting to pick up momentum. I think the overall power sector is likely to do better in the current year over last year. So you hold it at current levels.
Okay, all right. The next one I think is coming in on South Indian Bank. Lavish from Indore is asking this question. He's got 800 shares at the levels of 41 rupees. Wants to know what should he do next from a short-term perspective. Kush, you have me on the charts for this one.
Yeah, you can continue to hold. While there has been selling pressure, I think the recovery is fairly encouraging. Again, it's not a typical breakout and breakaway candidate, and some profit booking was par for the course given how it had performed last year. But yeah, you can continue to hold. I would suggest a stop loss near the 35 mark, and on the upside there could be levels of about 42 and 47 that could come into play.
Got your view, Kush. Let's go across to our next query from Chennai. Sindhu is dialing in for a stock query. Sindhu, good morning. Welcome to the show. What's your query?
Yeah, good morning, sir. Sir, I have bought 5,000 shares of Suzlon Energy at the price of 65 rupees.
Okay.
Can I hold it, or what should I have to do for further?
And is this a long-term bet, Sindhu, or a short-term one?
Maybe long-term.
Long term, okay, got it. Shaina, would you? So it's of course, she's sitting on a loss of almost 1 lakh rupees as Sindhu. Would you recommend her to continue to hold her existing shares, and is there a good time also to average down at this point of time?
No, I wouldn't suggest averaging. It's a risky stock. At the same time, the growth remains strong. She's already making so much loss, so I think giving a stop loss at current levels makes little sense. But still, let me give it. Keep a stop loss of 39. and you hold, and I would say at least at any bounce, exit at least 50% of your position. And I would believe the growth is good, but the stock has given such a huge rally over the last 2-3 years that it is now in a corrective phase.
Okay, all right. The next one is coming in on Dynamatic Technologies. Srikar from Hyderabad is bought at the levels of 8976 and says that he's bought this during recent fall. Wants to know if he should add more at the current levels or not. The stock is up 3% today. Shaina, any view on this one?
Not really. So I will pass it. It's in compressor and pumps. So the overall sector is likely to do better. So without giving too much of information, because I don't have it, I would still say continue to hold.
What's your view on the charts?
Oh, you should continue to hold. First up, kudos on buying, at the dip. It's almost practically the low that it made. So brilliant buy. I would suggest continue to hold. The stock has been a multi-bagger over the last few years, and it's also seeing momentum, in this kind of, a market also. So yes, continue to hold. Stop losses near the 95-9600 zone. On the way up, about 11,300, 12,200 very much on the card. So continue to hold.
Got that view, Kush. The next question coming in now, it's on BSE actually, and Shaina, you spoke about when the NSE listing comes. Of course, it'll be an interesting one, and most certainly yes. But on BSE, Soumya from Bengaluru actually is asking, what should she do now with this counter? How are you viewing the space?
See, these are sectors, these are stocks, and which you hold for 10 years, right? And it continues to grow. Through the ups and downs in terms of all the government policies, it has continued to show a decent, good performance. So I would continue to hold. I wouldn't say trade in these stocks, you keep it part of your long-term portfolio and hold it for the long term.
Okay. The next one is on Piramal Pharma. Akshun wants a short-term view on this one. Kush, your view on the charts for this one. He's not mentioned whether he wants to take an entry or he's holding, but overall view?
Yeah, not very constructive. One, because it's been seeing a massive fall. The recovery also is not very meaningful, not on the back of good volumes. And more importantly, healthcare pharma was one space which was actually doing well in this fall, along with metals, and this stock really hasn't participated. So I wouldn't really buy into something that is still depicting this kind of weakness.
Got your view, Kush. But viewers as well as Shaina and Kush, it's now time for the second round of the rapid fire in this edition of Ask Profit. The first question coming is from Nagaraj from Hubli. He holds RVNL at 28 rupees and he's holding roughly 12,000 shares. So he's definitely in stellar gains, up 10x on investment. Shaina, should he continue to hold?
Yeah, of course. When you're making so much money, it's better to continue to hold because stop loss, but hold.
Correct.
Okay. The next one is on PG Electroplast. Arun wants to know the long-term target for this one. He's got 200 shares at the levels of 522. Shaina, your view on this one?
I would say hold. I would say you could look at something like maybe 490, but not in the short term because they're having problems with LPG. So I would say it will take at least 6 months for you to get a return on this stock, but you could hold. It's a decent stock.
Okay.
Symphony is the other one. A summer play bought at 1300 by Balaji. Shaina, any view?
I will pass this.
Any view, Kush? Because 1300 is bought, stocks trading at 748 and not too much in the fundamentals right now.
True, and markets are smart. They played these themes way ahead, so you might not see that kind of a move. This one's been a rank underperformer. The actual honest view on this one is an exit.
Okay, Samman Capital bought at the levels of 145. From a near-term perspective, what's the view on the charts? Manoj is asking. Kush, your view?
Yeah, you should continue to hold. There are some resistances around this zone, so might consolidate for some time, but a breakout could take it to 157, 165 also. Stop loss at the 143 mark.
Sundar from Kochi is asking if there's a good chance for ITC to go back to 400. Shaina, is that possible?
I would say 430 is more likely. 400, it's a long term.
I think you mean 330.
330, right?
All right.
Sorry, 330. Yeah. I'm so sorry. Yeah, 330.
Sundar will be very happy with that.
Okay, the next one is on... Got it. No, the next one is on Bellrise Industries. Aswini from Chennai has bought 1600 shares at the levels of 177. From a short-term perspective, your view on the charts, enough data?
Absolutely. Continue to hold. Stop loss at about 195, 190 zone.
BHEL bought at 275. Shaina by Partha. What should he do for the next 1 year?
I would say it's a hold.
Okay, Birla Soft, 200 shares bought at the levels of 450, holding since the past 5 years. Shall I exit is the question that Srikanth has. Shaina, your view?
Here also it's a hold. I think this overall sector is doing better, and Birla Soft should give you little decent returns from here.
NTPC bought at 361. Kush by a viewer. He's asking if he should move out and book the profit now.
Very good. Yes, you should.
Okay, the next one is on BEL. 400 shares bought at the levels of 200 rupees. Continue to hold, Kush?
200.
200 is what he's retired.
No, continue to hold. BEL is one of the
200,
preferred
yes.
picks in this space. Continue to hold. Positional stop around 400.
The next question coming in is on Varun Beverages bought at 424. What should Mahesh do for the short term, Kush?
Yeah, I'd say exit.
The next one is on Bajaj Housing Finance. What's the long-term targets that you can expect from this one, Shahina?
I would say about 100. If you're holding it for the really long term, you could look at about 100, 110. But in the shorter term, it will consolidate. It's expensive.
SJVN bought by Pratham at 102. Shaina, what should he do with his 400 shares now?
Yeah, he should hold. He should hold his stock. I think he should see about a 10% return over the next 6 months from here.
Coal India bought at the levels of 374. 1,338 shares is what Akshay is holding. Wants to know if he can go ahead and book profit at the current levels or wait for some time. Kush, your view?
Book partially, hold the rest with a stop loss at 435, 440 zone.
HDFC Bank, Shaina, would you recommend for the next 1 year? Is what our viewer is asking.
Yes, I think you should be buying it if you have a 1 to 3 year time horizon.
Got it. Well, that's the end of the second round of the rapid fire as well as this edition of Fast Profit. But Kush as well as Shaina, thanks so much for helping us solve all these queries. Shaina, I think we should have you here also in the studio, and I think pack the Thursday up in the studio as well. But it's
absolutely. We would love that.
We would love that. But that's all the time on this edition. Thanks to both of you for helping us solve the 60 queries we have in the last 1 hour. But out of time, KYC comes up next. Thanks so much for watching.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs, and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
To understand the Tamil Nadu twist, join me in the midst of people, language and politics. Vanakkam Tamil Nadu, here we come.
The stories that
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit, an interesting company I have got for you, but I'm going to give you some hints and of course it's Kasakai viewers, that's what it is, and pardon my Marathi for that, but it's an interesting company coming in. It's a part of PN Gadgil Group's diamond business. That's the first hint coming in. PN Gadgil, we already know it's a listed player, but what else is there about its arm? The stock just listed. It's just been a month, March 4th, 2026, the stock has been listed, and let's get in more details about it. What the stock has done, it's largely flat. Remember, March was a really difficult month. Company is able to hold itself here, and interestingly, also one important takeaway for this company is that the company delivered a very strong Q4 operational update. So I've given you the hint already. One more hint I'd like to give you. This company is having 3 listed plays, including the holding company, or you could say the main company for the focus. That's of course PN Gadgil. But company कौन सी है जो PN Gadgil के बारे में बात कर रहे हैं, जो अभी लिस्ट हुई है? The company in focus is their diamond jewelry business. PNGS, PN Gadgil and Sons, Reva Diamond Jewelry. This is the company which we will talk about, and this was recently listed, and it's very much interesting, especially because we have seen the operational updates coming in. ये धंधा सिर्फ डायमंड के लिए है, इनकी गोल्ड ज्वेलरी की बिजनेस अलग है. Just to put that in perspective. But why are we calling this company right now? What's the use of getting this company in KYC? The first one is definitely going to be, will we see a Q4 repeat in terms of Q1 growth, especially in the diamond front? Remember, there was a festive season of Gudi Padwa and also the Valentine's Day. Growth and expansion plans, especially in Maharashtra, and the expansion plans in other cities as well. Remember, this group is largely focused from Maharashtra. Pune-based company is. The demand trends and the volume growth outlook, especially for the overall diamond business, and of course global prices have seen a correction when you compare that with the lab grown space. But remember, company lab grown diamonds में अभी तक आई नहीं है. क्या पता future में आ जाए. Companies foray into this lab grown diamond space. Will it be there, or company will still stick to the natural diamonds? The global pricing trends amongst the diamonds, and is there any pricing pressure coming in because our lifestyle habits are changing? Lab grown diamonds are becoming a part of our life. Is there any pressure, or is the company going to evolve? And what is the youth buying in terms of the diamond jewelry? Is it studded? Is it the lab grown? How is actually things moving around? And we'll understand that with Amit Modak, the whole-time director and CEO at PNGS Reva Diamond, where Amit ji will explain us what the business is all about and what's the growth outlook going ahead as well. So this is the entire picture of PNGS Reva Diamond. But dhanda kya hai? Let's understand about that, about the company, what are the origins looking like, and of course why the street might be more bullish on it. There's an interesting thesis I have put out for you, but you need to wait for it. The specialized branded exclusive retailer for diamond jewelry. अपने ही brand में वो बेचते हैं. That's something which you should know about. Apart from that, it's from the part of PN Gadgil Sons, group ecosystem. That's one of the most important thing. इनके खुद के दुकान के अंदर में ही diamond jewelry भी बिकवाली होती है. Now they operate in shop mode under this P&G Gadgil brand. So if you are entering the showroom, you will find definitely the diamond sector or the segment as well. The company does not engage in any kind of trading. An interesting piece about this business which I read about it. So this is something which we'll definitely understand in our financial numbers. The numbers were really strong. Of course, two important reasons for it. But will this continue in the first quarter, or is there any seasonality at play here for a diamond company? That's what we'll talk about. Remember, the listed plays in the diamond are still very few. Promoters recently started acquiring shares from the open market also, and that's what took my interest also in this counter. लेकिन और क्या खास है? Let's have a look about it. But before that, you need to learn the abbreviations. See, what is this abbreviations in the jewelry industry? The first one, धीरे से समझिएगा, exclusive business outlets. When we talk about EBOs, अपने खुद के showroom रहते हैं, that's called EBOs. COC, what does that mean? COCO, company owns it and company operates it. So this is also very much important, and this factors is there for this company. And SIS, this is the third abbreviation which you should know, is shop in shop. बड़े main shop में उनके अलग shop भी रहती है. So now the company is going for their COCO model. That's called the COCO model. I'll keep that in perspective. But ये तीन abbreviations note करके रखिए. This will be helpful across our discussion. The company is currently operating around 36 locations. That's pretty much interesting. But remember, the concentration is mainly there in Maharashtra, and now it's trying to go to other cities as well. And that is the story being played in their parent company also. A regional player going to become a pan-India player. Now, of course, the transitioning is happening in the COCO-led store expansion model, which will drive the scalable growth as well. So, of course, we are still early and it's a small cap. And that is what we are known for in KYC, to get you companies where alpha can be made in the long term. So why the stock may shine more? This has 190 years legacy of P&G Gadgil and Sons Group. So this is a pretty old jewelry brand, and they have big takers in Maharashtra and other nearby states as well. There's a reduction in working capital days which happened. Of course, there was an IPO here, so the proceeds were being used, and now we'll see how much more of that is being used. The first operational update has been strong, so let's figure out whether this trend will continue or not, or is there any seasonality or lumpiness at play. And I did the valuation checks also. Peers के साथ मैंने value check की, तो यहाँ पे attractive रहा, लेकिन वो कौन से peers हैं और क्या valuations है वो आपको मैं बाद में दिखाने वाला हूँ. So these are the key reasons why the stock may shine more. But you must be understanding why the ratings we need to put it out. But before that, let me explain you what are the key ratings which you should know when we get a company in KYC. These are the initial numbers we talk about: income statement, balance sheet, cash flow. But over here I have taken a little different twist. I haven't taken the return ratios, I have taken the operational update, because that has been really strong. So we need to figure out how does this business work out. Shareholding street kits, if company को एक महीना हुआ है, so we don't have that much data, but nevertheless we'll give you the entire picture about it and the return ratios as well. Actually, this is the valuation return ratios I'm talking about, where I'll compare this company with, of course, the size of its own size. We could say something like a Renesas Global or even a Goldium International, जो Origem के lab brands जो है diamond की वो भी बेचते. So definitely we'll have only diamond only players, and there's also a Bluestone which is listed. But nevertheless, the size is very big and it's not profitable. And outlook, of course, the expansion plan. So these are the important rating parameters where we will judge our company in KYC. The first one, let's pull out the income statement. Let's see what's happening here. Revenue is decent. In 2 years CAGR, the numbers which we saw in RHP, that's what we have taken last 2 years CAGR numbers. The EBITDA has also been a decent growth coming in. Just look at the YOY growth, then you will understand the 2 year CAGR of course is in single digit. This is the kind of a business model which is there. We need to figure and get some more time into when we judge the income statement. But let's see the other factors in as well. The net profit has done well, and there's a good up move coming in, and this is happening for each year by year, the growth coming in. So of course we will be looking out for the Q4 numbers in financials in coming days as well. But let's look at the balance sheet. Let's see, is there any big change here? And no, it isn't there. It's of course the equity value has been decent. It's of course debt-free company. They have the parentage is there. So what happens is the borrowing cost, even if they take, will be at least on a lower margins levels. And largely there is a working capital at play as well. But net it is still decent. Look at the cash balances also. It's nothing much to be concerned about. We need to give it more time to understand this company because there was a restructuring in this, and then the company was taken out from the core business and listed separately as well. So it's a neutral rating when it comes to the balance sheet as well. We spoke about the income statement, we spoke about the balance sheet, but let's talk about the cash flows. Have they improved? And we just compared that to last 2 odd years. But let's see how things are there. Overall operations or cash flow operations has been decent. FY24 there was a slight dip, but then it's coming back. The operation cash flow to the EBITDA is also pretty much decent. And look at the net cash flows, that's also doing really well, but we need to give in more time about it. So still now I've given this a neutral rating as well. So we did income statement, we did balance sheet, we did cash flows, and largely all three have been neutral. Let's see the operational update, and that is where I feel the alpha has come in. 139% year-on-year growth coming in. 138 crores worth of revenue has been there. But remember, there is an element to it. Let's see the other portion of it, how the Q4 revenue has gone, and this is excluding the gold sales. Still, the revenue has doubled. So you can see there is a good, strong operational momentum in this counter. But हम बात कर रहे हैं diamond jewelry company के, तो ये gold sales कहाँ से आ गया? You must be wondering. I'll simplify it for you, don't worry. This entire gold sales is related to the gold sold in exchange of the diamond jewelry. बहुत लोग gold अपने देते हैं और diamond jewelry लेते हैं. That is why this number is there. But remember, this is our job to simplify it for you so that you understand the key metrics and make informed decisions about the company. But net outlook sahi hai, and we have given a strong thumbs up for it. But now let's move on and talk about the shareholding. It's decently capitalized, of promoters having 60% on stake. Remember, it's the same promoter family having that stake in PN Gadgil and Sons. That's the listed company. There is a good absorption by FIs, DIs. So nothing much alarming here. It's a decent setup, and we just have 1 quarter's update because company abhi to list hui hai. Let's talk about street cred, and of course let's see how the prices have moved. It's just been 1 month. It was of course coming in the 4th March. The listing was there. From the IPO price till now, I feel it's largely flattish. It's down 3%, and the listing also we talk about it was at a slight discount. And because of that discounting also, we see it's still flat. So imagine the March month's full madness which was there in the small cap space. The company was able to absorb it, and it was able to absorb it because of good flows coming in from HNIs and promoters as well. So it's a neutral rating when it comes to the street cred as well. But something which has very much important is the valuations front. I've taken the 12-month PE valuations, and इनके size वाले companies को मैंने लाया है आपके सामने. Goldium is there definitely in your lab grown and diamond segment, but the valuations are slight high, 29 times. But the good comparison is with Renesas Global. They are into B2B jewelry also in diamonds, but now they are also moving towards the specialty segment, and both of these companies valuations are pretty much attractive. This is 14 times, this is 15 times. So there is alpha in both of these companies, and of course we will do some detailed research on Renesas Global, but PNG Reva also stands good at this current valuation level. So I'll give a very strong thumbs up when it comes to the valuations for the company as well. And the last one, but the most important one, is the outlook. Have a look. They're going to roll out 15 COCO or COCO stores, as you call it, in the next 24 months. That is where the expansion plans start coming in. One is already announced. We talk about the IPO proceeds. There are 3 reasons: store capex, inventory, and brand building. So we are going to see a lot of announcement in the jewelry segment as well. The store rollout will be strategic. It will be executed in Maharashtra first because of course they have the biggest coverage here, and then they will go pan-India for this. So it will definitely take some time, but nevertheless they are targeting 15 EBOs. EBOs मतलब exclusive business outlets. So इनके खुद के ब्रांड रहेंगे डायमंड ज्वेलरी के ही, ना कि उनके बड़े जो ब्रांड फ्लैगशिप है उसके साथ. So definitely the outlook is very strong when it comes to PNGS Reva Diamond. But let's revise all the ratings. क्या rating किस में दिया है, क्यों दिया है? Let's revise it so that it's easier for you. and we see largely neutral rating coming in when it comes to the numbers, but operational update is something which stood out for me in this analysis. And if you look at the shareholding and the street cred, it is largely neutral. We need to give in more time. कंपनी को सिर्फ 1 महीना ही हुआ है लिस्टिंग के, और रिटर्न रेशियोज की बात करें और द वैल्यूएशंस, दैट इज शोइंग गुड कंफर्ट, एंड द आउटलुक, that is where some good momentum can be made from the current levels as well. But to decode that, we'll definitely talk with the management. And the higher side, I've given this a final rating of 5.5. That's the number I've given. It's slightly on the higher side. But to get things in perspective, especially on the Q4 updates, that's the important update which the street is talking about. A lot of HNI, retail and even fund managers write to me to find these companies and figure out if there is any alpha or not. Joining us, of course, would be Amit Modak. He's the whole-time director and the CEO at PNG's Reva Diamond Jewelry. Amit ji, good afternoon. It's always a pleasure to have you. And of course, the Q4 update was very strong. There was, of course, a seasonal festive impact as well. Could you just explain us what led to the growth in this fourth quarter for your company?
Yes, it is Q over Q, great growth is there. And in the diamond jewelry segment or the studded jewelry segment, generally Q3 and Q4 are the strong quarters as compared to Q1 and Q2. Q1, Q2 gives around 35% of the top line, and Q3, Q4 gives around 65% of the top line. We always are saying for last 2 years with many people that we are focusing on the diamond segment, because that diamond segment, which earlier was growing between 6 to 8% annually, now it is growing around 8 to 12% annually. So there is a smart inclination of the customers towards the diamond jewelry, and to catch that inclination towards the diamond jewelry, we have started this branding separately, carved out that company, given the brand to the people for the choice, because nowadays people are more inclined towards the brand rather than some house mark, just family jeweler kind of house mark. They prefer the brand mark on their product.
Right. So brand is something which we talk about, and of course PN Gadgil Sons brand is strong. But Amit ji, I need to understand, so there will be higher marketing expenses to come. Your Q1 and Q2 are generally not that big. So in the next quarter, can we expect some suppression in the margins, because your expansion will definitely be coming from the IPO proceeds as well. But अगर आपका खर्चा बढ़ जाता है मार्केटिंग का, तो थोड़ा मार्जिन में प्रेशर आ सकता है?
मार्जिन परसेंटेज वाइज प्रेशर अलग चीज है, एब्सोल्यूट रूपी अलग चीज है. मेरे लिए एब्सोल्यूट रूपी कितने में एडिशनल बनाता हूँ, दैट मेक्स मोर सेंस रादर देन जस्ट परसेंटेज. मेरा टॉप लाइन गिर गया, परसेंटेज ऑफ मार्जिन बढ़ गया, तो उससे कोई मीनिंग नहीं रहता है. टॉप लाइन बढ़ना चाहिए. टॉप लाइन बढ़ेगा तो बिजनेस अपने हाथ में आता है. आवर एक्सपेंशन इज इन ट्रैक, ऐसा उसका मायने रखता है. एंड मोर ओवर आवर दिस रेवा डायमंड स्टोरी इज समथिंग यूनिक स्टोरी where 34 SIs are already working. One SIs recently started, otherwise 33 SIs are there, earlier established. आप अगर restated देखेंगे, if you see the restated financial of our company, which are for FY25 given in the RHP, DRHP, against that, if you see our growth and all these things, this will be higher than what we have made earlier period. मतलब in 23-24 to 24-25, we have gone up by around 20-25%. Now we are growing at 33%. So whatever that SSG is there, that is more important, because that is also going to bring in profits. Not only this new upcoming EBOs are going to make the profit. So it's a vanilla model where SIs are also making a good size of profit. New EBOs are coming, which will start making profit, but their gestation period is always there. So first 8 to 12 months, it may be lull, and marketing cost will be there, but it will get absorbed from the increasing profit of the SIs and increasing business of SIs. And over a period, that is a say 24 to 30 months period, because we are scaling within 24 to 30 months in future. hereinafter. So during that period, those EBOs will also start contributing, SISR as it is contributing, and it will make a good sense for the good earning in the future.
Right. Just to put that in perspective, I have explained our audience regarding SIS. Dukaan ke andar dukaan, EBO is an exclusive dukaan, and COCO is also there, which is company owned, company operated. Just wanted to understand the business economics about it. कि कितना लागत लगता है, कितने साल का payback period होता है. If you could just explain that to our audience, then it becomes very informed to actually judge your business growth, and SSG growth के भी data आप थोड़े महीनों में लाने लगेंगे because it's not SIS anymore. So how will that play out? Like what's the SIS target or the SIS growth target, SSG growth target we talk about for next year? So these two questions we need your answer. First the model समझाइए, उसके बाद बताइए कि SSG growth का क्या target है.
SSG growth, we are expecting 25 to 30% bare minimum in coming days. So that will come from the SIS, and this COCO store or the EBOs are getting set up. So first 3 years it requires to achieve that matured level. Means I am not talking about the profitability, I am saying matured level, which comes around 1.25 to 1.5 kind of the stock turn. Because in diamond jewelry or studded jewelry, stock turns are lower as compared to the plain gold jewelry. Plain gold jewelry where stock turns are between 3 to 4 or something more than 4 also. But in diamond jewelry, stock turns are generally comes from 0.75 and up to 1.5 on a matured basis. Very rarely it comes to the 2 to 2.5 where high matured store or long standing stores are there. That stock turn may be 2 to 2.5. So that stock turn, always achieving that stock turn is more important, because that stock turn only gives you good EBITDA, good cash profit, and good PAT level profits also. In this SIS model, we are paying commission to the franchisee. Presently, all franchises are with parent company or the flagship company, that is a PN Gadgil and Sons. Wherever they have got their shop, we have got shopping shop with them. So there is no cost for the establishment, only cost for the inventory holding and only cost for the employees. Rest of the things are taken care by the franchisee, that is a PN Gadgil Sons at present. And so for them, it's a commission which they receive on the sale which is happening within their premises in the SIS. Where on the diamond value certain commission is paid, making charges certain commission is paid. So we are saving on that cost, fixed cost, but vis-a-vis we are paying them commission. But give commission is more attractive proposition for us as far as earnings are concerned. And over a period when we shift to EBO, we will save that commission, but we will have that fixed cost. So it's a, as I said, it's both where it's a vanilla. In EBO, commission is not there, fixed cost is there. In SIS, commission is there, fixed cost is not there. So it's going to make a very good proposition to keep all the time company in a profit making mode, because those 34 SIS are long standing, old standing EBOs. They have got footfall, they have got generic growth, and they have got customer base. So whatever EBOs will add, that will be the additional customer base.
So that's a very detailed explanation which you have given, and thank you very much, Amit ji, for that important update. But you have also explained us the seasonality impact of it. But I just want to understand: is there any kind of chance that company moves into the lab-grown diamond space as well? Because generally companies have both these options, and you have separated yourself from your overall business setup. So it feels like the next step might be lab-grown diamonds, because that's also becoming a modern lifestyle trend everywhere.
Basically, we are not in pointers or solitaire. We are in designs and jewelry, where smaller diamonds are used, star millets are used, minus cent or 2 cent onward. And in lab grown and natural diamond, in that space, there is no much price difference. So at present, we are not at all thinking about to go for lab grown. On the other hand, lab grown has got no resale value vis-a-vis this natural diamond has got resale value, because we are giving them buyback policy and exchange policy, where in exchange we are exchanging at 100% value. And so there is a value retention for this natural diamond. nothing is permanent in this world. So what comes after, say 8 years, 10 years, 5 years, we cannot predict very much in advance. But at present, since we have got 190 plus years legacy, people coming to our brand or our location are generally preferring for the natural, preferring for the real and pure, that kind of the thing. So we are going to have that natural diamond as a prominent playing area.
Right, and Amitji, apart from that, what will be the expansion and the growth plans for your company, especially for Maharashtra? You have spoken that the focus would be there first to get in more exposure here, and then maybe go into other cities. And if yes, which geographies you are looking for expansion? And you can give us a 2 to 3 year kind of a pipeline or a strategic growth outlook on that.
Expansion, as we have mentioned already, that 15 EVOs will be there out of the DRHP proceeds. So those will come up in next 24 months. As you said, Maharashtra is a primary preference, but simultaneously these 15 will have 40% outside Maharashtra, 60% within Maharashtra. That is a present our allocation is there. And Maharashtra can start contributing at early stage. So profit margin will start flowing from these EVOs or COCOs out of 15 with 60% in Maharashtra. When it will be outside Maharashtra, there will be some little bit larger gestation period as compared to the Maharashtra stores. So it's a combination. Again, as I said, vanilla, 24 to 30 months gestation, 8 to 12 months gestation, and 34 existing SIs which are profit making. So all together, it will make a good picture for the company in the coming days.
Right, we have definitely spoke about the trends, the outlook, and also the overall growth plans. But a short query, Amitji, I'm sure there must have been some calculations for the management, because there are 3 business models at play. Each of them are having different margins. Any blended margin target maybe in the next 3 to 5 years you can expect for your company where it will become stabilized, because it's a very changing business model of yours. We just spoke about it and simplified for our audience. But Amitji, if you could just give us any blended target for the operational profit part, कि आखिर में margins 3 से 5 साल में क्या आने वाला है?
Operational profit means if you are talking about the gross profit or whether you are asking for the EBITDA level, that is two things, one thing.
Right.
That operational profit or the gross margins generally in this industry as such, those are somewhere between 30 to 40%. And at the EBITDA level, those depends on company to company to what extent it requires spending on creating awareness about the brand, creating confidence with the customer, because in diamond segment, the confidence is very much required because we are giving buyback or the exchange guarantee or the exchange confidence or the policies. Customer want to know whether he or she will come after 3 years, 5 years for exchange or the buyback, whether we will be there or not. For that, new brands require
Amitji, that's a good perspective you have given us about the company as well, and you've cleared a lot of doubts also, especially that the company is not foraying into lab-grown diamonds as of yet. Thank you very much, Amitji, for your time, giving an entire perspective about your company, the jewelry segment, and the growth plans ahead. So this is the company we're talking about, PNG's Reva Diamond Jewelry. And the company has stated that they're not entering the lab-grown diamond space, but they've given a consolidated plan for their expansion in Maharashtra and the other places as well. So important companies we are getting in, where there's a lot of interest in the retail, and we demystify it each time when it gets the companies in KYC. Stay tuned to NDTV Profit for further stories.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
To understand the Tamil Nadu
Concerns over ceasefire and oil volatility clouds the Lal Street, which is witnessing a cautious day of trade today after a bumper session yesterday. Nifty trades few points shy of 23,900, while SMIDs outperform the benchmarks. Metals shine, but banks under pressure today. Renewed Israeli strikes on Lebanon raise doubts about the durability of the fragile Middle East ceasefire. The Strait of Hormuz remains largely obstructed. Trump administration calls it unacceptable, while Iran resorts to sharper focus on non-dollar payments. More insights lined up on the show. Oil bounces back sharply after its steepest fall since 2020, with markets jittery as the Strait of Hormuz remains largely blocked. Israeli strikes have reopened supply fears, keeping crude near $97 a barrel, with tanker tariff still thin and the ceasefire looking fragile. The earnings season will kick off with TCS reporting Q4 results today. Modest growth, slight margin uptake and strong deal momentum on the cards. All eyes also on commentary on AI deflation. Voting is underway in the three states of Kerala, Assam and Puducherry, where NDA and India Alliance are locking horns for regime changes and powerful comebacks. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Podar and let's take a look at the market. And yes, after the stupendous rise in the markets yesterday, it is time to be cautious and be a little more consolidatory in mood today. So that's what the markets are really showing today. So Nifty 50 fails to really get closer to the 24,000 levels. There is a fair bit of resistance and even sell on gains seen in the market as soon as it crosses that 23,900 mark. So that's where the resistance is really coming in, but holding on with 0.5% loss when it comes to Nifty 50. When we take a look at the sectors which are really doing well today, it's the defense, metal, space, as well as energy, which are really gaining the most. So now remember that energy in terms of the kind of domestic momentum that is seen, and metals and defense because of the Middle East war. On the other hand, remember that banks, financial services, as well as oil and gas, these are the sectors which are the ones which are down and showing weakness in trade today. Also remember that banks risen quite a bit after the RBI's policy announcement yesterday, and today they are seeing profit booking. So the biggest drags also coming in are HDFC Bank, which really gained almost close to 6% in trade, while on the gaining side for Nifty 50 is from the metal pack Hindalco, NTPC, even TCS, which is going to kick off the earnings season today. Let's get chatting with Sonam Srivastav, who's the founder and CEO of Right Research, to get some sense of the market direction. Sonam, of course, volatility persists. In fact, yesterday's gain was a momentum build-up because of the ceasefire. But today, we are seeing again some bit of caution and jitteriness really creep into the markets. How are you sensing the flow, and how much of it is really dependent on even even crude movement?
No, definitely. I think yesterday we had this whole euphoric moment where we thought that the ceasefire has occurred, and you saw a massive movement across all indices. And today you're seeing a slightly risk of sort of a move where the sectors which didn't work yesterday, like metals, your defense, like you said, certain energy sectors are doing strongly. And the consumer sectors that worked yesterday and the banking, they are under pressure. So see, I'm not that worried about the market movement. I think the market breadth is still healthy right now. I think I see the sentiment not weakening today, but in fact having an uptick. And yeah, I think see, we have to look at the geopolitical moves. I think the escalation in Lebanon is worrying for the markets right now. But we have to look at the geopolitical moves. But I think the market breadth definitely is healthy today.
Market breadth is healthy, and the weakness is only cautionary. But how would you play the banking sector, Sonam? Because yesterday, after the policy announcement, there was a fair bit of gain in the space. And today, they are also dragging because of profit booking. And also, they are seen as the quasi-investment on the economy, a bet on the economy. So how would you really position yourself when it comes to the banking sector, and what are your views?
So I think banking definitely right now is one of the most healthiest sectors, right? And especially banking as well as NBFCs, even in this earnings season, we are expecting strong numbers coming out of the banking sector, right? So there are a lot of tailwinds, like you're going to see bank loan growth sort of grow at a rate of 5% QOQ. Deposits are also growing. And there are a lot of seasonal factors that are helping out there. You also see some headwinds from the NIMs sort of compressing. But, what I really believe is some of the large banks, right? Your ICICI, HDFC, Axis, they can be the core stable allocation for a lot of people in this volatile environment. So I would have a bias towards banking, and even if on the financial services, right? I like the capital market play, which has been very robust, and a certain set of NBFCs which are going to post good numbers, right? So, see, I think there will be volatility for sure, but I believe that the banking sector, with support of good earnings and good fundamentals, will be the stable core of people's portfolios in this season.
Yeah, but Sonam, also at this point, what should be the strategy? Should it be profit booking wherever you have, or more investments whenever you get an opportunity? And how much, what percentage should be in cash, especially for judicious, prudish, investors who are looking at their hard-earned savings to be put to work in the market?
Definitely. See, I think my investment strategy, or what I would recommend, definitely would be to look at taking risk in this environment. And you are sitting at almost a 10% correction in valuations. You have obviously there are risks with the geopolitics, but apart from that, you have a lot of strong tailwinds in certain sectors. We talked about banking. Look at autos, right? They're going to come up with great set of earnings. Financials are healthy. You're seeing some tailwinds in the consumer pack as well, right? Retail pack, I think metals are attractive. So, I would recommend that at such corrections, it is actually the best time to allocate instead of getting worried, right? There will be volatility, right? You saw a 3.5% move yesterday, and today you're seeing a 0.5% correction. I think there will be volatility, but I think it's one of the best times to allocate. But yeah, you have to be judicious about the global scenario and your risk profile on how you want to allocate. And yeah, see, it's as simple that at such correction, after such correction is when you see the strongest bounce back. But timing when the bounce back comes emphatically is difficult, right?
Right. You said consumer, Sonam, and a few other sectors you mentioned. What are safe bets in the market at lucrative valuations now across the board? That is the in-house view for you in terms of strategic investments at these levels.
So see, in our allocations, we are sort of biased right now towards a few, I would say, niche outperformers across sectors. So to name, for example, Motherson in the auto sector, or Khaitan, Radico Khaitan, right? Or Ahluwalia Contracts. These are certain niche outperformers across sectors that you would see might be attractive. And then I think right now your cyclical plays and growth plays, for example, Eicher Motors, NMDC, Vedanta, those are also strong growth engines. So you'll see my bias towards slightly automobile industrials, right? In this scenario, plus I think the financial services, your ICICI Bank, HDFC Bank, some of your FMCG giants like Nestle, Tata Consumer can be your core part of your portfolio, right?
Yes.
Yes.
All right. So, Sonam, a whole host of names, and especially from industrials and manufacturing, auto space and consumption. Those are the spaces you like, and you rattled off quite a few names also on that. Thanks, Sonam, for joining us with your views on the markets and some investment strategies and tips coming in for the investors. Thank you.
Thank you.
All right, amid the conflict, remember, Iran proposed a $1 per barrel transit toll through the Strait of Hormuz. It is emerging as a major risk for global energy markets, with over 20 million barrels per day of crude and petroleum products flowing through this particular route. In fact, my colleague Somit gets us all the details on the impact of this. So, Somit, this is the biggest talking point. And with this toll as additional amount also, the maths really changes. What is the insight on this?
Well, if you look at the quantity of oil that flows through the Strait of Hormuz, it's nearly 20.9 million barrels per day. Now, this is oil and petroleum products. Now, out of this, oil is just around 14.7 million barrels per day, while the remaining 6.2 is petroleum products like petrol, diesel and other products that move through the Strait of Hormuz. So assuming that the $1 per barrel fees that Iran is asking for is applied only on crude oil and not on products, and this is something that they're asking in Chinese yuan or in cryptocurrency. So that could earn Iran on a daily basis close to $14.7 million. Obviously, this amount is in dollars, but they are asking it in yuan or in cryptocurrency. And annually, this could roughly come to around $5.4 billion of an income that could come in for Iran. Now, we still do not know who will bear the impact of this. So, assuming the sellers bear the impact in the first case, then Saudi Arabia would see the biggest impact coming in, because they, the oil that flows to the Strait of Hormuz, they have the highest share at that side, around 37.3%. It could cost them around $5.5 million every day, and the annual cost could be close to $2 billion for Saudi Arabia. Followed by Iraq, UAE, for them it could cost anywhere between $718 to $1,200 million. And then there is Kuwait and Qatar, which also send oil via the Strait of Hormuz, and it could cost them anywhere between $227 to $530 million on a daily basis. Now, on the other hand, if the buyers are bearing the cost of this $1 per barrel extra charge that Iran is asking for, then China could get impacted the most, because the oil that flows through the Strait of Hormuz, China gets the most, 37.8%. Daily cost for them could be around $5.6 million, and the annual cost could be around $2 billion US for China. Followed by India. For India, it could cost close to $800 million on an annual basis, and the daily cost could be around 2.2. Apart from that, there is South Korea, Japan and other Asian countries which could see an impact of anywhere between 580 to 767 million US dollars. But apart from that, there is Europe and USA as well, which could get impacted. And for them, the annual cost could be anywhere between 146 to 183 billion US dollars.
All right, Soumit, thank you so much for getting us all those important details. And this math is going to be important. And especially the important, Soumit, over here is also of crypto that is likely to be used for this transaction. So Iran sanctions headache is really reshaping how it gets paid. So cut off from dollar trade and the global SWIFT system. And Tehran is exploring non-dollar settlements and even bearer instruments like cash or gold. But physical payments are really slow, opaque, as well as hard to scale, remember, turning every transaction into a costly workaround, not a solution. So we are joined by Ajit Khurana, who's the founder of Reflexical, for more insight on this. Ajit, thanks so much for joining us on NDTV Profit. Always a pleasure. And this is an interesting discussion and many actually, talking points regarding this. Let's first begin with what are your views on Iran asking for a crypto payment as a toll for crude passage through Strait of Hormuz?
That if they had not asked for this, what would they ask for? Like you rightly said, they could have asked for currency notes or gold. They could ask for Chinese yuan because they know that China will not sanction them. But other than that, what really was their choice? Because if they asked for any form of digital or banking payment, even after receiving it, their accounts could get blocked through universal, G20 and FATF and those sort of international conglomerate regulators. So I think there really wasn't a choice. But what is a little paradoxical, if I may point out, is that when you say cryptocurrency, which is a very large bucket, I'm sure they're not asking for Bitcoin, but stable coins, so that, the price can be pegged, and the price is pegged to the US dollar, which I find hilarious.
Oh, Ajit, this is a very important point that you mentioned. If it's not Bitcoin or even Ethereum or other such cryptocurrency, and it's going to be stable coin, it's quasi-dollar in itself. So do we now see it as only convenience, or as people were estimating, a challenge to dollar dominance as well?
So the interesting thing is that the challenge to dollar dominance coming from crypto has been recognized by the US dollar more than anybody, quite naturally because they have the most to lose. And as a result, most regulation coming out of the US is related to stablecoin. I do not know what Iran is asking for, but my assumption would be that they would not ask for a very volatile asset, which means anything other than stablecoin, because Bitcoin itself has moved 10% in the last 48 hours. So I don't know how that could be. So I think it will be a US-backed stable coin such as Tether, USDC and the like.
Right. And also, Ajit, what do you make of the usage of stable coin or cryptocurrency or digital currency, let's call it that, in this particular case, as the world is getting more and more fragmented and more difficult? How do you see the legitimacy of now the digital currency coming into play?
If you go back to, I wonder, centuries ago, where you would use goods as payment, one of the advantages, there were all disadvantages, but one of the advantages was that once you received the payment, you had received it. Today, if I send you a bank transfer and it is already in your account, but for a whole host of reasons, your bank account may be frozen or your assets might be taken away by a regulator, etc. So finality of settlement is a very desirable thing in payments. And other than bearer goods, it is only available digitally through digital assets such as crypto assets.
That's right. The convenience that digital assets really provide in a very chaotic world order, that is the biggest comfort coming in. But Ajit, we knew of this development in the digital revolution as well. But crypto went to a certain level and then has seen a downward movement as well. Do you think that countries like India will have to refocus their attention in a chaotic world on their crypto policy as well?
So India is one of around, I think, 85 countries where the central banker, RBI in our case, has taken a very positive view on this technology, but a negative view on the sector. So the way they are playing this is through a central bank digital currency or the digital rupee. So they are saying, we agree with your sentiment, but we still want to have 100% control. Now, whether that sentiment, which about 86 countries have taken around the world, prevails, or whether what now the US is taking, namely that stable coins are here to stay and it is better to regulate them, remains to be seen. Usually, my experience over 3 decades with emerging technologies in India is that India always initially misses the bus. is late to the party, but before the last bus departs, they jump on it, whether it was private TV channels, e-commerce, private airlines, social media, or whatever.
Right, but Ajit, the government has been particularly anti-cryptocurrency for a very long time. And despite having taxation policy on that, it has not been given a legitimacy. So that particular constraint is a very big policy shift that we are expecting from the government. But looking at the entire scheme of things, first also the legality of Iran asking for a toll, and then second, the mode in which they ask, and how is this going to really work out, and how will crypto really react to this? Putting all that into perspective, what will be your one consolidated thought on this?
I think that Iran has been very pragmatic. If they had said, give us Chinese yuan only, then what about those countries who do not have enough reserves of Chinese yuan? USDT, or rather stable coins, are very easy for anybody to buy in swap with any other currency. So I think it has been a very pragmatic decision. I'm just hearing this on news because I have no insight into this. I would say the finality as well as the ability to be digital makes the case for stable coins in this scenario.
Yes, and the government of India will have to also relook at their policy with the changing environment also. But Ajit, my final question, crypto has seen quite a dramatic turn of events in the last few years. With Donald Trump coming in, Bitcoin, along with the others like Ethereum and others, had risen to highest level, but they also fell as, Donald Trump really set aside his, focus from cryptocurrency. And after the breakup between Elon Musk as well as Donald Trump as well. So many things have really transpired. And Bitcoin, which is the standard yardstick by which we really price most of the cryptocurrencies, that has really lost a lot of ground, despite institutional money coming in. Putting all this into perspective and a new wave of legitimacy of cryptocurrency in the global trade, how do you see the price outlook going forward for crypto with this development?
We are no longer a very minor market cap because we have crossed $3 trillion, but we are still not comparable to a gold market cap or a stock market cap, etc. Like we are comparable to, let's say, an Apple or a Google market cap. In light of this, my feeling is that we are going to see a short-term scenario of wild swings. It used to be adoption, then the promise of utility, then the liquidity in the market, which would drive the crypto markets. But for the last year and a half, it has been one human being, the president of the US, and his actions that have caused the maximum impact on the crypto market. If that we move beyond that stage, I would start to expect that at around the $5 trillion market cap, of which around 2/3 is Bitcoin alone, but at around the $5 trillion market cap, we should see a growing up of this sector, and the wild volatility should reduce.
All right, so the stable coins could be giving a much more stable price movement after this development. Thank you so much, Ajit, for joining in with your perspective. Thank you so much. All right, let's focus on the earnings cycle, which really begins, and the stock which is really hitting the 5% almost gains is GM Breweries. The stock the company has just announced its results. Even though the net profit is down 10%, the stock is reacting positively on the basis of the profitability because the EBITDA margin and EBITDA levels have seen a good amount of momentum and a rise, and that's what is giving the comfort to this particular counter. Keep an eye out on earnings momentum as well, but let's focus on the tech sector. IT stocks in focus with budget modernization and also rising AI disruption risks cloud the growth visibility for the sector. Morgan Stanley's CIO survey really shows that global IT budgets staying steady but subdued. In fact, my colleague Jasmeet has been pouring in on all these discussions, gets us all the details on what's really ailing the tech sector when it comes to AI disruption. Tell us, Jasmeet.
Well, thank you for that. If you look at IT as a whole, it has been banging in trade today, and even yesterday did see a weak start. So here are the top 5 key reasons why overall IT is falling in trade. Firstly, the overall profit booking that we have seen. the IT has gained nearly 10% from March lows, and currently it has, even this month, it has gained a lot on the back of that positive Q4 earnings expectation. So we see some kind of profit booking coming in for the IT. The second reason would be the overall impact from the AI still continues. We have new Anthropic tool, Mythosis, which is impacting the overall IT pack, and there's a fear that the overall time-based billing will get reduced to output-based billing, which will indeed impact their margins and EPS. Now, in terms of other key factors, we also have Morgan Stanley's note, which speaks about budget modernization. Now, as we enter into FY27, we do see that the US and UK sets their budget for the year, and in this budget, we do see slight modernization. The budgets are stable, but not great. They have been 3 to 4% versus earlier above 4% the average. So we see slight weakness coming in there, and the modernization is happening in two sectors, that's BFSI and retail. So IT is majorly heavy BFSI focused players, so those players are seeing the pressure in the market as well. If we look at the other key reasons, the deal momentum still remains weak for the sector. The overall commentary also remains weak from the client side as well, though there is a good momentum of deal, but still there's slow movement in terms of that. So all in all, there are the few reasons why the IT is falling in today's trade.
All right, and the commentary coming in from TCS post its results is also going to be very valuable. Thanks, Jasmeet, for that. Straight to my colleague Varsha, who has a list of stocks to watch in trade today. Tell us, Varsha, what's on your list today from the stocks?
Yeah, let me start with KEC International, wherein the stock is buzzing. This is on the back of order win, though. They've secured new orders of rupees 2,500 crore, and this is across civil, transportation and cables and conductor business. On to the next stock which is in focus, if you could pull up that, is GTL Industries, wherein if you see the volumes are surging at 7x. Now this is because Abacus Asset Manager has bought 25 lakh shares of GTL Industries, and hence we are seeing that stock buzzing in trade today. Although they are expecting FY26 revenue of around 4,000 odd crores. Then you have Info Edge, wherein the stock is under pressure because of weak Q4 business update that the company has seen, where the billings growth, if you see, has seen a slowdown. The standalone billings in Q4 was up only 7.4% year on year. Full year FY26 billings were up 10%, and the recruitment solutions largest business grew 9.5% year on year, and the Jeevan Sathi grew almost 21% overall year on year, and hence because of the slowest growth, we are seeing this counter under pressure.
All right. Thank you so much, Varsha, for joining in with that list of stocks to watch today. Let's shift focus on AI disruption. And I caught up with Arundhati Bhattacharya, the chief of Salesforce in India, on what's the next wave in AI disruption. Take a listen.
I personally believe that a nation as large as ours, as populous as ours, we will not get the required level of service unless and until we use technology. And, the examples are all over the place. You look at PM Jan Dhan Yojana. Do you think we would have been able to do financial inclusion for a nation of 1.4 billion people without using technology? None of it would have happened. You look at UPI. Today, monthly we are using UPI for more than 500 crores of individual transactions. Now, those transactions were never routed through banks. They were actually being done in cash. Now, but because they were in cash, they were not empowering people for financial inclusion. Today, because they are flowing in through the banks and it's become so much easier to do them, the level of transactions has gone up, along with the fact that these people have now become eligible for being included in the formal financial system. So there is a formalization of economy that is currently going on, which was never possible without technology. Similarly, whether it be education, whether it be healthcare, in all of these areas, technology is very much required and AI is very much required. The very concept of a class of students of 35 following one single curricula, it's like, expecting them to be a marching band so that they are all putting their paces together. That's not how humans behave, or that's not how you take out the maximum potential out of out of individual human beings. You are bringing them all down to a lowest common denominator, not allowing the people who can really bloom to blossom.
Yes.
What AI will be able to do is bring in the hyper-personalization, bring in the insights from the data in order for us to ensure that people live up to potential.
That's right.
So to that extent, I don't have any doubts at all that AI is something that's going to enrich us, make us better, make our standards of living better. As respect of job losses, I think, there will be changes in the roles that we do. I'm not again saying that temporarily.
All right, Arundhati Bhattacharya on the AI disruption. With that, out of time on this edition of Markets at 12. Thanks so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
To understand the Tamil Nadu twist, join me in the midst of people, language and politics. Vanakkam Tamil Nadu. Here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Said. What's happening? How to
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me.
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Hiral Dadia, and Sharad Dubey, who's standing at the NDTV Profit market pit. Sharad, good afternoon. What are the cues that you're picking up right now? Because it's interesting to see how we opened up, then that mild recovery that did come in. But again, the question is how sustainable?
Exactly. Good afternoon, Hiral, for that. And yes, markets are in a range. We are looking for more new triggers to come as earnings season kicks in. Look at Nifty, 23,800. That's where the little bit of technical bounce has come. A slight recovery is being made, but expect the market to trade in a very narrow range unless something comes as a global announcement going ahead, or some announcement comes or the intervention from the government of India. And of course, we have seen a lot of those announcements. Nifty Bank, let's see what's happening here. The technical setup is a little bit of concern. It's on the downward here. There is no recovery at play. But remember, the larger bank, that's where the sell-off is happening, and that's where the Nifty banks is also under the pressure. But let's see the factors which should be on your radar, and the uncertainty which is there on the ceasefire has made all the global assets take a pause. And of course, yesterday we saw great up move coming in. But one good thing, Hiral, is the small mid-cap space. That is where the resilience is still continuing. Look at the broader markets. That's where the value buying still continues. That means there is good absorptions happening. Nifty's immediate support is 23,800, where the bounce happened. This is the daily support I'm talking about. And Nifty Bank, however, the weaker setup, and that 55,200, that is where the important level is there. If it comes down, we can see a little bit of more correction coming in. But of course, the star is the mid cap and the small cap indices. We should be focusing on that. I'm sure some stocks would be there in the watch list as well from there. But also moving on, they expect a range bound movement in the markets across the large cap players as well. And there is a slight recovery definitely there. The technical setup is still remaining bullish if you take it on a weekly chart basis for the markets, especially Nifty. TCS Q4 earnings will be coming post market hours. We'll be tracking that, and a little bit of profit booking is happening for the IT stocks as well. They were on the lows, but now mild recovery is definitely coming. But the biggest thing is the global risk of sentiment persisting. So this is where the markets are right now at 12 o'clock. But to give in more perspective, Samir Ora is also there, where he has given his important statement on the FIs, and because of the pressure in the rupee, why they are staying outside, and there are certain sectors where FIs might show interest. Do listen in.
The currency has been a big negative, and taxes have been a big negative. But let's say now taxes is there, but now over and above that, you pay taxes on rupee earnings, and then there is a loss on dollar. And for European investors, so I don't even go to Europe to meet, because the depreciation would be more than 25% or something in 2 years. I mean, how to start explaining? It's pretty bad. That part is bad. But life moves on. That is the only answer. And one day people will say it's overdone and from now on and stuff like that. And that is how we live day to day.
Okay, so that's the word coming in. In fact, the FIs have been buyers in the capital goods segment in FY26. All the other sectors is where they have sold. So that's where the FI interest is right now. But moving on, in terms of the watch list, you have IT counters which are seeing profit booking. What's not really working from them? That's what we're going to discuss along with TCS. The Q4 expectation is expected to be strong today. Post-market is when the company will be reporting numbers. So stay tuned to NDTV Profit to get an analysis. Hitachi Energy, JP Morgan has initiated an overweight, and this is not only for Hitachi Energy, but even GE Vernova as well as Siemens. Apart from that, Anthony Way, strong moves on the back of the partnership with JFE Engineering Corp. Strong volumes building up for a Misho in trade today. Defense companies like BEL, HAL all rallying in trade, and a sharp spike in terms of prices for ITI with heavy volumes is what you're seeing. Sterlite Tech as well, there is a brokerage who's positive on the company as well as the volumes are twice the 20-day average. The Q4 billing growth has slowed down and hence Naukri is under pressure. Your fertilizer stocks which are buzzing in trade on the back of the subsidy allocation, which is okay, but it's not as good as that it could offset the kind of impact it could see on the back of rising input costs. Ather, Ola, strong volumes, strong moves coming in on the EV play. Hindalco is also buzzing in trade in the last 5 trading sessions, and after the strong surge yesterday, you have L&T which is seeing profit booking. Nykaa on the back of an acquisition of majority stake in 82 Degree East. Now, what is this acquisition strategy for Nykaa? Bosch is also looking at restructuring, and JTL Industries, where Abacus has bought shares. Honasa on the back of a strong business update that is in focus. But let's go across to Sharad to take the rapid fire with Osho Krishnan.
Thanks a lot, Hiral, for that. Good afternoon, Osho. It's always a pleasure to have you. We'll start our rapid fire segment, and the stock in focus is ICICI Pro AMC. We have seen multiple broking houses getting bullish over the last 3 to 4 trading sessions for the AMC stocks. Is there a positional setup brewing here?
Very good afternoon, Sharad. Firstly, thank you for inviting me at the show. Well, yes, no doubt ICICI Prudential AMC is looking quite positive to me. There has been decent traction in recent period, and the counter has even surged above the zone of 3200 in today's session. So overall, technical structure is very positive. One should stay invested. There has been a breakout in the counter, and I'm eyeing for a target of nearly 3350 in a short-term period.
Right, that's the target coming in. But JP Morgan has also been bullish, Osho, on Hitachi Energy and Siemens Energy as well. How are the volumes looking like and the technical levels to watch out for?
Firstly, for Hitachi, this counter has outperformed the whole market nearly 50% in current calendar year, and the counter is still into a cycle of higher highs, higher lows. So definitely there is a very strong traction in the counter. I'm expecting that with the kind of breakout that we have seen in the counter, nearly next target or potential target is seen around the zone of 29,000 to 30,000 kind of a zone from short-term point of view. But one should always trail their profits in the counter. For Siemens Energy, again, this counter is also looking quite positive. There is a technical pullback that can be expected. 3,000 is the immediate resistance. Any breakout above this count, above 3,000, can provide a further pullback in the counter.
All right, another stock, Osho, is Antony Waste. Of course, the news flow was there in a previous trading session, but the stock is seeing a good buying even after that. Good time to book some profits in this counter?
Definitely. The counter has always seen a decent traction from lower zone, but the 200-day simple moving average is a kind of a hurdle zone for the counter. So the zone of nearly 540-45 is a very strong resistance level. So one should try to exit their profits or can trail their profits at the higher end of 525 in the coming period and try to book their profits or exit from the counter on the elevated zones.
Right, Osho, is there any further steam left for Bosch? There was, of course, restructuring announcement coming in. Seems like some volume pickup is there, and when this type of stock sees volume pickup positionally, some setup does come in the positive side. Is it there yet?
See, in this month, the counter has already seen a very strong traction of 30%. The counter has already surged. But again, at these levels, historically, the counter has seen strong consolidation. So I'm not very much aggressive at current point of time, but any breakthrough above the zone of 39,000 can provide further movement in this counter. But looking at the recent traction, some retracement can be seen. So one should definitely keep trailing their profits. 39,000 is the sturdy resistance level. Breakout can only see some kind of further continued momentum in this counter.
Right, so you'll be looking at the important levels and then we'll see the breakout happening here. Up next, another stock also which would be focused in our rapid fire includes GTL Industries. That is where ace investor Sunil Singhania's company Abacus has taken stake. Now we are seeing another up move coming in this counter. Osho, good time to book the profit here, or you see some further up moves, because these stocks generally have lower volumes and bigger names come in, massive volumes come up. So is there any kind of a trap at times it happens to the retail investors, or do you think it'll further go up?
See, even the technical structure is not very much optimistic in the counter. The counter has always seen a rejection around the 200-day simple moving average. So currently it is hovering around the same level. This zone of 68 is a kind of very strong resistance zone for the counter. But looking at the recent traction and the kind of volume that we have seen in last 2 days, some further pullback can be seen, but 70 to 75 is a very strong resistance level. One should either try to trail profits or try to exit on any bounce towards the zone of 75.
Right, and TCS comes out with its results post market hours. Osho, your views on it, how the charts are looking like? Is there a trade to be made?
For TCS, currently I'm having quite bullish view, but from a positional point of view, not as a play for quarterly results, but definitely even for traders, one can look for a straddle strategy in the counter, because overall there has been a strong plunge, and from there onwards the counter is reversing. So I'm expecting that in the short term period, a technical pullback can definitely be seen in the counter, but 2800 is the target that I'm eyeing from a short term point of view. Breakout above 2800 can see a positional turnaround in the counter.
Right, thanks Osho for the rapid fire segment. Over to you, Hiral. What are the Google trends suggesting?
Let's see, what's trending on Google, because yesterday it was interesting names that we saw, which had a lot of focus. Today, let's see what Google Trends is picking up as we speak right now. Titan, interesting. Adani Green has been trending since yesterday. LIC likewise as well on the back of the bonus issue has been trending. Ashok Leyland, it was one of the top F&O gainers yesterday, and that entire CV pack has been in focus. And Ola Electric, smart moves, your entire EV portfolio is up in trade. Kunal, anything that you like from the names that I mentioned which Sharad has not spoken to you about? Sorry, Osho.
The EV space is looking quite decent to me currently. Many of the counters have seen a decent traction like Ola Electric, but again from a short-term point of view, I have a bullish view in this counter. The zone of 38 is very strong resistance. So one can look for momentum play in the counter. 38.40 is the resistance. So till those levels, one can look for momentum play in the counter. Overall, some counters are looking very strong. For example, Titan on the technical front has given a very strong breakout in last trading session. Some breather or some profit booking can be seen as an opportunity in the counter to re-enter from medium-term perspective. The zone of 4300, 4320 will be an apt zone to accumulate the counter from medium-term point of view.
Okay, so that's with regards to where the EV players go. But thank you, Osho, so much for joining in. Always a pleasure to speak to you. Let's pull up a Page Industries on the screens and see what the counter is doing in trade. And that stock has been in focus as well over the last couple of weeks. Today, that stock is at the day's highest levels with gains of little over 2% coming in there. In fact, my colleague Ridhima Bhatnagar did speak to the management of Page Industries at their manufacturing facility in Odisha. Let's listen in to a slice of that conversation with regards to expansion plans, the impact when it comes to the Middle East war, etc.
how the apparels which you wear are actually made. Straight from weaving to garments to the elastic socks which you wear, how they actually manufactured in a factory. We are here at Odisha facility for Page Industries, and we will show you how these apparels are actually manufactured and weaved and tested so that you can wear it with no worries. Let's go in. Page Industries, synonymous with brands Jockey and Speedo, has opened its new facility in Odisha, Cuttack, and we are here right now at the facility, and joining me to talk more on this is V.S. Ganesh, who's the MD and CEO of Page Industries.
Thank you so much and welcome to the Temple City, and really look forward to the
Thank you. Ganesh, I want to start by asking you that, how is the capex what is the capex of this factory and how it's been funded?
Okay, so the funding has been mostly from internal accruals. Of course, we have taken some debt because we do get capital and interest subsidy for that sake. But we always keep internal accruals for growth. So our dividend policy is such that we keep good payout for our investors, but we also accrue and keep good revenue for investment for future. As far as the investment for this project in Odisha is concerned, we have spent around 350 crores for this project. And we also have a phase 2 coming up in Chadabdar in Odisha. So that is the second project. This project is around 350 crores.
Interesting take. Ridhima has given us entire details about the Page Industries outstation visit. Of course, stay tuned to our channel to get the entire picture. But there's one sector which is under a little bit of selling pressure in today's volatile day of trade, and that's the IT space. A lot of reasons for it, why the IT space is under stress, and to decode all of that, we are joined in by Jasmeet. Hi Jasmeet, what is the reason the IT stocks are under pressure?
Well, thank you for that. If you look at IT as a pack, the overall IT pack has gained a lot since the lows in the month of February and March. And now we see some kind of problem coming in for the IT pack. Secondly is the budget. As the Morgan Stanley, during the FY27 budget, we see modernization coming in terms of BFSI sector as well as the retail sector. So given IT majorly focused on these two sectors, so any revenue, any budget cut in this sector would impact the IT altogether. Well, the third reason, all in all, is the overall result. Now we expect Q4 results coming up, though it's positive, but the deal momentum expected is to be slower for the companies. While the fourth result is the overall AI revenue and the AI and the things done by Anthropic. So Anthropic recently released Mythos, a particular tool which is the strongest tool so far that will help people automate the coding. So that might create the overall pressure on the margins and the top line, which is showing that extended pressure on the IT. That's why IT as a pack is falling in trade today.
Thanks a lot, Jasmeet, for that, and keep doing your AI training also. So will I do, and everyone else also. You should also learn a little bit of AI as well. But to get in more perspective, we are joined in by Mahesh Ojha. Good afternoon, Mahesh. It's always a pleasure to talk with you. We just had Jasmeet talking about the IT stocks seeing a little bit of pressure. And on a fundamental basis, where do you think IT stands? Is there a little bit of value emerging after that correction which we had seen from last year, or you need to wait it out?
Good afternoon. Already we have seen correction in the IT sector, specific if you're looking from a large cap specific, then TCS and Infosys and HCL, that's quite giving a valuable level on this time. So I think TCS can post a good number. The rupee depreciation can add something in results. So I think still, we can see some more upside in the IT sector. If you're looking from a TCS perspective, I think 2,850, 3,000 level can be achievable in a medium to longer term horizon. But from today's specific, if you're looking from a result perspective, commentary and deal announcement could be a watchable trigger for the particular IT sector.
Okay, so that's with regards to where IT majors go. But, we have ITC that is in focus as well. I just have my colleague, Rishabh Bhatnagar, who just happened to speak and caught up with ITC. Sanjeev Puri, who's talking about the impact of the Iran war on trade and business. Let's listen.
Right, we're joined here by Chairman of ITC, Mr. Sanjeev Puri. Mr. Puri, what are you seeing? The impact of the war, of course, has led to some sort of raw material price hike as well. What are you seeing, and are you welcoming also the ceasefire deal?
Yeah, certainly. Peace stability is very important for economies to thrive. And India was doing very well. And of course, it's continuing to do very well also. But what has happened, of course, is not good for the economy. Besides logistics, it has an impact on, energy and energy prices and whatever is indexed to it. So cost in certain items will certainly go up. Some companies could even face disruptions. So it's a cause of concern, and very, very, very happy to hear about the ceasefire. Hope after that peace and stability prevails. Thank you.
Okay, so hope some peace prevails is the question coming in. And yes, there has been an impact. A quick view, Mahesh, when you talk about FMCG companies and the input cost pressures that they would face versus where valuations stack up right now, what would your advice be?
ITC is giving a good value appreciation from these levels. I think ITC can easily go up to 350, 360 level. But your horizon could be more than 12 months or a 12 month. So from these level, I think ITC has a good risk-reward ratio from these level.
Right, so ITC is having a good risk-reward ratio levels. That's coming in from Mahesh. But there's another segment, the power ancillary segment, which everybody is talking about. The bullishness was already there in last month itself. We had identified this trend at NDTV Profit, and now the brokerages are also coming. JP Morgan on power equipment, Hitachi Energy, GE Vernova and Siemens Energy. All three of these stocks, they have initiated their ratings on that, and they are very bullish, especially on the high voltage power equipment makers. And remember, this cycle, this lasts almost 3 to 4 years, so there is alpha to be made. That's what JP Morgan is suggesting. And India has also launched the latest power generation plan for solar and wind also. So a lot of things are auguring well for this sector and the power ancillary space as a whole. Mahesh, I want to get your views on that. There are three companies we have discussed: Hitachi Energy, GE Vernova and Siemens Energy. Anything where the risk reward ratio is looking good, and if yes, which would be the one which will be the most bullish on?
I think we have coverage on Siemens Energy. From Siemens Energy perspective, I think some upside can come in Siemens Energy. 3,100, 3,150 level can become in 1 year horizon. Absolutely, Hitachi can do well in upcoming time, and GE also. But from a Siemens Energy perspective, I think there is some good upside momentum can come.
Okay, so that's with regards to where the energy companies go, seeing some good momentum today. ICICI Pru is also in focus. That's the AMC arm, where CLSA has initiated an outperform for a target price of 3,500. What they're saying is a 13% market share is what they've seen, stability at in the past decade, and the mutual fund industry, which has grown at a 20% CAGR over the past decade, is providing a strong growth tailwind. The company has the largest actively managed AUM with a high mix of equity. It's allowing to deliver industry-leading 50 basis points net revenue yields and 35 basis points operating profit yields. They're expecting the company to deliver 18% AUM compounded annual growth over FY26 and 28, which would actually translate into almost 16% PAT CAGR growth. Your view, Mahesh, in terms of ICICI Pru AMC?
Definitely, we are tracking ICICI Pru AMC from IPO onwards. So 13% market share and 18% CAGR is definitely good. I think 3,500 level could be achievable in near term also. But if you're looking from a longer term perspective, I think India has a lot of trigger and lot of investment need to come in the market. So I think we are bullish on ICICI Pru AMC. I think stock can surpass 3,500 level in near term, and after that, what stock can be reviewed.
Right, but let's talk about the fertilizer segment also. Important developments coming in from the center as well, a relief coming to the industry. But what is that relief which the cabinet has allowed or given the approval to give that perspective? Joined in by Varsha. Varsha, what is the entire story about?
Well, Cabinet has approved 41,500 crore of subsidy for fertilizer sector, and it covers P and K fertilizers like DAP and MOP. If you see, this is a higher allocation versus last year. So subsidy in 2026 is 4,300 crore higher versus Kharif 2025, and this is higher 3,500 crore versus Rabi, and this reflects rising global fertilizer costs. Now on to why subsidy has been increased, of course because of the rising Middle East situation that we are seeing. Energy and fertilizer markets are very volatile, and this will keep fertilizer prices stable, and which will support crop productivity. Onto the overall subsidy outlook, FY27 total subsidy, if you see, stand at around 1.71 lakh, which is lower, 1.71 lakh crore, which is lower than FY26. Government is aiming for fiscal control. Now talking about which companies will be benefited, of course all the fertilizer companies will be benefited. Coromandel, you have Deepak Fertilizers, Paradip Phosphates, even RCF, GNFC, all these companies will be benefited. But one key thing which you need to keep in control, or is of course how the rising raw material cost will these companies pass on to the consumers. Is this the one concern that we have, considering the geopolitical situation that we are in?
Thanks a lot, Varsha, to give us the entire perspective. And who knows, if fertilizer prices are not controlled, maybe our cooking food might become expensive as well. But Mahesh, I want to get you on this. Just need to ask around RCF, Fact, NFL. They just buzz whenever there is a news flow, especially on the subsidies front. Is this a good medium term or a positional setup, or will still avoid investing or taking positions in a fertilizer company?
See, I think a momentum play could be done in Coromandel, Deepak Fertilizer, and I think so. Some momentum play can be done on these levels. But yes, from a longer term perspective, I think wait and watch could be a better idea, because there are some complications. So need to wait and watch. Value, if any value emerging after that one, then can be looked. But yes, momentum play is there, and news is positive.
Positive, and there is a little bit of momentum with regards to fertilizer companies as we speak, but completely out of time. With that, it's a wrap on this edition of Trending Stocks with Sharad, the team that put the show together, and myself. Lots more lined up on the other side, and a thank you to Mahesh Ojha as well for joining us on NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's happening? How to
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5, only on NDTV 24/7.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu, here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get convinced.
Concerns over ceasefire and oil volatility clouds Dalal Street, which is witnessing a cautious day of trade after a bumper session yesterday. Nifty trades few points shy of 23,900, while SMIDs outperform benchmarks. Metals shine, but banks still under pressure. And renewed Israeli strikes on Lebanon raised doubts about the durability of a fragile Middle East ceasefire. The Strait of Hormuz remains largely obstructed. Trump administration calls it unacceptable, while Iran resorts to sharper focus on non-dollar payments. And oil bounces back sharply after its steepest fall since 2020, with markets jittery as the Strait of Hormuz remains largely blocked. Israeli strikes have reopened supply fears, keeping crude near $97 a barrel, with tanker traffic still thin and the ceasefire looking fragile. The earnings season will kick off with TCS reporting Q4 results today. Modest growth, slight margin uptick, and strong deal momentum on the cards. All eyes also on commentary on AI deflation. Good afternoon. You're watching Lunchtime Trades with me, Shreyanshi Singh, and this is the show that gets you a roundup of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour. But at this point in time, it's time to take a look at a very important conversation. In conversation with Rishabh Bhatnagar is TV Narendran right now. Let's tune into that slice of conversations.
Try to manage your supply chains more optimally. There's no need to hoard if you can manage it well. We look at diversifying supply sources and managing the inventory optimally. So we are not hoarding anything. Yeah.
And lastly, sir, there's also reports saying that hot rolled coil might see a price increase as well. Where do you see that coming?
There's a lot of cost pressure on the steel industry as there is in other industries. So if you look at something like coal, which we import a lot of, the freight rates have gone up, the insurance rates have gone up. We buy a lot of limestone from the Middle East. Now we have to source it from alternate destinations, which cost more. LPG and fuel costs have gone up. Pyroxenite, which we also buy from the Middle East, the prices have gone up when you source from elsewhere. So there's a lot of pressure on the cost side, and which obviously all industries are trying to see how much of that can be passed on to the customers. Yeah? Thank you.
All right, and there you go. So that's one conversation coming in that's quite important. So it's cost pressures that you're looking at right now. That's the MD and CEO of Tata Steel right now talking about all of these important conversations. A lot of cost pressure when it comes to the steel industry is the key takeaway that you're looking at this point in time. But let's also quickly take a look at the markets right now. And there's a little bit of pressure that you're seeing there as well. When you talk about Nifty 50, about a 160 point cut is what you're looking at. Sensex as well, about 700 odd points down at this point in time. When you talk about some of the top losers, Nifty Bank makes it to that entire list. PSU banks, consumption, rural, oil and gas, all of those sectors are currently on the back foot right now. What's holding up resilient is metals, shining bright. There's energy, pharma, realty, IT. Those are some of the sectors that are maintaining some amount of resilience in a rather lackluster session of trade on Dalal Street. Quickly taking a look at some of the key losers as well. So there's something like a CCL products that's down quite a bit, something like L&T as well, trading with a cut of about 2.5% odd. Interglobe Aviations as well, 2.5% odd cut coming in there as well. And Geo Financial Services, Kotak Bank, some of the other losers from within the Nifty 50 pack. What's holding up quite resilient from within this entire pack is, no surprises, there's some of your metals counters. So something like a Hindalco. And you do have some of the other stocks as well, NTPC, BEL, Dr. Reddy's, Bajaj Auto and TCS ahead of its results with that 1.5% uptick also coming in. So that's also one counter to definitely watch out for in today's trading session. But let's also talk about something else that makes it to our radar right now before we get your check going on commodities. Now, amid the conflict, Iran in fact proposed $1 per barrel transit toll, and that is through the Strait of Hormuz. Now, it is emerging as a major risk when it comes to global energy markets, with over 20 million barrels per day of crude and petroleum products flowing through this particular route. In fact, Somit joins in to just give us some more detail when it comes to the impact that you're penciling in.
Well, if you look at the quantity of oil that flows through the Strait of Hormuz, it's nearly 20.9 million barrels per day. Now, this is oil and petroleum products. Now, out of this, oil is just around 14.7 million barrels per day, while the remaining 6.2 is petroleum products like petrol, diesel and other products that move through the Strait of Hormuz. So assuming that the $1 per barrel fees that Iran is asking for is applied only on crude oil and not on products, and this is something that they're asking in Chinese yuan or in cryptocurrency. So that could earn Iran on a daily basis close to $14.7 million. Obviously, this amount is in dollars, but they're asking it in yuan or in cryptocurrency, and annually this could roughly come to around $5.4 billion of an income that could come in for Iran. Now, we still do not know who will bear the impact of this. So assuming the sellers bear the impact in the first case, then Saudi Arabia would see the biggest impact coming in, because they the oil that flows to the Strait of Hormuz, they have the highest share at that side, around 37.3%. It could cost them around $5.5 million every day, and the annual cost could be close to $2 billion for Saudi Arabia. Followed by Iraq, UAE, for them it could cost anywhere between $718 to $1,200 million. And then there is Kuwait and Qatar, which also send oil via the Strait of Hormuz, and it could cost them anywhere between $227 to $530 million on a daily basis. Now, on the other hand, if the buyers are bearing the cost of this $1 per barrel extra charge that Iran is asking for, then China could get impacted the most, because the oil that flows through the Strait of Hormuz, China gets the most, 37.8%. Daily cost for them could be around $5.6 million, and the annual cost could be around $2 billion US for China. Followed by India. For India, it could cost close to $800 million on an annual.
All right, and there you go. So that's the word coming in terms of the Hormuz impact as well from this particular change and the latest development. But let's also go across and listen into a conversation that is currently underway with Sunil Kant Munjal, chairman of Hero Enterprises.
Products and therefore on consumption. But India genuinely over the last decade or plus has shown its ability to constantly leapfrog by building both physical and digital infrastructure at the same time, and getting adoption of these by people across every spectrum. In that sense, we are quite unique in the world today. We have managed to maintain a low inflation and reasonable interest rates right through many crises as well. So I'm an optimist on India. And I think the government being so proactive, there are multiple committees have been set up by the Prime Minister with secretaries of Government of India which meet on a daily basis. I understand the Prime Minister himself is reviewing this on a regular basis, the situation. And I hope, whether it's Pakistan involved, whoever is involved, I hope we can find a quick resolution because that is in everyone's interest. It's in the entire world's interest. But I think there is also some time for us to wait and watch right now.
Mr. Munjal, you also spoke about cost pressures. Is there any sort of agreement in terms of passing that on to consumers when it comes to the Hero Group? Are you seeing, because there is logistics, all sorts of new commodities and raw materials the industry has never even heard of. I mean, consumers never even heard of epoxy resins, and today they're finding out that it is integral to production. Talk to us about those components as well.
So the inflation impact will be across the board. It's not on any one thing. So that, as I said earlier, knock-on effect creates a multiplier. So what can be passed on is what the markets can absorb. I don't think anybody has a ready standard formula for this. It will be different for different products and services depending on the need, the urgency and the timing of both the demand and the supply. We'll have to watch and play it by ear. The best hope we have is that this will ease off. We saw the impact even in one day. The oil price took a dip with just the announcement that there is a possibility of peace. So let's hope that is where direction we are going in rather than otherwise. Thank you.
All right, and there you go. So that's the word coming in from the management of Hero Enterprise as well. So that's the chairman of Hero Enterprise talking about the current developments right now in terms of the inflation impact that's going to be across the spectrum. That's something that he's also highlighted. And moving on from here and also just getting you some more commodities insights as promised. Let's quickly take a look at oil prices and see what they're up to right now, because oil in fact has resumed gains and supply concerns, they're back in the spotlight. In fact, let's go across to Ajay Kedia, Director Kedia Advisory, who's standing by for some more insights. Mr. Kedia, thank you so much for taking time out and joining us this afternoon. You know, it's a lot of latest developments that we're looking out for in terms of oil prices. A lot that is currently unfolding, but as things stand, how are you looking at this entire week going forward and into the next week, heading into the next week? What is the kind of outlook that you're penciling in for oil prices?
So very good afternoon. This week we have started with a holiday mode. We know that on Friday, Good Friday was there. Saturday, Sunday was very mysterious because 48 hours ultimatum was being declared by Donald Trump, and we have seen the result that there was a talk on ceasefire was being there. But it was hardly 24 hours that ceasefire has been going on, and we have seen again from the Israel the new series of bombarding to Lebanon has again stuck this ceasefire, and resulting we have seen crude prices went again by 3%, trading near to 97, making a strong base at $90. One thing is very much clear, Chancy, if there is a ceasefire or things get cool off, crude prices will get a base at 85, 90. But remember, we were around $60 mark, and right now it's around 90, let's say. That is 50%. Our energy cost is going to be higher, and that will be impacting the whole sentiment for equity market also, for consumptions also. So I think unless and until on Friday there will be a final talk from at Islamabad, will come clarity. But till then, we are expecting crude prices will continue to hold support at 90, maybe again due to escalation, we can see the level like 100, 102. But overall, I think uncertainty will prevail from the US and
Right, no,
Iran.
absolutely. And Mr. Kedia, we'll come back to you with some of these other insights as well. But currently, there's a conversation underway with Vishal Kampani, Vice Chairman and Managing Director, JM Financial as well. Let's go across and listen into a slice of that conversation.
And if the war were to end, then the stabilizes probably between 80 and 90, which I think India can afford, and we should be stable.
Mr. Kampani, also there are sort of signals coming in on the bond market as well as debt that there is some sort of a bubble that is coming up. Talk to us about what you feel on that.
Yeah, so this is a situation in global private credit. What has happened is there has been a large amount of sectoral exposure to the software sector in terms of private credit loans. What I hear is that on the corporate private credit, almost close to 1/3 of the loans are exposed directly or indirectly to software and software services as a sector. Now, if that is true, that obviously is a high percentage, and if there is a systematic impact of AI on this sector, then the worry of investors is that will the loans which have been used to purchase the equity of these companies go bad? I don't think the situation is as bad for a couple of reasons. One is that software companies generally are debt-free companies. So the underlying companies which have been funded through debt finance acquisitions are under-levered. Many of them hold anywhere between 8 to 10%. In some cases even higher, cash levels as part of market cap. So they are fairly healthy in terms of the cash levels they have. Third, the AI impact does not seem to be immediate on the enterprise side. It'll take a few years to play out. But of course, just like the financial markets react much more than sometimes what the reality is in business situations, and that is what you may be seeing playing out in private credit. So it's definitely a space to be watched, and we'll see how the AI adoption in enterprise plays out and what the impact on software therefore is.
Mr. Kampani, what are you seeing on the IPO front as well, right? Do you see a pause coming in, or do you see this sort of the market still continuing to list bigger companies?
Yeah, so you have seen one of the highest FII sale numbers in the month of March. What that means is even though India has one of the biggest IPO pipelines in the history of our country, you need, for a very successful execution of this large pipeline, we will need not just domestic participation, which has been standing strong for the last 6 quarters and letting IPOs happen. I think you will need this time reduced FII selling pressure and some participation from FIIs in IPOs as well as domestics in IPOs for this to be successful. As of now, there is a pause. With the West Asia war and the current state of markets, it's very volatile to launch any transaction. Having said that, I'm hopeful that this settles, and as I said, there is a resolve on both sides to reach a truce and finally terminate the war. And if that were to settle, you will see IPO activity come back very fast and very quickly. Again, one caveat, FPI selling needs to reduce.
Lastly, Mr. Kampani, what sectors of the economy where we stand currently, what sectors do have like the biggest structural tailwinds going ahead? Where are you placing your bets on?
I think there are many parts of manufacturing where there is a big structural tailwind. We heard the minister speaking about a few sectors in the morning where we've achieved a lot of global scale, whether it's mobile phone manufacturing, number 2 in the world, auto parts, number 3 in the world. So there are parts of manufacturing which I think Indian companies have a global clientele, a global manufacturing base, and a very strong local cost-effective manufacturing base as well. So some of those sectors. Overall, I'm very bullish on healthcare, specifically the hospitals and diagnostic space. I think very good companies, very low leverage in that, and a lot of expansion, which will add a lot of earnings growth over the next 4 to 5 years, the medium term. I'm also very bullish on the energy space. I think there will be even more investments, for example, in solar, in the entire solar value chain. And from a valuation perspective, very constructive on banking, extremely constructive on housing finance companies. I think many of them are trading below 2 times book for having a very decent return on equities of close to 14 to 15% or even higher in some cases, and very decent earnings growth visible, again, of between 14 to 16% over the next 2 to 3 years. So I would say banking, housing finance companies, the renewable, solar power value chain, and some parts of manufacturing, healthcare, and diagnostics.
Thank you. Thank you so much for your time, sir.
All right, and there you go. So that's key conversations from the sidelines of the 11th National Leadership Conclave of the All India Management Association as well. But let's also get back to that conversation in terms of insights on the entire space of commodities. In fact, Mr. Kedia, back to that point that you were making when it comes to oil prices and the kind of supply pressures that are still in the spotlight right now.
I think there is no supply pressure because OPEC since last couple of years are consistently cutting down the productions in order to balance the prices. But I think this is the choke point which is most important, and with the yesterday's fall, it is very much clear, despite if suppose the things goes in line, then also there will be a base of 85, 90, and that was exactly I was saying, the cost would be still higher for any industry, and that will take at least couple of months to settle down. No doubt we are expecting by this year end crude prices should again settle below $70 because of supply has been quite good. But important would be the Iran and US tension and Strait of Hormuz, how this will be working from here onwards.
Absolutely, and until there is absolute clarity when it comes to the Hormuz choke point, you do have a lot that is still uncertain and lingering in terms of some of those concerns for oil prices as well. Quickly, just wanted to get a word going as far as gold is also concerned, largely steady right now. What is the trajectory that you're mapping out for gold as well?
I think gold, since the war has started, we have seen prices move down from 5,400 to 4,100. And I think whatever the gain to the level of 48, 48.50 was a retracement only. See, Fed has clearly told his way that there will be a possibility of pause or even a rate hike, which will definitely cap the gains. No doubt, if the war comes to an end, maybe a little bit bounce could be possible. We don't expect prices is going to be crossing $5,000 mark right now. Downside, again, the support should be around 4,200, 4,250. Overall, I think market will hover in this range only with a slight weakness, looking to the ETF outflow in the March month, what we have seen. So I think slightly, if we get a bounce, it should be on a sell side only.
No, absolutely. And thank you so much for taking time out and joining us this afternoon. So there you go. That's everything that you're penciling in with regard to oil as well as gold. But let's also move on and get you some other important updates. In fact, the RBI proposes new governance rules for banks, tightening oversight on related party transactions and also strengthening the role of boards. Really, the move comes amid recent board management tensions across several banks, prompting the regulator to clearly spell out responsibilities and also accountability at the very top of the pyramid. Now, Piyush is breaking down what's changed and why it matters. Piyush, over to you.
Yeah, that's correct. So the RBI has proposed that the bank's board chairperson will have the primary responsibility for setting up the agendas of the board. The RBI has said that boards need to be provided enough information by the top management to ensure that whatever decisions they take are informed and they are taken in a timely manner. The RBI has also proposed bank boards oversight on all the related party transactions that happen with bank entities, bank subsidiaries, as well as individuals who are considered as KMPs. We are also aware that the RBI has said that banks board must ensure conformity with the highest level of corporate governance standards at the top. So why has RBI taken these additional measures to ensure corporate governance stays sound? We are aware that last month the country's largest private bank saw a big issue wherein its former chairman, Mr. Atanu Chakraborty, resigned, citing differences between his personal values and certain business practices at the bank. HDFC Bank is not the only one which has seen high-level boardroom drama because IndusInd Bank earlier this year also saw that its CEO and deputy CEO were not on terms with the chairman and other members of the board once the whole derivatives fiasco was flagged to the bank's board. In fact, in Karnataka Bank's case, the ex-CEO resigned, and along with him, the almost entire top deck of the bank board of the bank management had left due to differences with the board. So the RBI felt that this is an important juncture wherein it should come in, specify what are the board roles, specify what are the roles of independent directors, management, and how the board has the final say on all things which are important and material to the bank. Back to you.
No, absolutely, and thank you so much, Piyush, for joining us with that entire roundup. So there you go. Those governance issues really have been in the spotlight for quite some time right now, and that's something that you're looking at as well. But let's also move on and talk about the markets right now in terms of what they're doing. Let's not lose sight of what's happening with the markets. When you talk about Nifty 50, that cut really has deepened just a tad bit. So about a 200-point cut is what you're looking at. And when you talk about Sensex as well, largely similar picture, but 900 odd points is the kind of weakness that you're seeing for the Sensex as well. When you talk about the entire sectoral picture as well, it's actually metals that are still sparkling bright and energy and pharma that are remaining resilient. But on the flip side, there's actually banks that are quite weaker, PSU banks, rural consumption. Those are some of the sectors that are trading with some amount of pressure as well. In terms of the top losers as well, you do have a bunch of counters, something like a Shriram Finance that makes it to that list, Interglobe Aviations, L&T, Eternal, Geo Financial Services as well, with that 2.5% knock also coming in on this particular counter. And that's the entire setup in terms of the markets, but the class action proceedings against Jindal Polyfilms have hit a procedural hurdle with a request to change the main petitioner, stalling the case. In fact, Nimit Dixit is joining in with some of those important details.
Yes, so what has happened now is that in the NCLT, after a year and a half of this proceeding going on and finally being admitted, India's first class action has hit another snag. Now the main petitioner who had got this proceeding admitted against Jindal Polyfilms has sold off his shares, which is about 5% for 135 crores to Monet Securities. Now Monet Securities has applied to be the new petitioner in the case and to carry the class action forward. But the objection from Jindal Poly is coming in saying that they were new petitioners they were not shareholders at the time when all the alleged violations happened. The company is under investigation by the SEBI and in the class action for undervalued transactions and loan write-offs and non-disclosures under various SEBI regulations. But right now the proceeding, which was already going to go into merits, now hits another snag where we'll have to go into whether a petitioner can replace as a new shareholder into these proceedings again, and it could take another 2 weeks to 3 weeks to decide this process, the NCLT says.
No, absolutely, and thank you so much, Nimit, for joining us with that entire update as well. Quick look at the rupee right now, hovering close to 92.71 levels against the dollar, so that's the update coming in there. But in terms of key commentary as well coming in, rupee depreciation against the dollar is a major concern, leading to massive FIIs, sell-off from the Indian market. That's the word coming in from Samir Arora, founder and fund manager of Helios Capital as well. Let's go across and listen in to that little bit of commentary as well.
The currency has been a big negative, and taxes have been a big negative, but let's say now taxes is there. But now over and above that, you pay taxes on rupee earnings, and then there is a loss on dollar. And for European investors, so I don't even go to Europe to meet, because the depreciation would be more than 25% or something in 2 years. How to start explaining? It's pretty bad. That part is bad. But life moves on. That is the only answer. And one day people will say it's overdone and from now on and stuff like that. And that is how we live day to day.
All right, and there you go. So that's the word coming in from Samir Arora when it comes to the Indian rupee as well, and the rupee depreciation being really a concern. Let's quickly take a look at some of the counters that are buzzing away in trade right now before we end the show. So something like a KSE International is standing out on the back of an order win. They've in fact managed to secure a new order to the tune of about 2,500 crore rupees. And the order is across civil, transportation, T&D and cables and conductor businesses. Now, when you talk about some of the other counters as well, something like a GTL Industries is making it to my radar right now on the back of a Bacchus asset manager really buying 25 lakh shares as well. So that's one counter that's in focus. You do have the volumes that are 7 times the usual. And that's also why the stock should be on your radar. Something like an Info Edge is also standing out. Of course, there's TCS that you're really watching out for in terms of the in terms of the Q4 updates. But right now, when you talk about the business updates, standalone billings for Info Edge have seen about a 7.4% year-on-year uptick. And when you talk about full year billings as well, about a 10% uptick on a year-on-year basis is what you've really seen coming in. So that's something that you're looking at in terms of some of those counters that are in focus, apart from TCS as well. But that's all the time that we have on the show. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
Good afternoon, you're watching Small Cap Bazaars on NDTV Profit with me Somit Sarkar and my co-anchor Varsha. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade either on the back of price or volume action. So what's on the show today? Firstly, we'll be speaking with the management of Solex Energy. Now why? Because the stock is up nearly 44% in the last 1 month despite the fact that market conditions were quite weak. So what's been buzzing here is something that we'll get to know from the management today on the show. Apart from that, we'll be also discussing on stocks like GTL Industries. Now, why this counter? Because Sunil Singhania, an ace investor, has bought stake yesterday in open market. So what could have interested Mr. Sunil Singhania in GTL Industries is something that a viewer will get to know on the show today from our researcher path. When it comes to Venus Pipe, that stock has also been buzzing. It's been gaining for the last fourth consecutive session, and in the last 6 trading sessions, the stock is up nearly 34% in trade. So what could be buzzing here is something that we'll get to know. When it comes to Anthony West, that counter has been up nearly 26% in the last 5 days, and recently the company got an investment of close to 750 million yen from a Japanese investor in 2 of its subsidiaries. So how does this benefit the company is what we'll get to you on the show today. And lastly, we'll be also keeping in focus on an IVF company, that is Gaudium, because that counter has been buzzing in trade. It's up nearly 30%. We did speak to the management a few days back. We'll get to an important bite of that management on the show. Now, if you look at the market here, it has been a weak trading session. We are down nearly 233 odd points, but since 10 a.m. till now, it has been a range-bound trading session. From 23,750 to 23,900 is where the market has been. Quite a range-bound trade since 10 a.m. till now. So not much of an action here. Yesterday it was a very great day, and we are seeing some kind of profit booking coming in from those levels. Now, if you look at the sectoral indices, it's the Nifty PSU, which has been in green, up around 1.3%, largely led by the defense name, and hence the defense index is up around 1.9% in trade. On the flip side, it's Nifty Private Bank, Nifty Bank and Nifty Financial. Pressure coming in on the banking space, and these are the counters which are largely leading the market also on the lower side in trade today. IT is one counter that we need to watch out for. It was in red early morning, but right now it's largely flat because TCS has gained since opening, and that is one of the reasons. And TCS will be reporting its numbers today, so IT is something that we need to watch out for. But Varsha, when it comes to the small cap space, wasn't buzzing here.
Yeah, a lot of stocks are actually buzzing. Let's pull up chart for Bhagyanagar Industries. The stock is gaining. This is of course on the back of volumes. Volumes are trading at 3x. There you go. The stock is up almost 16%. You have Gaudium IVF buzzing in trade today. ITDC, if you see, the stock is buzzing on the back of huge volumes. Volumes are trading at 92x of its 30-day average. ITDC, there you go. The stock is up almost 18% in trade. Solex Energy is one such stock which is in focus. We'll be speaking to the management, of course. Sajal Glass is up 43% in the last 5 days. You should watch, since our interview, the stock has been buzzing. You should definitely watch that interview. You'll get a lot of insights from that interview. Though, on the loser side, you have HMA Agro, Confidence Petro, United Poly, which are on the losing trend. But, one stock, that is Solex Energy, is in focus with a lot of triggers actually playing out for the company. The company manufactures solar photovoltaic cells and modules, is also in EPC when it comes to the solar energy market. Onto the demand and product mix, strongest demand has been coming from IPP and IPP segment, and they are focusing on high efficiency TOPCon modules, and the strategy is clearly shifting towards premium module positioning. Onto the order inflow and visibility, well, the total order visibility exceeds 4,000 odd crores. This is as per December 2025. FY26 revenue target has been at 17 to 1800 crore. PAT margin is expected at 6 to 8% for full year, and the EPC revenue in Q4 is expected at 120 to 130 crore. Onto the capacity and vision 2030, the current module capacity, if you see, stand at around 4 gigawatt. Target utilization is at 70% in Q4, and 2030 goal, if I were to talk about, they want to take it to 10 gigawatt modules. So, and solar line is also under consideration. They are also going into BESS, which is the other leg of growth for the company. But to speak more about what lies ahead for next 2 to 3 years, we are here joined by Dr. Chetan Shah, who's Chairman and Managing Director at Solex Energy. Well, Mr. Shah, welcome at NDTV Profit. Always pleasure to have you. Let me start with the current order book, because as per December 2025, the order book was around 4,000 odd crores. Have you seen an inch up in order book since Q3? If yes, what's the current order book?
Yeah, so last financial year, that is FY26, we have performed well compared to our previous year. And even FY27 also, we are working with a very strong order book, which is again nearing to 4,000 crore only, and which we have to execute in 18 months. So FY27 is also going to be quite encouraging for us, and FY28 also. So we are working with large scale IPP orders and some international clients also. So we do have a visibility for coming 18 months to 24 months.
Right. And also, sir, you had given a guidance of around 1700 to 1800 odd crore of revenue in FY26. With that, considering that, will you do almost 1,000 odd crores of revenue in Q4? Are you in track when it comes to this number?
Yeah, so we have already completed FY26. So the numbers the guidance which we are mentioning right now, that is for the previous year. And we have already done our revenue target, which we have declared, just nearing to those numbers.
So you will be doing around 1,000 crores of revenue in Q4.
Yes.
Okay, got that view. Also, sir, you had mentioned of 6 to 8% of PAT margin for FY26. Now, over the last few quarters, we have seen the PAT margins being suppressed. Will you be able to do that 6 to 8% of PAT margin in 26?
26, we are okay. The actual impact of the current situation will be in this financial year. So FY26 is not impacted much with the current geopolitical situation, and we are in line with that. Our team is working on this, so we will officially come up with the numbers.
Sir, any ballpark range if you could help us with for margins for FY26?
So as guidance, we have, as our previous guidance, we have committed 6 to 8%. So we are within that range.
Okay. And so what about FY27? Any targets set for FY27 revenue growth?
Yeah, so revenue FY27, considering the current geopolitical situation, we are targeting somewhere about 2,500 crore revenue from the current operations, which is a module and EPC. And that we are working on, the our execution of our order books and all. First quarter will be a little challenging because there is a supply chain constraint. But I think by end of the year, we will achieve those numbers.
Okay. If you could just take us through what has been your utilization levels, how much can it improve on the expanded capacity as well?
Yeah, so basically, we started with a very humble beginning of 700 megawatt. And then in last financial year, we added added capacity of 3.3 gigawatts. So now we are at 4 gigawatt capacity. And our target utilization is nearly 70%. And we are working, we have achieved also on our new production lines nearing to these numbers only. We want to, our next target is to reach to 85% of our utilization of our installed capacity. So that is the ambitious target that we are carrying right now.
And what is your order book size as of now?
Currently, we are having an order book of 4,000 crore for which we have to execute in 18 months.
In the next 18 months, you have to execute 4,000 crore, which means that easily 5,000 crore revenue will be achievable for FY28?
FY28, we are targeting that way, yes, because there will be a lot of, backward integration also we are working on. So we will have those numbers.
And your 2030 target continues to remain 15 gigawatt of module capacity, or are you upping this target?
Yeah, so by 2030, we want to, as per our October announcement, we are doing 10 gigawatt of module. Right now, we are at 4, so 6 we will add. We are adding 10 gigawatt of cell. So solar cell manufacturing is a very critical and very important right now. So we have collaborated with ISC Constance, Germany, and they are going to help us in developing our own Indianized back contact cells. So we want to produce TOPCon and back contact cells with the 10 gigawatt of capacity, which we want to achieve by 2030. Our first rollout will be by the end of, mid or somewhere, September 27, 2.2 gigawatt will start. We are also getting into the wafer and ingot. So this is a complete backward integration that we have planned, module, cell and wafer and ingot. And that is what the government of India wants and they are supporting.
Right. And sir, I just wanted to understand on the module prices, how have the prices been? If I'm not wrong, there was a 30% increase in the module prices. If you could, highlight us on that.
Yeah, so there is an increase in the price because currently the situation for the logistics and everything is so difficult. The shipping cost from China or Southeast Asian countries has increased. In fact, we used to book containers at anything between $600 to $900, which we are now getting those containers at $3,500 to $3,900. So I think that's a major impact on our pricing. Apart from that, the raw material cost has also increased, and that has actually impacted the module price. But this is a temporary situation. I am sure that once the things get settled down, price will come down again in a normal range.
And for the capex plan that you have outlined, how are you planning to fund that?
So we have, we are raising fund right now. We are trying to raise the structured debt to initiate this project, and then we do have a QIP plan, and of course we will most of the fund, that is 70% of the fund will come from the bankers.
Okay.
It will be the debt.
And equity, how much are you planning to raise? And any timelines if you could share on that?
Yeah, so immediately, in fact, we are, this is 2.2 gigawatt cell line. The total capex is around 1,100 crore, out of which we are raising 300 crore capex, equity, and the balance 700 to 800 crore we will raise through banks.
Sir, you were just mentioning about the raw material pricing pressure that you have envisaged. Will that impact your margins at least in the few quarters? I mean, maybe in Q4 or Q1 of FY27?
See, this business is very open and it's very dynamic. So impact on margin is not that much. In fact, because all this kind of surprises in a pricing and a fluctuation, in most of the orders, it is passed on to the client. So basically, in our contract, we always align like the dollar rate and the change in law kind of things that we align with them. And most of the time, it is always an open book contract. So, we have much immunity from this kind of fluctuation.
Right. I got that view. Well, thank you so much, Mr. Shah, for joining in and having a conversation with us. All the best for the business.
Thank you so much. Yeah.
Thank you. Well, this was Solex Energy expecting 5,000 crores of revenue in FY28. But with that, let us also invite the guest for our show, Avinash Gorakshakhar, who is the Director Research at Profit Mart Securities. Avinash, welcome at NDTV Profit. Well, you heard the management of Solex Energy. What's your view when it comes to this counter?
No, I think clearly the company seems well positioned in terms of their order book and execution. I think, I think clearly in terms of the operational viability and the kind of opportunity for the kind of business they are in, I would say that even FY27 should be significantly better. But I think markets would like to know, what kind of execution they continue, because a 4,000 crore order book. But I think at the end of the day, it is all about execution. So I think markets would like to see Q4 numbers and the commentary from the management side, and then I think how they ramp up the business going forward is something very crucial. At current levels, my sense is that investors can hold on. Fresh buying is definitely not advisable.
Before we move on to our next small cap stock, let's get insured to understand how things are shaping up in the FNO side.
Well, Soumya, there is a little bit of uncertainty coming in, and remember there's a Sensex expiry at play, and there's an uncertainty especially regarding the ceasefire, and that's why you're seeing reds actually coming up. And you see Interglobe Aviation, L&T, Kotak Mahindra Bank, largely banking is seeing a big sell-off. On the other hand, defense names, NTPC and power grid stocks are trying to hold their levels in green. But yes, the correction is on, and largely Sensex is down, and BankX is having much more weaker technical setup as well. Let's see the stocks which should be in focus right now. And there is definitely a lot of volatility coming in. Angel One, that stock is up 5%. Cochin Shipyard, that's up 3%. That's why we are seeing some action in terms of long build-up. But looking at the short covering candidates, this includes HAL and BDL. It's a day of defense stocks giving positive views. But let's look at the overall long unwinding, if there is any. There is Shriram Finance and RBL Bank. Nothing much to look at here. And then lastly, I'd like to point out the overall big short build-up, and that's happening in Uno Minda and Crompton Greaves. it seems like the sell-off is happening in the largely in the large cap space, but definitely the broader markets are still better as compared to Bankex and Sensex.
Well, thank you, Sharath, for that. Let's get in now part to understand what could have interested Mr. Sunil Singhania to buy stake from an open market in JTL Industries. What does this company do? Let's get in part with more details.
Thanks a lot, Somit. So, JTL manufactures and supplies steel tubes, pipes and other allied products. The company not only has a pan-India presence, but they also export to over 20 countries in across 5 continents. If we have a look at the stock performance, then the stock has gained over 30% in the last 2 days and is up almost 40% in the last 5 days. The main reason behind that is because Bacchus Asset Manager Private Limited, which is owned by the renowned fund manager Sunil Singhania, has bought stake in the company. They did a bulk deal yesterday in which they bought around 97 lakh shares in the company at an average price of around 54 rupees per share. If we have a look at the management commentary, then we can see that management is expecting sales volumes growth of around 15 to 20% in FY26. Their EBITDA per ton is expected to grow thanks to better capacity utilization and also the increasing share of value-added products. JTL is expecting the proportion of value-added products to increase to around 40% in their overall sales. The management is also aiming to improve their ROCE to the levels of around 25% by FY27. So with the Q4 numbers coming up, let's see how it goes for the company.
Right. Avinash, any view on JTL Industries at the current valuations? Should retail investors also look to enter this counter?
I think my sense is, normally when these kind of, stocks are purchased by any large fund or any investment, kind of expert, there is a kind of a big kind of circuit on the stock. So my sense is, yes, the company should do well in FY25, even the current 26, and even the current year looks quite encouraging. But I think, when the stock has moved up, Somit, by almost 12-13% in one day, it is definitely advisable to actually, look at this counter once it cools off. The medium to long-term prospects are good, but I would suggest, buying on dips, maybe not at the current level.
Right. Well, moving on, next stock which is in focus is Venus Pipes and Tubes. Let's see what that stock is doing in trade. The stock is, of course, buzzing, is up almost 6%. Well, is up 25% in the last 5 sessions. But what's the reason behind this buzz? Let us call Jasmeet to give us all details.
Well, Varsha, thank you for that. As rightly said, the stock has been buzzing over the last 4 to 5 days and is up to 25%. Let's quickly understand what does the company do. Well, company operates as a stainless steel manufacturer as well as exporter and also exports to various countries like US, Europe and UK. Now, in terms of the other key businesses, company does serve to industries like semiconductor, pharma and other industries as well. Now, in terms of the stock performance, the stock is down 9% over last 6 months. But if you look at over last 1 year, the stock has stayed flat. Now, if you look at the 9-month stock performance, we do see a good growth coming in. The revenue is up nearly 23% over the last 9-month period and already touched 90% mark of the FY25 revenue. So a good Q4 can surplus the FY25 revenue, what we can expect. Now, in terms of the EBITDA saw an uptick of 12% and the margins are currently 16.3%. In terms of the key operation highlight, we do make a note that the value-added product, which generally helps with the margin expansion, nearly contributes 18 to 20% at current rate, and the management expects to double down and reach 30 to 40% of the overall revenue going ahead, which will help overall margin expand and revenue grow as well. In terms of other key highlight, the order book stands at 470 odd crores as of the 9th month of FY26, and if you look at the domestic revenue split, the domestic revenue is doing really well for the company, which is nearly up 43% on YY basis. So all of you do see good set of numbers for the company, but very much out of the Q4 pans out going ahead.
Right. Thank you so much, Jasmeet, for all the details. Avinash, what's your view when it comes to Venus Pipes, considering company wants to double down its value-added contribution? And if not Venus Pipe, which all other companies, would you prefer when it comes to this segment?
No, I think my sense is, I think we like to wait for the numbers. These are plans which the management has put out. I think execution is important. I think the markets will be looking at, how these numbers actually shape up. What is the percentage of value added post the March quarter? I think that is the reason the stock has underperformed for a long time. So I think, yes, I think the intention is right, but I think the market should obviously wait for a couple of quarters before they see the changes in these numbers. But I think, other comparable companies which look interesting are possibly something like a Hariom Pipes or maybe a Maharashtra Seamless. The pipe sector, according to us, is definitely growing very rapidly, and we could see a very strong volume growth. I think in terms of the raw material availability, also all these companies are well positioned. So we'll prefer to wait and watch for Venus Pipes. I think definitely a good business, but I think at least the next 2 quarters are critically important. The markets would like to see what kind of value addition the company makes and how this impacts the profitability margins. So it's a hold from our side.
Right. The next stock in focus is Anthony West. The stock is up nearly 13%, in 17% right now in trade. Now, recently the company announced that 750 million yen of investment is going to come in 2 of its subsidiaries. How does it help the company? Let's get in Puneet to understand the same.
Well, thank you for that. Stocks up 25 to 30% just in the last 5 days and up 17% today's move on the back of news flow, as you rightly mentioned. JFE Engineering will be investing 750 yen, as you rightly mentioned. This will be the first FDI coming in from Japan in the waste to energy sector and coming into Anthony Waste at this point of time. So it's a big move. They've also highlighted that JFE will be taking around a 25% stake, while the rest 75 will be held by Anthony Waste, and specifically the total projected revenue from this deal will be almost 3,200 crores is what the company has mentioned over, of course, a 20-year period. Consensus includes both these particular projects. Now, this is expected to have commercial production from Q1 of FY29, so some time away though, but expected big numbers as mentioned. Now, when you also look at the 9-month picture for Anthony Waste stocks, given a decent performance, but revenue is up 11%, but the EBITDA is only up 4%, and with the profits largely flat at 54 crores. So when you take a more nuanced view, you will see the employee cost has actually inched up quite a bit, up 17% versus a revenue growth of 11%, and the profit is up and other expenses are up 16% as well. So hence, continuing to see pressure in terms of flat profitability. That will be something to watch in Q4, but that's the picture on Anthony Waste as of now.
Right. Avinash, how are you looking at this counter Anthony Waste? As Puneet was mentioning that higher revenues are not translating into earnings growth for this counter.
No, I think, Swamit, my sense is, the order book is good, the top line visibility is good, but I think, as you rightly mentioned, the operating profitability continues to be under pressure. I think, this project also, which Puneet mentioned, is going to actually take off in FY29. So it's a far amount of time, which is the market would have to wait for this. So I think, we'll like to wait for the Q4 numbers and see how the company has managed to, improve its operating profitability. And obviously, what kind of cash flow generation the company has done, because the kind of business the company is, it takes a long time for receivables to get realized into actual cash flow terms. So prefer to wait for the Q4 numbers. Those who have the stock can hold on. Fresh buying advisable only after Q4 numbers are out.
Right. Well, thank you so much, Avinash, for joining in and having a conversation with us. It was a pleasure to have you on the show. Thank you so much. Well, moving on, other stock buzzing in trade is Gaudium IVF. We spoke to the management who say an AI integration will be a key growth driver for the company. Do listen into that bite.
On the 1st of April, we launched the AI tools Sid and Erica for the first time in this country. The launch was done by Shri Nitin Gadgil. And so with this, we have done another industry first, I could say, that the Sid and Erica are 2 tools with which we have brought AI inside the human IVF lab. So what will happen is that with the use of these tools, we are going to increase the success rate at the very first cycle. So, when you increase success rate or at the very first cycle, the cost burden on the patient decreases, more patients get pregnant faster, more word of mouth generates, and hence more business generates. That's the whole idea. So it is really going to increase our numbers.
Well, with that, guys, it's time to wrap this edition of Small Cap Bazaar. Stay tuned to NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversation.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa, 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 whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's happening? How?
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's happening.
Join me, Raisha Sehgal, on Prime 5 only on NDTV 24/7.
Sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu.
Hello, welcome. You're watching Ask Profit, the afternoon edition. I'm Mahima Vacharani, with me is Puneet Zaveri. The Nifty, of course, is now almost 200 points, more than 200 points of a downtick is what we're seeing, down by about 0.9%, and VIX is also slightly spiked, up 4% now. You know, it's around that 20 odd levels, but still has spiked by around almost 5% as we speak. The Bank Nifty is also trading with cuts of about 1.6 odd% in that 54,800 odd levels. Let's try to pull up the Nifty 50 heat map to see as to what are the counters that are putting pressure. Geo Financial now the top loser on the Nifty, followed by Interglobe Aviation down almost 3%. For both of these counters. L&T also down by about 2.7%. Shriram Finance now taking a knock of around 2.7%. Kotak Mahindra Bank, Eternal, HDFC and HDFC Life, all of these seeing downtick of 2% each. But on the flip side, you have Hindalco still at least seeing that gains for 3 odd%. Dr. Reddy's seeing gains of about 1.7 odd%. BEL, Max Health, NTPC, etc. are also on this on the green side. Let's try to pull up the sectoral heat map and see as to whether things have changed there in the last half an hour. Not much. Your defense is still, seeing an upside of around 1.7 odd%. Metal also up 1%. But in fact, private banks have slipped quite a bit, down 1.7%, and you have your PSU banks also continuing to be under pressure, down by about 1.1 odd %. Let's quickly pull up the advanced decline ratio to see as to how that is looking like right now, because your mid cap 150 and the small cap 250 slightly, they're almost flat or in the green, but slightly more than that even Stevens ratio now.
Yeah, and it's converged 3 times in today's trading session, the advanced decline ratio, and then yet again. So largely we are recovering essentially from what we've seen yesterday, a stellar session. 23,800 has also been broken, so we don't have any kind of support level yet. So probably until the results season has an impact, and it'll start soon today itself with TCS coming out with numbers, we'll start to see that stock specific action then. But let me welcome in Gaurang Shah, Senior Vice President of Georgette Investment. He's on the fundamental side for Ask Profit, the afternoon edition. Gaurang, good afternoon, good speaking to you again. Let me just go across, take the first query right away and pose the question and take from viewers. This one's coming in, in terms of what we've seen consistently in terms of people and investors, viewers identifying these stocks like LIC. Now, our viewer is asking this question that, is it advisable to enter this counter right now? Gaurang, what would you suggest, to our viewer? Is it a good time to enter this stock now? Because, there is a lot of uncertainty, most certainly before the results season starts, but what's your view?
Thank you, Puneet, for having me on the show this afternoon. Good afternoon to all the viewers of NDTV Profit, to Mahima and to you as well. Thank you so much. A small disclosure, Puneet, all recommendations that I'll be sharing with you this afternoon on your show, they are part of our fundamental research team recommendations from a long-term point of view. Our company, Georgette, or myself, we do not have any kind of personal investments, no financial interest, no conflict of interest. But we share similar advice with our clients. They might have their investment interest. So I think, Puneet, it will be more advisable to look at life insurance related companies. Primary reason is because of the volatility in the market and the direct impact on market and certain vulnerable sectors which are exposed to crude oil derivatives because of the volatility of the crude oil prices. Services industry basically by and large remains less affected by the volatility of crude oil prices and of course the geopolitical situation. We have positive coverage as a disclosure on LIC, HDFC Life, ICICI Prudential and SBI Life. And LIC happens to be one of the largest player in the life insurance category. From a long-term point of view, we have a positive coverage on LIC. But my humble request is, don't put all your money at one time. Start at current levels and buy on dips should be the strategy.
All right, so that's the view coming in on LIC. I think we've got our next caller, if I'm not wrong. Sujan is calling us from Bengaluru. Sujan, very good afternoon to you. What's your query about?
Hi, good afternoon. Thanks for taking the call. My question was about HG Infra. I was reading the management statement about the cash flow. It's still negative. So my question was, is this the right time to enter HG Infra?
Okay.
For long term.
Okay. Sujan, got your question. I'll take this up with Gaurang. And Gaurang, HG Infra, what's the view like?
Well, hi, Mahima. Good afternoon to you. Positive coverage over here amongst the small mid-cap category. One thing that viewers and investors need to be a little bit careful and cautious about small and mid-cap sector is look at the company's fundamentals rather than looking at the price of the stock. From a long-term point of view, we have a positive coverage on HG Infra. Strategy should be the same. Start at current levels and add on dips.
All right, so that's the view coming in on HG Infra. The next one that we have is coming in on Samvardhana Motherson. Our viewer is looking at a slightly short-term view, but Gaurang, will you be in a position to give your view on this one?
Yes, I'm changing.
Okay.
I think we have some technical issue.
We'll get back, Gaurang, but it's been a very interesting one, Samvardhana Motherson, in that sense, because we've consistently seen for this counter that earnings have of course been volatile, and because of commodity cost pressure, you might see some margin impact as well. But very interestingly, the fact that in terms of Q4 estimates, you are expecting margins to rise for the first time in the last few quarters, despite the copper price volatility.
Right.
So you will continue to monitor Samvardhana Motherson in that aspect, because of course, very global in nature, multiple country revenue streams coming in from all those regions as well. So you will start to see that impact coming. But quarter four is according to Nomura, actually is going to be the stronger quarters for Samvardhana Motherson at this point of time. And I think for the broader auto pack too, you are expecting some margin hit, but within that stream of companies where you've seen a margin hit come in, you do see for Samvardhana there. But let me actually also welcome in at this point of time Ajit Mishra of Relicare Broking. Ajit, good afternoon. I hope I'm audible to you. Just let me actually just pose you the first question on what we've been discussing on Samvardhana Motherson, because it's been one of the counters that has been volatile, but one that retail investors continue to put their favor on. What's your view in the short term for this counter?
Yeah, good afternoon, Puneet. So, Puneet, what we are seeing that from the last couple of sessions, the rate sensitive, especially the auto pack ancillary space, also witnessing a rebound. And Motherson, specifically, if you see from the longer duration, means on the monthly charts, the last three major lows, the kind of trend line that this stock has been maintaining. We've retested the same fourth time this time, after retracing from its record highs. And again, we are seeing a rebound. So the overall bias looks positive, when it comes to the medium to long term aspect. Short term also, we believe that this positive momentum is here to stay, considering the stock has already reclaimed all the major averages. And the volume action is also conducive. So probably we may see a bit of a consolidation every now and then. But gradually, the stock has potential to retest its record highs around 138, 140. So one can definitely look for long positions even at current levels with a 108 as a stop.
Okay, all right. So that's the view coming in on Samvardhana Motherson. The next one is also for you, Ajit, and this is coming in from Sunil, who's writing us from Pune. He's asking about BEL. He's got 368 shares at the levels of 4442. Wants to know the short-term target and stop loss for this particular counter. Your view on the charts?
So, Maima, when it comes to the defense space, BEL has been among the top performing names. Means, though we have seen marginal retracement from the record highs, but comparatively, the kind of retracement that we have experienced in the other counters, it was way stronger in comparison to the others. Anyways, the stock has reclaimed the short-term averages, and we are inching towards the record highs. He has bought it at current levels, so he can continue to hold his position. 420 now is the immediate base since it's a high beta counter. So that is the area basically where one can maintain as a stop. And gradually the stock has potential to inch toward 475, 480. So he can continue to stay put with the given levels.
Got the view, Ajit. But let's go across and take our next question coming in from Suman from Kolkata. He's holding Titan, bought at 3441. Stock's been in focus on the back of a strong quarterly update as well, which Mahima has covered. And along with that has been with the sea of other companies in the jewelry space that have done well too. Now he also holds Kalyan Jewellers and asking what he should do with this counter for the next 3 to 5 years. Gaurang, I hope I'm audible to you. Any view that you have on Titan as well as on Kalyan? What should Suman do?
First of all, apologies for the wonky Wi-Fi connection. My apologies.
That's all right, Gaurang. Go ahead.
So again, have been positive on Titan for pretty long period of time. And the business update that has come through augurs extremely well. And normally people compare Titan with gems and jewelry. A little bit of more additional input from my side, along with gems and jewelry, they've got wristwatches. They took over a high-end premium platinum company called Carrot Lane a couple of years back. Then they, I think, took over Didamas in Dubai. They are into eye care, wristwatches, perfumes, accessories, backpack. Contribution comes in from all the directions quite smartly. My sense is that if you have a 3 to 5 year plus kind of time horizon, first of all, please hold on to it. Second is, whenever you get dips and if you have investable amount, add on to it from a long-term point of view.
So that's the view coming in on Titan. The next question is on Sanofi India. Our viewer wants to know if a fresh buy at the current levels makes sense or not. Ajit, your view on the charts on this one?
So, Mahima, very sharp correction means from 7,200 to 3,200 mark. So it's been almost like a vertical decline post this phenomenal surge in the past. So yes, it seems like that short-term bias looks positive, means the stock is making an attempt to reclaim its short-term averages, but it's just a rebound trade. It's not a directional trade where we see chances of trend reversal yet. So in case if the view is very short-term with stop at 3,300, one can look for long position with 3650 as a target.
Got the view, Ajit. The next question, that's coming in now. It is on, from Sriram Raghuraman from Chennai. He's holding into Aarti Pharma Labs at an average price of 405. Gaurang, do you have any coverage on this counter? Any view that you can offer Sriram at this point of time for the long term?
So Puneet, we used to cover Aarti Pharma, Aarti Drugs couple of months back. Our targets were in place, so we have removed the coverage. But I think the entire pharma pack looks quite exciting, despite the fact that on branded drugs, there has been an elevated tariff level, which the statement was made by President Trump. But I think Indian pharma companies have less to fear. A large portion of our export in terms of pharma to the US is in form of APIs, generics, biosimilar, and CDMOs. We are positive on the pharma. Like I said, we used to cover Aarti some time back. Targets were in place. We removed the cover, but it's a strong company. I won't go into specifics.
Got that view, Gaurang. But the next question now coming in, it's from Ekambarai, who is a regular viewer of the show. He wants to know a quick view and continuing with the pharma space as well. Gaurang, actually on Divis and Loris is what his question is. He wants to know if it makes sense now to buy specific plays or go for a pharma ETF. Would your view be on these specific players, or buying the pack as a whole makes more sense to you?
Well, I think if you go for a thematic fund, you leave all the responsibilities on the fund manager and his team, right? And if you want to choose something yourself directly into stock market, identifying opportunity, then let me help him with a couple of names. Cipla, Sun Pharma, Aurobindo Pharma, Natco Pharma, Gland Pharma. You mentioned about Divis. We have a whole recommendation over there. Glenmark Pharma. These are some of the names on which we have a fundamental positive coverage. So if you are able to identify and do due diligence in your investment, then you go directly. And if you don't have the time to do all this, then simply pick up a strong performing thematic pharma fund and make your investments.
Okay, all right. So that's the view coming in on the pharma space, and continuing, I think, with that space. Pradeep is calling us from Vijayawada, who I think has a query on Cenorus Pharmaceuticals. Pradeep, hi, good afternoon to you. What's your query about? Is it about Cenorus Pharmaceuticals?
Yes. I have my purchase price is 811, and I wanted to hold it for 1 year.
Okay.
I want a fundamental view.
Okay. Gaurang, you heard that. Cenorus Pharma, any particular view on this one?
I'm sorry, Mahima, I don't track this one. I'll have to give it a pass.
No worries. Ajit, your view on the charts on this one?
So Mahima, we have limited data, but still, as per the available information, what it indicates is that the trend is up. Means of late there was marginal retracement from the record highs, but the overall buoyancy is intact. So when it comes to the pharma bag, we still have like handful of names like Sun Pharma, Lupin, Dr. Reddy's, Divis, which are holding strong. So Cenorus is also largely aligned with this move. So this is something which is positive. So you can continue to stay put. Broadly 720, 700, that's the base area. Not only for the short term, but from the medium to long term perspective, which it should hold to maintain this overall positive bias.
Got the view, Ajit. The next question that's coming in is on Rajesh Exports, a space that was in focus before, of course, the wars and all, because we were focusing on the India-US FTA. And Sanjay from Bangalore actually holds shares at 210, asking what he should do with his 100 shares now. Any view that you can offer, Ajit, on this one?
See, Rajesh Exports, the stock now, I guess, is into B to Z category, and the kind of value erosion that the stock has experienced in the recent years, I feel the prudent approach is to stay away. In case if you have any position, keep on trading your stop losses on every rise. Means in case by any chance it reaches to around 120-25 levels, you can consider exiting his position and taking money off the table.
Sorry, Ajit, did you highlight that a B to Z category? Sorry, what were you referring to?
Yeah, so basically that is what I'm seeing also, Puneet, that BZ is the symbol attached to this counter now. So
Got
earlier
it.
it was normal trading, and now it's BZ, which is attached to this.
I wasn't aware of that, Ajit. Got your view, and thanks so much for that. Let me also take the next question. Actually, it's on Dixon Tech, and has been a counter that we've been focusing on. A lot of questions coming in over the last few weeks. Actually, our viewer has accumulated shares at 8,100. So he might have done that before we started seeing this correction from almost 18,000 rupees. He's saying that 25% of his portfolio actually is Dixon Tech. What would you suggest here, Gaurang? Because he's been holding on to this counter since 2023 is what he's highlighted. So must be very disappointed with the correction of almost 50% from the highs. But should he continue to hold? What would be your view now?
The moral of the story, Puneet, is don't have greed in stock market, because you will end up making losses even in your profitable investments, right? You got in at 8,100, 200, you saw 18,000 and you were still wondering what to do.
Yeah.
So greed is something that you should avoid in stock market, because once the greed comes in, most of your profitable investments also go haywire. And now this company happens to be one of the largest player in the entire EMS segment. We are positive on it. Very recently, we read in the news and we saw in the news that Prime Minister has inaugurated certain facilities in Gujarat, Sanand, if I'm not mistaken. And the PLI scheme augurs extremely well for the sector. I won't go into specifics in terms of buy, sell and hold, but it's a strong company, largest player. We have positive coverage on Amber Enterprises, PG Electroplast and CG Power. These companies are also contributing to a great extent for the entire EMS, chip, semiconductor, PCBs, and the Atmanirbhar Bharat theme that the government has laid out.
Okay, all right, it's time for our rapid fire round. Gaurang as well as Ajit, you both know the drill. Try to keep your answers as short as possible. The first one is coming on the defense pack. Raj wants to know as to what counter can he go ahead and buy as per valuation comfort. Gaurang, any particular counter that you like in the space?
Valuation is a difficult proposition, right? But yeah, we're positive on BL, MTAR Tech and Mazgaon Docks.
Tata Steel bought at 174 by our viewer Suvi. What should we do, Ajit, with this counter now?
So Puneet, she should continue to hold, because we are seeing traction continuing. So with stop at 195, she can continue to hold our position.
Okay, Zydus Life Sciences, is this the right time to make an entry from a long-term perspective? Bhavani is asking this question. Ajit, your view on the charts?
Yes, can be bought.
PFC bought at 390 by Sunita. Any view here, Gaurang, post the merger, of course, with REC? What should be the strategy?
Well, strong player and contender, and I think the merged entity will augur well. No specifics since we don't have coverage.
Okay, Ola Electric, is this the right time to make an entry? Ajit, your view?
It's prudent that you should consider booking profit in case you have existing position. For fresh entry, 32 should be the strict stop, and around 40 consider to book profit completely.
Lloyd's Metal, Ajit bought at 1230 by Astha. She's asking if it's a good time to sell now.
Yes, she can consider.
50 shares of Dabur bought at 550. Is the fundamental view still intact on this one, is what Anup Mishra is asking. Gaurang, your view on Dabur?
The positive from a long-term point of view, continue to hold.
Somasekhar wants to enter SBI and HDFC Bank. Ajit, is it a good time?
SBI can be considered. HDFC also looks good, but SBI looks comparatively better.
Okay, the next one is on Waaree Energies. Fund shares bought at the levels of 2,400. Hold or exit? Ajit, your view on the charts?
Hold.
Vivek wants to view on Bajaj Finance. Gaurang, he's bought at 915. Any view on the stock now?
Hold, buy on dips, continue to have a long-term view.
IRFC bought at the levels of 200. 2,000 shares what Siva is holding. 6 months view on the charts. Ajit?
Seeing rebound, use recovery to reduce position around 110, 115.
Our viewer Chandrasekhar actually bought into Waaree Energies at the IPO price of 1,500. He's asking Gaurang if he should continue to hold now.
Well, if you are worried about your profits, then you can possibly book some part profits and bring the capital home. Otherwise, you can continue to hold on if you have a long-term point of view. We have a positive coverage.
Okay, RVNL bought at the levels of 28, is that correct? Okay, I think we've taken this query. The
Very
next one is on RIL. Kunal from Indore wants to know if he can continue to hold the 52 shares that he has bought at the level of 1386. Short-term target on this one, Ajit?
So sideways tone is likely. So in case of the view is short term, he may exit.
Birlasoft bought at 500 rupees. Ajit, is it a good time to average? Mallikarjun wants to know if he should hold or sell.
Birlasoft seeing rebound, but upside seems capped, so better exit.
NMDC 8,000 shares bought at the levels of 72. Can I add more from long-term perspective, Gaurang?
You can definitely add on to it, but don't put all your capital into one sector or one stock because that's a risk again. But we have a positive coverage on NMDC.
Vishal Megamart bought at 108 by our viewer Zakir from Dubai. He's holding 1,000 shares. Gaurang, should he continue to hold?
Retail theme is auguring well. We are positive on the sector. Unfortunately, we don't have a specific coverage on Vishal Megamart.
Okay, IRB Infra, is this the right time to make an entry? Archana from Mumbai is asking. Ajit, your view on the charts?
Wait for a close above 24.
Is this the right time to enter the GMR Airports, Ajit?
GMR Airport, yes, can be done with the stop at 90 and 100 to 104 is the target.
The next one coming in on Tarrell bought at 290 very quickly. Ajit, what's your view?
Consolidation likely to continue. Avoid any fresh buying. Existing position 260 stop.
Okay, all right. So that I think brings us to the end of this edition of Rapid Fire as well as Ask Profit. Gaurang as well as Ajit, thank you so much for taking out the time and helping us answer all those stock-rated 100 queries. In fact, we've hit century today. Yeah. Managed to hit century both, of course, combined morning show and
just leave that one question in very conveniently at the
end. But viewers, thank you so much, of course, for tuning in. But do stay tuned because India Market Close is up next.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360.
Very good afternoon. You're watching India Market Close, and it's looking like a bit of an anticlimax, right, to all of the euphoria which took place. And the reason, Alex, I say anticlimax is that there was one school of thought that the ceasefire wouldn't last and you'd have a huge reversal. That hasn't happened either. It's a bit of a, we don't really know where we are kind of situation that you're seeing in the screen, isn't it? About 280 points down, still above the 23,700 mark. Advanced decline ratio, not that adverse.
Yeah.
It's not great, but it's not that adverse. And, you know, the broader markets are not in that much pain either. Pull up the mid cap and the small cap if we can. Keep the bank nifty to one side. That's a whole different story going on over there. But it's flat. Of course, come off the highs of the day, but flat right now. Small cap also not in so much pain as the nifty. This seems to be a heavyweight pain kind of a situation.
Yes, it is Sensex expiry playing out as well, I would think. Pull up the intraday for the Nifty 50 and you will likely see what I'm talking about, right? So it kind of mirrors what you see in the broader markets. We are trading with cuts of about close to 290 points. Remember, we gained about 800 plus points in trade yesterday. So just the top 1/4 being shaved off that. Pull up the Nifty 50 heat map and you will likely see quite a bit of red on the screen because we are at the low point of the day. And then I would like to see the contribution chart because you have Interglobe Aviation, you have Geo Financial Services, Shriram Finance, high beta stock losing a lot of value again when there is selling in the benchmark Nifty 50. Larsen & Toubro ended with gains of 7.5% yesterday, a bit of profit taking coming in there. And you heard the commentators in India Market Open speak about this, about the fact that if in 3 days you've managed to get a 10% gain on a stock, then take some money off the table. However, what's working is the metal pack, aluminium continues to do well. Dr. Reddy's Laboratories, BEL from the defense pack, and a couple of, a smattering of other names. ONGC once again in focus, Tamanna, on account of oil prices once again rising because that fragile truce continues to exist.
In fact, we should pull up Brent as soon as we can because that's really where the entire story comes down to. The question about whether ships are actually passing through the Hormuz, and they aren't really. Simply because Iran is now coming in saying that till there is no stopping of attacks on Lebanon, which were extremely intense from Israel. There's about 250 people who have died. You're still going to have no ships passing through. That's why you have Brent back at above 98. Hence that uneasy kind of a situation. I just want to pull up the sectoral heat map if we can very quickly. And I think IT is going to continue to be in focus. You'll have TCS numbers. Maybe they'll be out at the end of this show at 3:30, just right after market close or maybe a little later. So IT is going to be in focus one way or the other.
0.2%.
It's not too bad. You're seeing it's sort of middle of the path. It's the banks which are hurting. So this is a profit booking kind of a trade.
Seems like it.
Exactly what was working yesterday is not today. Defense is back up and about, but very few stocks in that index. So it's not necessarily giving you a full picture.
And the CPSE, which was actually not a performer yesterday, just about flat. It ended up with a smidge of green. Today it's up and about a percent.
Again, yeah, it would be a few stocks here and there. It's not a very well-populated index. But if I were to look at overall what's been happening, the 5-day gaining streak has clearly been snapped. The Nifty is down over 200 points in trade, but largely range-bound for the last 4 hours. It's been in the range of 23,750 to 23,900. Even volumes are weak. Cash market volumes are down 25 to 30%, likewise for F&O compared to yesterday. From top sectoral losers, Nifty IT is now largely flat in trade. Gains are led by TCS. Remember, their Q4 numbers will be out shortly. And seems like a shift of funds from banking to IT maybe, or a wait and watch for what the TCS numbers bring. Value buying continues in mid and small cap names, and a clear move above 24,000 is required for a further rally towards 24,300 to 24,500. Support at 23,800 is now the critical base. As long as Nifty stays above this, the buy on dips texture remains intact. So we can really hope for that. CA Rudramurthy BV, founder and director of Vachna Investments, with us on the show. Will be speaking shortly to Mayuresh Joshi as well. Welcome to the show. Should I call you Mr. Murthy?
Please go ahead.
Okay. So what Murthy, do you think is going to be sort of the direction for the Nifty from here on? And would you look at buying a Nifty right now?
Tamanna, good afternoon. Thanks for having me in the show. See, first of all, we have to understand the texture of the market is buy on dip market, and definitely it has changed from that sell on rise market. And let me tell you why. Keep aside yesterday's ceasefire and the news which made Nifty go up by 900 points and Sensex go up by 3,000 points. But before that, if you see 2-3 trading session, all the bad news was definitely getting priced in, and markets were opening gap down like 100 points down on Nifty. But when we used to close at the highs of the day or close positive 100 point, 200 point. And then yesterday you saw the big move on ceasefire, whatever came, which was 900 points on Nifty. And let me also tell you, yesterday's move was not because of IT, rather it was because of financials. That clearly told me that yesterday's move was not a dead cat bounce, but it was definitely a reversal of trend. And most important, markets are ignoring the negative war news overall, and markets are definitely considering to move on the upside. But it will not be a V-shape rally, but it will be a U-shape rally. It will take time, and I'm not saying all-time highs will come very soon. But yes, one thing is sure, the market texture has changed from sell on rise to buy on dip market. Now, yesterday having seen a 900 point move on Nifty, today we are seeing some amount of correction, and that is about 300 point, which is 1/3 of yesterday's entire move. Even 50% of correction or even 2/3 correction of yesterday move is still healthy. So I advocate buying on dip. And I will say, if you want to buy Nifty, don't buy here. Wait for another day or two. Positionally, longs can be taken closer to 23,350 to 23,500 zone. So another 200-300 point kind of a correction like today, if I get, I will definitely use that opportunity to buy. And for me, sector-wise, stock-specific-wise, you have a lot of opportunities in this market. This is not a market to short, but this is a market to buy on dip. Buying here, I may not get a great risk-reward, so I will definitely wait on the sideline, wait for those Nifty levels of 23,350 to 23,500 on Nifty spot, and that is the level when one can look at buying with a strict stop loss of 23,200.
Okay, relatively short term, Mr. Rudramurthy, and welcome to Mayuresh Joshi as well, joining us on the program. Good afternoon to the both of you. Just an observation that goes back a few weeks now because of the conflict and the hesitancy to carry over positions over the weekend. And so, is it likely or possible that you will see some short covering coming through in trade tomorrow, where you could see a smattering of green? And will that throw up any opportunities in your opinion, Rudramurthy?
Yeah, definitely, Alex. Tomorrow, if I get another 100-200 point kind of a gap down and we come closer to those Nifty levels of 23,500, yes, that offers to me a wonderful buying opportunity. And let me tell you, especially NBFCs, and even if you see sector-wise, yes, there are a lot of opportunities in PSU banks for me. Even power theme for me looks very, very strong, and a lot of names, whether it is stocks like NTPC or even Power Grid, and even look at stocks like NBFCs where I spoke, stocks like Shriram Finance.
So are those your
L&T,
picks?
all these.
Are those your picks, Mr. Rudramurthy?
Yeah, definitely. Yes, these are sectors which are looking relatively strong to me, and I will look at buying these stocks which I was mentioning.
But if I would ask you to pick two.
Yeah, so if you ask me two stock picks from NBFC, I will look at buying definitely L&T Finance, and the next will be Bajaj Finance. So these two stocks from NBFC looks good. So I am bullish on market, but I'm only telling you, I won't buy here. I will wait for Nifty to come closer to 23,350 to 23,500 zone, which is another 200-300 point kind of a correction, and that offers a great risk reward. At those levels, I will look at these sectors and stocks which I was mentioning.
Okay, Murthy, stay on with us. I'm going to Mayuresh Joshi, who's joining us as well. Mayuresh, very good afternoon to you. Do you think that this is just a pause after the frenetic buying that came in yesterday? Or would you look at a sell-on rise where profits have been made?
Afternoon, Tamanna. Afternoon, Alex. I think two things. One, I think in terms of the positioning itself, I think it's still very fluid and transitory as far as geopolitics and the entire Middle East crisis unfolds itself, specifically over the next few days. Again, in terms of expectations of how earnings will probably play out, Q4 might have a partial impact, but I think a large part of the analyst community is of the belief that Q1 is where the larger impact and the secondary order impacts might be felt. If this gets elongated, I think all assumptions which were expected to come through in terms of earnings growth for FY 27-28, they probably get curtailed to a large extent. And therefore, I think sectors which will remain relatively stronger in such a volatile macro environment. Therefore, from an earnings or a micro perspective, in terms of the industry classification that we are looking out at markets with India, I think pharma still remains a key focal area. Power and power ecosystem probably remains a key focal area as well. Mining stocks probably remain a little bit immune in terms of whatever is happening in the Middle East as we speak, with domestic demand expected to remain relatively stronger compared to the rest of the world in terms of how inflation is expected to play out. And last but not the least, I think a little bit more selective in terms of the broad-based themes. So our take is that the markets might respond in terms of all these factors put together, and therefore focusing on these sectors, at least as far as Q4 and Q1 are concerned, is something that can be carried in the portfolios. Beyond Q1, as things unfold, I think a large part of the other sectors might start coming into focus, and therefore I think in our recent report we've borrowed a few lines from the blockbuster movie Dhurandhar. Our own sense is that Hausla Rakho, keep your capital protected, and then be selective in terms of buying into the markets as we speak, or badla, when the time comes, your time for revenge buying will come.
Oh, wow. That's quite something, Mayuresh. Filhal portfolio ke saath badla chal raha hai. What about that? That's where the pain really is. No, so I'm going to ask you about TCS and some of the auto pack as well specifically, but I must focus on what is moving today. And along with Ather Energy, Ola Electric is a top gainer on the NSE 500. Nearly 20% up, bucking all trends. Now, what really is going on with Ola? Puneet is joining us for more. Puneet, any latest announcements as well, which are sort of pushing it through?
Well, most certainly, I think they have increased the battery technology at this point of time, and that's been one of the key announcements. But looking at the numbers, a 15 to 20% move, 19% now as we speak. But when you look at the lows also, it's been up 35 to 40% just in the last 5 days. So from a low of almost 22.8, the stock hit, it's up 53% from that level itself just in the last month or so. So it's been a stellar run for this stock. And over the last 3 days has seen the up move. Now, one of the bigger updates was that, they've announced their readiness for indigenous LFP cell battery technologies. They were only in NMC earlier, which is the older technologies for batteries in the EV scooters. So they have transitioned into LFP as well, as the company has mentioned. They've also secured a PLI for their Roadster X Plus, which is of course the motorcycle coming already launched. And when you get the PLI, of course, that brings a big boost to margins also. So it's important. And thirdly, just announced on 1st of April, sales almost grew 3x in the month of March versus almost 3,900 units in the month of February. So it's been a stellar run. Of course, for the whole year, it's still down 40% for FY 26, and that's one of the key concerns. Let's look at the whole year also, because while this has been exuberant in the recent time frame, look at this chart. It gives you a perspective of the last 1 year for Ola Electric. TVS Motors sales are up 44%. For all the players, it's up between 20 and 80% for the likes of Ather Energy. Ola Electric reported a 52% decline. So while the recent exuberance has been strong, not to forget FY26 was a completely washout year for Ola Electric also. Brokerages have also largely cut their target prices through the last quarter. So we have 0 buy ratings as of now, and roughly around 6 brokerages that continue to maintain a sell rating at this point of time. And when you look at the target prices also, HSBC is the most bearish with a target price of just 20 rupees. So probably could see some upgrade now, or at least upside there. But most of them have largely been very bearish on the stock given the weak sales performance as well. Finally, what is it that you investors have to watch out for as well? First has to be that the company has been claiming 80% serviceability on the same day itself. The update of that in quarter 4 will be something to watch. Point number 2, of course, the price of Roadster, given that Eicher is coming out with the Flying Flea, which is its EV motorcycle on April 10th. So competition will intensify. And the third and the final point, free cash flow, which has largely been negative over the last 3 quarters, is expected to be down as well in quarter 4. So that will be key. But revenue expectations of just 370 crores, down 38% for is the estimate for quarter 4. So recent exuberance definitely given, but a lot to be mindful for investors, especially in the long term.
Okay, got it. So pretty well put there. Mayuresh, I wonder what you thought about that analysis. Stock at the high point of the day, close to 20% higher. It must be said, though, that it's bouncing off a low base. There was tremendous value destruction that took place in the run-up to today and yesterday when the stock was also higher. So are the prospects good?
So Alex, I think Puneet has put it very, very well. I think a very comprehensive review. But 2 things. I think one, in terms of the low base itself and a plethora of issues that Ola had to probably go through, both from a regulatory perspective, from a dealer stroke servicing perspective as well. And that is what probably marred the sales of Ola, a large part of that in the last financial year. Obviously, on that low base, you're going to see the kind of numbers that Ola has produced. And therefore, I think the kind of reaction that is coming through is both from a perspective of expectations of better and stable numbers going forward, and a large part of the price damage actually done. But I think 2 perspectives. One, I think in terms of the larger macro environment, when you're probably looking at more launches expected to come through, not just by Eicher that Puneet just mentioned, but even Hero on the Reva platform. You've got Bajaj, you've got TVS on their platform as well, which are going to come out with newer models with transparent EV skills. And therefore, I think when you're probably navigating, wading through a large part of supply chain issues, specifically in terms of the geopolitical mess that we're probably seeing, I think the larger players are far more attuned in terms of both their ability to price their products depending on the market situation, to manage their dealers and distributors, to manage their diverse supply chains, and the after sales as well, which makes us believe that a large part of the price damage and the kind of numbers on the low base is prompting the kind of price action on the stock. But it's still safer to probably stay with the leadership stocks like TVS, Hero might continue to do that.
Okay, all right. I want to shift gears and talk about IT. And this is obviously in focus on account of budget modernization and rising AI disruption, but also obviously on account of the presentation of TCS results. Just a check on the space is warranted. So therefore, let me bring Jasmeet in to tell us more about what's occurring right now. Jasmeet?
Well, Alex, thank you for that. Today we have seen in trade the IT be under pressure. So here are the couple of reasons why we see IT under pressure, though we did see a good rally in IT coming up from the month of March. Now, if you look at the overall survey of the budget coming in CY27, that's this current year, we do note that the overall budget have remained steady. The growth is only 3 to 4%, where the over 4% growth is the average, but the growth are not lower, but at a steadier 3 to 4% phase. While we also make a note that the overall US budget has been increased, but the Europe still remains a weak sector, overall weak continent per se. So that's something we should be focused in the overall commentary of Q4 as well, of how does the Euro business pans out for the company. Well, secondly, the overall budget moderation is seen in a couple of verticals. That is, one is the financial sector, the second one is the retail sector. IT segment altogether has major focus when it comes to BFSI, and any modernization financial services will directly hurt the earnings and the margin for the IT pack. Now, here are a list of companies with the highest exposure to BFSI. While the first one is Emphasis, which has really 61% of of exposure when you look at the BFSI. The second one is Coforge, then we have Hexaware, TCS at 38% and Wipro at 34%. Well, now here are the list of companies which have highest exposure to retail segment as well. Something like a Coforge at 25%, Wipro at 19%, TCS at 15% and Infosys again 11%. So we do see companies like Coforge and TCS have major expansion, major exposure when we talk about the BFSI and retail segment, which is something to watch out for. And now the second reason why the IT stocks have been under pressure is the launch of the new AI tool by Anthropic, where they launched the strongest tool so far which can automate a lot of coding work. That's why we see the pressure on the IT stocks, but it's also something to note that a lot of IT players have been collaborating and doing strategic partnership with this AI companies, where Infosys recently announced the collaboration with Anthropic where they would automate the systems. So the overall impact can be negligible, but still something to watch out for going ahead.
Okay, well put, Jasmeet, but just stay on with us, because the other one in focus, of course, is TCS. You've told us about IT stocks at large, but having said that, TCS has held up pretty well, nearly 1% up now, and this comes just ahead of its Q4 numbers, which will be announced in a bit from now. What are we expecting?
Well, thank you, Tamanna. If you look at TCS, we expect TCS to report the strongest Q4 revenue growth compared to top 5 IT firms, where the revenue growth, though it's a small percent, but still the strongest compared to previous quarter as well. Expected to come at 2.3%. When you look at the overall EBIT and EBIT margin, they are expected to come in the same line. But the net profit is something which can see an uptick of 25%. That is because of the low base in the previous quarter, which we saw due to the one-time labor code impact. Now, in terms of the key commentary, that will be a key focus in terms of the overall con call, would be the CC growth. We expect a CC growth to be between 0.8 to 1.5%, and this growth, what expectation are, is the highest in last 4 quarters. So we see a reversal coming in terms of the overall growth as well. So commentary remains a key. The second one would be the overall acquisition. The acquisition expected to contribute nearly 30 to 40 BPS in this particular growth. And what are the management's plan to further acquire more entities, or again stick to the old narrative to return back the 80% wealth back to shareholders will be something to watch out for. Thirdly would be the overall buyback scenario. Though with the new rule change in the buyback, so will the company opt for new buyback where they start buying their own shares in open market, will be a key focus as well. While thirdly will be the overall commentary on the data center business, where they moved in the Q1 as they announced to move into data center business. So commentary on that, of how the progress is going so far and how much of it will be for the captive use and for the third party use. While lastly will be on the AI revenue, of course. The AI revenue saw a good jump in the previous quarter, but so wait and watch how does the AI revenue pans out in the Q4 as well. So all in all, we do expect good numbers, but the commentary remains the key.
Okay, commentary remains the key. Mayuresh, what are you expecting from IT? It's almost, as if IT has got a bit of a relief, I would say, because now no one's really talking about whether they're ready for AI, not ready for AI. There's so many other problems in the world right now. And if you look at the problems coming in from high crude prices or a falling rupee, at least IT is not as impacted, or it's not as adverse for them. Having said that, what are you expecting from TCS?
You're absolutely right, Taman. And specifically in the last month's fall, I think the sector did nothing, which is also a huge positive, and all sectors were getting beaten down. Obviously, I think from a market positioning perspective, I think the worst in terms of price damage is largely done with for the sector as a whole. Unless there are a plethora of announcements as far as AI is concerned over the next few weeks and months, I think that will create sentimental damage as far as the price impact is concerned for the sector and particular stocks within the sector itself. But a large part of the structural price damage is largely behind us. Now, to the extent of commentaries expected to come through, I think a large part of those commentaries where analysts would be focusing upon would be pricing related issues, whether you're probably seeing any element of pricing challenges happening, whether it's North America or Europe, and in all sectors that are probably concerned, whether it's BFSI, retail, manufacturing, as we go ahead. The second element is the volume or the contract or the TCV. How much is the TCV actually expected to come through? Or is there some element of delayed or deferment happening, specifically with large clients in North America in all these respective sectors itself? The third element, obviously, I think with AI disruption is what kind of strides are these companies expected to make, whether it's organic or inorganic, and whether they're trying to create some sort of an ecosystem where at least the application layer in terms of the overall AI substack is something that they can give in terms of fulfillment to the clients on top of the platforms that are already being generated in the Western world. So I think all these things need to get answered. To answer your question, a large part of the price damage is largely
Okay. Murthy, quick view on charts on TCS? at current levels and the trends that they're showing?
See, definitely IT as a pack looks relatively stronger and most of the price damage is already taken. So I feel yes, at current market price, if you are buying, look at targets of around 2,750 on TCS and one can have a stop loss of 2,500 for the long call. But if you give me a blanket permission and pick two stocks from IT as a sector, for me, a lot of strength is relatively seen in HCL Technology as well as Tech Mahindra. So these two looks very strong on chart. So given an option to pick any stocks from IT as a sector, I will look at HCL Technology and Tech Mahindra. In fact, relatively even Infosys looks good to me. So these are three top stocks which I will pick from IT purely based on charts.
Okay. So IT in focus, watch out for that, and likely to be in focus in tomorrow's trade as well once we have TCS numbers out. But let me go across to Samit Sarkar for that time on the show where he tells us what he's heard on the street. Samit, what do you have for us today?
Well, firstly, we spoke about Poonawalla FinCorp yesterday, where we did indicate that the management at the company is looking to launch its QIP soon. Now, what we're hearing here is that the demand for the QIP has been a bit weak, and hence the company might actually cut down the QIP size from 5,000 crore to 3,000 crore. So keep an eye out for Poonawalla FinCorp. For TCS, the company will be reporting its numbers today, and dealers are indicating that there are buy flows on the large HNI desk ahead of the results. Dealers are expecting that the constant currency growth number could be better compared to what the street has been estimating, and the number could come at around 1.5 to 2%, and deal wins are also expected to be much better. When it comes to capital market stocks like Angel One and Motilal Oswal, both the counters are seeing buy flows on institutional desk in trade. Delivery volumes could well be on the higher side. And when it comes to Varun Beverages, multiple dealing rooms are recommending positional buy calls to their clients, so keep an eye out for this counter as well. And lastly, when it comes to Maruti Suzuki, some buy flows is what dealers have indicated on the PMS desk. The stock is trading down, but there are some buy flows that are coming in. Dealers are largely indicating that the fourth quarter numbers are expected to be on the stronger side, and hence these buy flows on PMS desk.
Okay, so there's quite a bit of stock that Samit has just told you about, and quite a few stand out. In fact, TCS, buy flows on large HNI desk ahead of the numbers, and bear in mind, better deal wins anticipated, higher constant currency growth of between 1.5 to 2% seen. In fact, some people had penciled in as much as 2.3%. Actually, 2.3% in normal terms, and 1% or thereabouts. I've actually written this down. Let me tell you exactly. In constant currency terms, 1.5% revenue growth is what is anticipated. So if it is more than that at 2%, it would be a big positive. Rudramurthy, on the charts, TCS has had a wobbly session so far, and so has the rest of the IT pack. How do you trade it?
Yeah, Alex, just now I mentioned on TCS that yes, if you are buying at current market price, keep a stop loss of around 2,500 and look at 2,750 to come on TCS. It is definitely showing relatively strength on chart. But however, if you ask me to pick any stock from IT as a pack, I would definitely go with HCL Technology as the first best stock on chart. Looks very, very strong. And the second one would be Tech Mahindra. So for me, Tech Mahindra as well as HCL Technology can do much better. But if you ask me specifically on TCS, still it looks a buy for me. I feel all the negative news which was there, and on top of today's Anthropic news too, this as a sector and TCS as a stock is still relatively holding. So I agree that what Mahesh told, all the negative news which is already there on this sector is priced in, and one can definitely look at buying good ones like TCS, HCL Technology, Tech Mahindra, where you have relatively more comfort and more margin of safety at current market price.
Okay. Stay on with us. Some more stories that we're covering this afternoon. There's a fresh regulatory development around Jindal Pali Films. The NCLT has issued a notice on SEBI's intervention plea in a class action matter, with the regulator flagging alleged disclosure lapses and shareholder losses. Now, the Jindal Poly story is interesting. What you're seeing is the intraday movement about 4% down, but you need to see this stock from a 6-month and a 3-month perspective, because there has been a complete seesaw with it going up nearly 84% in the last 3 months basis this class action suit. In fact, putting it all in context is Nimit. Nimit, first, let's talk about why this company has been in focus and then tell us about today's developments.
Yes, an exclusive look into SEBI's preliminary investigation report, which it has filed with the NCLT in a class action lawsuit ongoing with Jindal Polyfilms. We have been able to see, and in that we have found that SEBI has said that there have been serious governance lapses as well as violations of securities law in an investigation period spanning 2013 to 2024. It says that the SEBI's focus has been on its exit from a power sector company, Jindal India Power Tech, in 2013-2014. It says that while they exited from the company, they continued to fund the company through loans and preference share investments worth 690 crores between 2014 and 2017. They also say that this was then only bought back by the company after being written off for 35 crores. So you can imagine from 690 to 35 crores. The other bit is also a significant write-off at about 40 crores that was done, and shares were sold to promoter-linked entities there, Jindal Finance and SSJ Trust. In total, this amounts to about a 760 crore in write-offs. They're also looking at undervalued asset sales, which are also being looked at by the NCLT. And now that the NCLT has issued notice on this, in 2 weeks, this will be heard along with the main case itself.
So it's very interesting, right? And bear in mind that in a separate issue that the NCLT dealt with today, the petitioners have changed, or at least there's an application for the petitioner to change. The original petitioner actually sold their shares to another entity, which is now trying to substitute that original petitioner. And Jindal Poly is saying, hey, hold on a minute. You can't essentially make this change. So the NCLT is going to judge on that as well. I don't know if you have an opinion on this, Mayresh. The first ever class action suit in India, and it's garnered a lot of attention purely because of that. And the stock has gone up quite considerably. One theory, of course, is that if there was under recovery in certain cases, the result of a class action, if it is actually found to have under recovered, then the recovery of all of that money would be positive for the company.
It would. Not under coverage, Alex. So sorry for that. But yes, I think it's a very interesting story to pursue.
Okay. So let me ask Mr. Rudramurthy, in such a situation where there is quite a bit of regulatory action and legal action, would you trade, and what are the technical levels telling you?
Alex, crystal clear. If you by chance have bought this stock and made this stellar return, thank God, and then exit your holding. Definitely, I won't advocate any buying in this stock. Completely news driven, and if you have it with you, please exit.
About Ola Electric?
Very clear. I just went through the charts of Ola in detail. Yes, from 22 to 23 rupees, the stock is at current market price up non-stop. I would definitely recommend an exit closer to 43-44 zone. And these are wealth destroyers. If you see from top, Ola should have gone down at least 70 to 80% from where it was at around 150 rupees. So I don't want to have these kinds of stock. And experience and history says, look at all those Anil Dhirubhai Ambani group of stocks where people were buying earlier, and what has happened to the fate of those stocks today. Similar thing you will definitely see in even Ola Electric. So if someone has
having said that, you're saying it can still go up to 44 from where it is right now.
Yes, but I don't want to. It is better to go to Mahalakshmi race course in Mumbai or to Bangalore Turf Club rather than betting on these kinds of stock. But if you have it with you, look at exit on every rise, and yes, 43, 44 will be the level where one can completely exit the stock, but I will sell on tranches on every rise.
Don't forget to thank God before selling. Is that it?
Definitely. But in case of Ola Electric, you are losing money. Whereas in case of Jindal, what we saw, you have made 80% return there. So I said, thank God when you exit Jindal Poly. But Ola Electric, you can't thank, because unless you have bought it at 22, 23, To buy there, you have to either be a god or a liar, and I am not one among them.
Okay, since we saw such a good reaction from Mayuresh on our screen, I have to ask you, Mayuresh, about Ola Electric.
I don't know.
What's this? Nahi. Why you're not tracking it? You don't want to answer? What is it?
नहीं यानी मुझे वो स्टॉक का जो एक अंडरलाइंग फंडामेंटल्स है वही समझ में नहीं आता है सो आई थिंक इट्स अ नो
Okay, so it all got encapsulated in nahi. Okay. We'll let you go, Mayuresh and Rudramurthy. Thank you so much for speaking with us today and coming on the show. Show is still very much going on. We're taking just a very short break. Coming back with a new set of experts and a lot more to talk about before closing bell. We're down but not out. That's how I would say the Indian markets are. So plenty of opportunities that we'll discuss on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore.
Welcome back. You're watching India Market Close. Look at the screen and then let's look at the Brent. Here's what's happening right now. Cool off in market sentiment, but not to that extent. See, the Nifty is also off its lows and not quite at the 23,800 mark, but inching towards, still about 200 points. If you look at the Brent, that's inched up about 3.5% over the last few hours. Another important thing to watch is whether Iran and US and their representatives actually turn up for the talks that are supposed to start from tomorrow in Islamabad. That becomes crucial. Now, why am I saying that? Short while ago, a Bloomberg report saying that an Iranian official who had posted about his meeting with the United States tomorrow in Islamabad has now deleted that post. So a lot is being read into everyone's social media movements as well, and one will wonder and see whether this meeting actually takes place or not. So that's crucial to watch. On this leg of the show, we're joined by Rajesh Palvia, SVP Technical and Derivatives Research at Axis Securities, Deven Choksi, MD at DR Choksi FinServ Private, also joining in. Welcome to both of you, and thank you so much for speaking with us today. Deven bhai, I'm going to come to you first. What is your take on the market sentiment right now? Because we have seen a little bit of cool off compared to yesterday, but then yesterday you also did see an 800-point rise in the Nifty. Is this just a bit of profit booking or uneasiness about what's going to happen with this ceasefire?
Yeah, good afternoon. Yes, I think the multiple viewpoints, of course, I think everybody has them. In my viewpoint, I think the understanding is very clear that the underlying tone in the market is for upside. And everybody wants to see the kind of a resolution on the war front. If the war front, I think, is resolved in whichever way I think they are asking for, probably I think the markets are going to stabilize and gradually move up. Yes, I think the yesterday's bounce cannot sustain. So certainly I think it has to have some kind of a corrective downside. And the corrective downside could be, I think, between 23,100 to 23,800, anywhere between. I think the market will probably get settled in my viewpoint. Should that get settled, probably I think you will have the next upside somewhere around 24,600 or odd. So that is where probably I think our positioning 23,100 to 24,600 is 1,500 point range in which I think market could possibly consolidate. More importantly, the companies are basically now assessing the impact of this particular last month's, I would say, tragic downside because of whatever the logistic problem that one has seen. They are assessing the impact as to how soon they can come back onto the regular production stream and whether I think the production cost would remain under control. Because I think in many product cases, input costs probably have gone haywire and that needs to come under control. So should this war-related situation get subside, then probably I think you can ask next would be the impact and probably how they will absorb the hike in the cost and maybe I think the adjusting selling prices. So these are some of the things which we believe, and that's why I believe that the market could remain range bound at this point of time.
Okay. Okay, let me check if Rajesh Palvia also has a similar view on the charts, because Rajesh, our previous speaker on technicals was talking about a shift from the recent phenomenon of sell on rise to the possibility of a buy on dip. Is that something that you're seeing as well?
Yeah, hi, good afternoon. Yeah, definitely. So in last couple of days, structure has changed and now it's a buy and dips structure as we are comfortably holding about to near-term, short-term moving averages. So I think till Nifty is trading about 23,500 zone, I think any minor decline, which we are experiencing in today's session also, these kind of dips should be used as a buying opportunity as broader market has showing a sign of recovery and the confidence is there in the street on the buying side, and a lot of bargain hunting is taking place in the stock specific front where we have seen a huge corrective move in last couple of months. So I think the structure has changed on the positive side. A lot many beaten down sectors are also showing buying interest from the lower level from their oversold trajectory. So 23,500, 550 zone is the important to watch for. If we continues to trade above this level in this kind of minor dips, I think trend is likely to exhibit on the bullish side. Once we able to take out about 24,000, 2450 level, that's the major supply zone based on the recent technical setup. So once we able to take out about 24,000, 24,050 zone, I think then we could see a major short covering action to play out in the market, and then possibly Nifty may attempt to scale further to 24,300, 400 zone also. So yes, setup is on the buy and dips kind of structure for Nifty. For Bank Nifty, 54,000 is the important level to watch for. If we able to hold these level, I think 54,000, 54,200, that's the major support area as of now for Bank Nifty. If he continues to trade above these level in volatility, I think here also we may see a gradual buying action in large cap banking space. And once we able to take out above 55,600 zone for Bank Nifty, I think here also 56,500 trajectory we may see in the coming days. So both indices are looking attractive. Change of stance has been taken place based on the near-term, short-term technical structure.
Okay. So very quickly then let's talk about individual picks. We're just about 20 minutes away from close, so we'll have to run through this very quickly.
So Cummins India is looking attractive. The way stock has managed to give breakout on the near-term chart, comfortably holding about 20-day, 50-day moving average, and whole sector is showing sign of good buying action. So Cummins India one can buy for upside target of 5,000, 5,050. On the downside, one needs to keep stop loss towards 48.40. Another stock is from the metal space that National Aluminium is looking promising. In this kind of market also, this stock has managed to absorb all the volatility, and looking at the structure, we believe that once stock crosses above 416, possible upside target towards 435, 440 we may see in the near term. So National Aluminium one can buy with stop loss of 406.
Tata Consultancy Services, pull up the chart and it could be a buzz, right? Soumit Sarkar told you about this in Heard on the Street. There are buy flows, there are on HNI desks, and there is an expectation that the constant currency growth will be better than expected. Just to put some numbers into perspective, the revenue growth in the quarter on a quarterly basis, Q4 versus Q3, is seen at 2.3%. In constant currency terms, the expectation is 1.5%. And what Somit said is that it could come in between 1.5 and 2%, which would be significantly better than expected. Artificial intelligence revenue, which is usually described as an annualized number, is something that could come in between $2 and $2.2 billion. And this is something to watch out for as well. Total contract value seen at about $10 billion. So these are the numbers that you should keep on your radar. We're just about half an hour away from the presentation of those numbers. But in that interim, Devin bhai, what is your opinion on TCS? Because it's kind of going to set the tone for the rest of the IT pack, isn't it?
Yes, absolutely, Alex. I agree with that part. And more importantly, I think valuations are very, very comforting right now. On one side, we see that the gradual confidence building has once again started taking place in the minds of analysts who earlier wrote off, I think, the Indian IT companies. I think it is a very happy situation to find that I think they've started correcting their position as far as I think Indian IT company model is concerned. Most of the Indian IT companies, they are basically using AI as enabler. And from that perspective, they're delivering faster solution to the customer. So from a time and effort basis billing practice, I think they are probably now delivering the values. And that is where probably I think they're charging their customers. That's what we learn in some of the contracts. Now, if that happens to be true across, then probably I think you are going to see the larger inflow of the contracts coming in, as we saw the day in the case of Wipro, where they successfully won about $1 billion worth of contract. So in my viewpoint, I think TCS, Infosys kind of companies, they register a claim for signing some of the large contracts from different verticals in which they are operating. And that's what we would like to hear from them going forward. We believe that I think AI definitely is going to be helping them for scoring better numbers, I think, than otherwise.
Yeah, I think TCS is the outlier right now because IT cooling off, but TCS on its own trajectory and going from strength to strength as we head towards the announcement of their numbers. An interesting conversation we had with Samir Arora this morning, who talked about his view on the IT pack. He's, of course, founder and fund manager of Helios Capital. He has a contrarian view to what you've just heard. Listen in.
IT is more active because I used to run India's biggest IT fund. And IT, because I see that these guys look only at the quarter. If they know that that company that has given them the order for this quarter is itself getting into deep trouble, but not right now because the order has been given. So they say, we are not concerned. We have order for this quarter. That's what I don't like about them. That they don't tell us what is happening in the next big picture, this thing, by saying, we have orders for this quarter. I don't like that.
Two different views over there right now. I want to just go across very quickly to Rajesh Palvia for the technical view on IT.
I think most of the stocks are recovering from their oversold trajectory, and some of the large cap stocks like TCS, Infosys, Tech Mahindra all have shown good buying interest in last couple of days. Looking at the technical structure for TCS stock now trading above to 20-day moving average since last 3-4 trading session. Ahead of numbers, stock is showing buying interest in the stock. Near-term resistance is placed at around 2630, which is very important and crucial for this up move. If stock managed to give breakout about 2630, then we may see some short covering action, which could take stock further higher to 2680, 2700 kind of zone. But on the lower side, one needs to place a stop loss at around 2535, which is very important to keep at this juncture as a stop loss, as still numbers may change the technical setup. So 2535 one needs to keep as a stop loss.
Okay, time for an NDTV Profit exclusive. ITDC reset is in the pipeline. We're learning 3 subsidiaries are to be divested as Ashok Hotel monetization gains pace. Shrimi Chaudhary here with the exclusive details. Shrimi, go ahead.
That's right. In fact, this is the strategic reset of ITDC, and the government focusing on two important aspects. One is to exit the non-core asset as well as unblock the prime properties. What we are hearing from the top sources in the government that the prime property of ITDC, that is the Ashoka Hotel, they are going to soon, start working on under National Monetization Pipeline 2.0, and in fact, they are going to take up this entire PPP model plan in its upcoming IMG group meeting, interministerial group meeting with Tourism Ministry as well as the concerned Department of Finance Ministry. In fact, what we are also picking at this point of time that the Ashoka Hotel is going to have a clear, they are going to have a clear roadmap that where government will have continue to have the ownership of the property, but they will be given to the private, parties to manage the operation. Now, meanwhile, government has also divested, at least 3 subsidiary of ITDC. These are subsidiary hotels in different states, and in fact, they transferred the asset to respective state governments, and one being the Ranchi Ashok Hotel, gone to Jharkhand government at 3.06 crore. Punjab Ashok Hotel, 51% stake transferred to Punjab Tourism in 79 lakhs. Then Hotel Jammu Ashok to be handed over to JNK government in 11.09 crore. Now, valuation remain being, modest, but the focus of the government at this point to clean up the book of ITDC, and of course to monetize the prime properties under the National Monetization Pipeline 2.0.
Okay, interesting. Locked in upper circuit after that story first broke on NDTV Profit sticker. Thank you for that, Trimi. You're seeing the impact over there. This push for monetization and asset monetization is going to be interesting to see. Deven Choksi, just your response on the story that we've just put out, that divestment plan will be discussed next week. Just directionally for the government to now focus on some of these monetization plans gives a positive signal to the street?
Yes, absolutely, Amanda. I believe that I think the important part out here is that I think transiting the business of the company or the business model of the company from an asset-heavy business model to asset-light business model. The company is basically entering into more in the consulting side of the activity at the same time operational side of the hotel business, as against I think holding the assets and not earning enough out of those assets. So that's a good strategic move as I see it. And I think that's a view even Indian Hotel has adopted. And even ITC's portfolio in hotels, I think they are also similarly adapting to that particular viewpoint. That I think they're more likely to remain asset-light companies and generate, and their expertise in the area of hospitality, so they would continue to do that. So that's a good part. Even government is basically monetizing these assets, which is again, I think, a good part that gives a good signal to investors in general. Since we don't have coverage on ITDC, so I would be refraining from putting across any recommendation and the views on that front. But I believe that strategically it's a good move, and which is getting validated from the practices by the private peers in Indian hotels and among others.
Okay, fair enough. Thank you for at least putting a perspective on that. Just looking at what's buzzing this afternoon, Ather Energy, Zen Tech, Honasa Consumer catches one eye. Honasa Consumer because of the business updates as well. I mean, this entire space has surprised on the upside, I would say, just on business updates. But I'm going to go to Rajesh first, Rajesh Palvia, on what he's making of Honasa on the charts.
After a long consolidation, now stock is negotiating with its, May 2025 swing high. Any breakout about 335, 340 may take this stock further higher. As after almost a consolidation of 1 year, now stock is breaking out those range. And looking at the near-term, short-term structure, we believe that this breakout is going to happen in next couple of days. And once this breakout takes place, I think the next upward target on the higher side would be around 365, 375 in a short period of time. So one can buy and accumulate. Those who are already on the long side of trade can hold the position with stop loss of 315.
Okay, all right. I do want to ask Deven Bhai about private banks, because they may be under the hammer today, but they gained quite considerably, Deven Bhai, yesterday. And I'm talking about the large private banks as well. Everyone seems to be talking about the attractive valuations, mouth-watering at these levels. Some people have gone ahead and said, do you agree? Are you at all concerned about some of the corporate governance question marks that some might have had? Because there are some people that have gone out and said, please give us more opportunities to buy these stocks.
Yes, absolutely, Alex. I think, and this is the time probably, I think that you got an opportunity. Maybe the market is slightly circumspect about the corporate governance issues of, say, HDFC Bank, for example. I think till the time the complete clean sheet comes out or whatever, I think from the audit that they are commissioning, in my viewpoint, I think the valuation is saying it all. I think you're getting at 1.5 times price to book value for a size of a bank which has probably run over the last 35 years plus. So in my viewpoint, I think this is one company which cannot be, I think, ignored if India has to be a story to follow. Some of the larger banks are going to be lacking, and that's where probably I think we like the names like HDFC Bank and even other private sector banks. I think who are systematically having the diversified portfolio, retail at the same time, the corporate portfolios and at the priority sector portfolio kept at a 10% margin, 10% I think share distance. So we believe that I think, yes, I think the opportunity is right. Probably downside risk is minimum because the valuations are absolutely comforting. What one needs to see in some banks like NDFC probably as to how soon and how fast they adapt to the, I think, the fintech at the front, so that I think their dispersal of loan becomes more effective and AI driven, which could possibly give them an advantage in form of, I think, moving faster in cornering the market share. That's something which we would like to see from the bank. But otherwise, I think I find that the valuations are now reasonably okay to buy into the portfolios.
Okay, HDFC Bank in focus. I think the big overhang, though, continues to be what's happening geopolitically, and it impacts every sense and every size of industry. My colleague Rishabh Bhatnagar, in fact, caught up with top names from corporate India to get a sense of how they see the impact of the Iran war.
Peace stability is very important for economies to thrive, and India was doing very well, and of course it's continuing to do very well also. But what has happened, of course, is not good for the economy. Besides logistics, it has an impact on energy and energy prices and whatever is indexed to it. So cost in certain items will certainly go up. Some companies could even face disruptions. So it's a cause of concern, and very, very, very happy to hear about the ceasefire. Hope after that peace and stability prevail.
The inflation impact will be across the board. It's not on any one thing. So as I said earlier, knock-on effect creates a multiplier. So what can be passed on is what the markets can absorb. I don't think anybody has a ready standard formula for this. It will be different for different products and services depending on the need, the urgency and the timing of both the demand and the supply. We'll have to watch and play it by ear. The best hope we have is that this will ease off. We saw the impact even in one day. The oil price took a dip with just the announcement that there is a possibility of peace. So let's hope that is where direction we are going in rather than otherwise.
Okay, I just want to pull up the advanced decline ratio just to see if there's a change towards the end of the session. Well, you are narrowing the gap just a tad bit, but it continues to favor the declines. You're off the low point of the day for the benchmark Nifty 50, but still trading with cuts of about 1% or so. As I look to the broader markets, there are a few names that stand out among the key losers and gainers. Something like a Chola Holdings, something like a CCL Products not doing particularly well in trade today. Vishal Megamart also losing about 3.7%. Interglobe Aviation, by the way, from the Nifty 50 pack itself, is now down as much as 3.5%. And in fact, it's a good stock to ask Deven Choksi about. Deven bhai, if the crude oil price issue gets resolved, then this is a very key beneficiary. And it is already, in a sense, a beneficiary, Interglobe, because to a certain extent, it has been protected from an ATF price spike, at least as things stand right now. Are the valuations compelling at this stage?
So I think it's a good question and probably I think not have a complete answer to it. I think we've been trying to do the math and probably we only get some directional answers to this particular math. On one side, yes, we agree that if the crude oil prices comes down, I think the threat of these ATF prices spoiling the entire profitability picture of the aviation companies in particular would also subside along with. But whether in the interim period, I think have we addressed this situation completely? Answer is probably not easily available. How many number of seats occupied, I think, is basically, I think, right now operating. We do not know, particularly on the international route, which is almost more than 40% of the business revenue mix, I think, for Interglobe. We do not have that clarity on that front. The domestic business is so far quite okay, I believe. I think, and they are maintaining the margins also in that particular business despite of hike. And from 20th of April, probably I think they will have to once again adjust to the new pricing formula, whatever the government has spelled out. So from that perspective, we are not getting a complete clarity on as to how the impact is going to be. But I would like to believe that I think market price, if it was below 4,000 at some point of time, I think that was a time when probably it was giving some amount of comfortable leverage, I think, to buy into the stock. Not too sure whether 10% above that level, I think one would like to buy immediately.
Okay. Rajesh, just 5 minutes left, but any BTST ideas?
I think Adani Power is looking attractive. The way stock is now managing to cross its rounding bottom formation breakout. So I think here we could see more traction on the higher side. 180, 182, we are projecting target for the stock. On the downside, 169 needs to keep as a stop loss. And another stock where we are focusing is Avenue Supermart, DMart. Stock has shown a very strong rally in last couple of week. Some cool off action was there in last couple of days, but looking at the overall structure and the buying action in second half especially, we believe that this stock has potential to move further higher. 4,500 to 4,550 we are projecting target. On the downside, 39.80 needs to keep as a stop loss. 43.88 as a stop loss.
Got it. All right. Let me ask about Hindalco. Rajesh, what's the view on the charts? Because this is a top performer in the benchmark Nifty 50, reacting obviously to the underlying as well. But would you buy into this?
Yeah, definitely. So metal space is looking attractive. National Aluminum, we have already mentioned as a buy. Hindalco is also looking promising. The way stock managed to give breakout of falling trend line on weekly daily chart. I think 1,020 would be the next target for the counter. On the downside, 965 needs to keep as a stop loss.
Yeah. Okay. Thank you so much, Rajesh and Devin Bhai, for joining us this afternoon as we close out on India market close. You still have pain coming in. You're 200 points down, considerably off the lows. One consistent theme across the show today, Alex, and what everyone said is that the buy on dips texture in this market is very much there. And dips like these, a 200 point dip after an 800 point rise, are opportunities that people should look at. That opportunity narrative and conviction has been stronger today than over the last few days, and that's because look at the advances are over the declines. The advance decline ratio chart will give you that picture of when that switch has happened. That's telling you that the broader markets are doing okay. No, actually the declines are now over the advances, but it's close enough. I think the gap has narrowed. That's what has really helped. The Nifty heat map will also give you an idea of what's happening. The focus from now for the next few hours is going to be TCS. It's all about TCS. Every quarter they ring in the result season, and this time it's expected to be a good one. Let's see what happens. Indigo taking the biggest knock after the slide back of crude prices, or the slide up, 3.5% down. Geo Financials, L&T, Shriram Finance, all of the gainers really sliding back to some extent. Hindalco, they're the big winner, isn't it, Alex? Hindalco holding strong.
Yeah, absolutely. You've said it. And Reliance Industries once again among the losers, losing about 1.4%. You're talking about valuations of conglomerates. Well, this one certainly a lot of people have made the case. But I do want to look at the contribution chart just to showcase this. And you will likely see Reliance Industries in that list. HDFC Bank once again, ICICI Bank, the private sector banks were among the top gainers in trade yesterday. They are among the biggest contributors on the downside today. And Larsen & Toubro, remember, in trade yesterday you saw 7.5% of gains. Some money being taken off the table here. Not too much in the way of big contributors on the gainers side. Tata Consultancy Services among them. Pull up the intraday chart for both the mid-cap index and the small-cap index. You will have gotten a sense of the closing of the gap between the advances and declines, but we are off the low point of the day, considerably so for this particular
You're
index.
a 0.25% up on the Nifty mid-cap. We started the show completely flat. Some recovery in the small cap as well. So at least in the green. And sectoral heat map will tell you which are the sectors which are sort of pulling forward to some extent. Defense, CPSE, I think the metals, the last half, the metals have also come to the fore. The banks continue to sulk, and IT.
Yeah,
it's
I
IT
was
and
just gonna point that out.
TCS actually. It's the intraday of the TCS will tell you the story. TCS is the one in focus, the cynosure of all eyes at this point. All right, we're getting into that closing bell just in about 6 seconds from now. TCS a 1.2% up as we close out, and really that becomes the story that we need to track very, very closely over the next few hours. We'll be there to tell you what's happening with them, but we're closing off, I would say, at least not at the lows of the day.
Yeah, just about 1% or so lower. By the way, the next few minutes is what it will likely take for Tata Consultancy Services results to come out. Till then, on this show, that's all we have for you. And from Tamanna and myself and the team that put this show together, thank you so much for watching. Stay tuned, lots more coming up on NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's at stake? How to
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5, only on NDTV 24/7.
in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu. Here we come.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
Good evening, you're watching Market Express with me, Shreyanti Singh, and this is the show that gets you a snapshot of everything that has happened in trade, but also news and developments from within the country as well as across the globe. First things first, let's talk to you about the key development when it comes to Iran that has accused Israel of violating the recently agreed ceasefire by continuing airstrikes on targets in Lebanon. Tehran, in fact, has said that the attacks undermine the fragile truce brokered with the US involvement and has really warned that it may reconsider its commitments if the strikes do not stop. Meanwhile, US Vice President J.D. Vance, in fact, is set to lead the next round of talks with Iran as well. And the ceasefire, which includes the reopening of the Strait of Hormuz, had brought temporary calm after weeks of intense conflict. So that's something that you're looking at. However, Israel, in fact, maintains its operations in Lebanon are necessary to neutralize remaining Hezbollah threats as well. And the situation at this point in time remains tense, with both sides exchanging accusations as diplomatic efforts continue. Moving on then, let's talk to you about what happened with the markets. Markets ended the day in the red, with Nifty 50 ending below that 23,800 mark. As you can see on your screens as well, in fact, when you talk about the Sensex as well, that slipped more than 1%. Broader markets performed slightly better than benchmarks and ended the day with minor gains. Hindalco and TCS gaining the most, whereas HDFC and ICICI Bank, now those are your top Nifty 50 losers. Let's also talk to you about the sectoral action that remained largely mixed. Nifty India Defence, now that particular sector, and metals ended at the top sectoral gainers. Banks and financial services bled the most. Moving on then, let's talk to you about oil prices. Oil bounces back sharply after its steepest fall since 2020 as well, with markets jittery as the Strait of Hormuz remains largely blocked. Israeli strikes have reopened supply fears, keeping crude near $97 a barrel, with tanker traffic still thin and the ceasefire looking fragile. Let's also talk to you about some of the counters that were buzzing away in trades. Something like a KAC International that secured new orders worth around 2,500 crore rupees, adding to its already strong order book. Now, the orders span civil construction, transportation, power transmission, and even distribution alongside cables and conductors. Let's also talk about something like an Info Edge that was in focus on the back of reporting steady growth in its fourth quarter business update, with billings rising modestly for the quarter and the full year as well. Now, when you talk about the recruitment solutions, they remain the largest contributor, while Jeevan Saathi continues to be the fastest growing segment. Growth remains mixed across verticals, with moderation in real estate and weakness when it comes to education services. Moving on then, let's talk to you about the Union Cabinet clearing a higher fertilizer subsidy to keep prices stable for farmers and elevated global costs as well. The move is positive for companies like Chambal Fertilizers, Coromandel International, GSFC, Pact, Paradeep Phosphates, RCF, as well as GNFC, and like I mentioned, GNFC, and also National Fertilizers that helped really support volumes through the Kharif season. So that's one important development that you're looking at. The Cabinet also approves key energy and infrastructure projects, and that's also key to note here. But let's also move on to the next counter as well. That's also in focus. Something like a Hunasa Consumer is standing out on the back of delivering healthy growth in the fourth quarter, driven by strong traction across its brand portfolio. while Mamaearth also recorded steadier growth. Now, the company's younger brands, let's also zoom in on those as well because they continue to grow faster and add to the overall momentum. Offline channels, including general and modern trade, remain key drivers as Honasa expands its retail reach and distribution. Moving on then, let's also talk to you about some of the notes also that were trickling in at this point in time. JP Morgan also initiated coverage today on power equipment makers, calling the sector a long-term growth story. And as you can see on your screens as well, some of those counters were actually buzzing away in trade. And the growth story, in fact, is led by renewables and grid investments. The brokerage, in fact, starts talking about Hitachi Energy and GE Vernova with an overweight rating as well. So they've initiated coverage here, citing that strong order momentum and exposure as well when it comes to high voltage transmission projects. JP Morgan, in fact, is more cautious when it comes to something like a Siemens Energy, flagging execution and margin visibility. Overall, the view is that rising clean energy demand as well as grid upgrades keep the cycle intact over the next few years, and that's the update coming in there. Moving on then, let's talk to you about CLSA initiating coverage on ICICI Prudential AMC. Now, that particular counter was buzzing away in trade today as well, and they do have the outperform rating. In terms of what CLSA had to say, target price here is somewhere close to 3,500 rupees, calling it one of India's strongest and most profitable asset managers. Now, the brokerage, in fact, highlights the company's stable market share and also high equity mix and leadership when it comes to active fund management. When you talk about what else the brokerage had to say, they talked about how they're expecting steady growth in assets and profits supported by industry expansion and strong operating leverage. Moving on then, let's talk to you about something like an M&M that was in focus and under pressure, down about 1.5%. And they're increasing its skin in the game though, because you do have the auto major that's going to be acquiring a 26% stake in Neon Hybrid, which is a step-down subsidiary. This is for a modest amount of somewhere close to 11 crore rupees. The move underscores M&M's intent to strengthen its hybrid and clean mobility ecosystem while consolidating strategic control when it comes to emerging technology platforms. Let's also talk to you about Bosch that was in focus on the back of doubling down on its India manufacturing play. Now, the company has signed a deal to acquire 100% of one of their subsidiaries as well for over 9,000 crore rupees, strengthening its grip on the vehicle safety and mobility space. The acquisition is going to be funded entirely through internal accruals, underlining balance sheet confidence. Now, with completion targeted by the first quarter of FY27, this is one move that sharpens their local integration strategy, also enhances their technological control and positions the company for the next phase of auto and mobility growth. Let's also talk to you about something like a GTL Industries that was firmly back on the market radar as well. Look at that 12.4% gain also coming in on this particular counter. Now, the stock has also surged nearly 40% in just 5 trading sessions, riding on renewed investor confidence and also a strong strategic outlook. Now, adding momentum as well, you do have a Bacchus asset manager led by Sunil Singhania picking up a meaningful stake via a bulk deal. Now, the management is guiding for somewhere close to 15 to 20% volume growth in FY26. When you talk about their margins, they're set to improve as utilization rises and the share of value-added products also crosses 40%. Now, let's also talk about the bigger focus here that's also pushing ROC toward 25% by FY27, signaling sharper capital efficiency going forward. Let's also talk to you about something like a BEML that is teaming up with an importer partner as well to chase new infrastructure opportunities. Now, that stock was up about 1%. The company has entered into a pact with Delhi Metro Rail Corporation or DMRC to jointly bid for upcoming projects. The partnership brings together DMRC's execution and project expertise with the company's manufacturing and engineering strengths. Now, this really positions the duo strongly as metro and urban transit capex gathers pace. Let's also talk to you about something like an Ola Electric that was buzzing away in trade in the fast lane. Really, the stock was soaring in trade today as well after extending gains to over 50% from March lows. Let's talk about some of the key triggers here. Fresh momentum coming in from key technology and execution milestones, including readiness of its indigenous 46,100 LFP cell, complementing the existing NMC battery platform as well. Now, add to that entire list PLI certification for its Roadster X Plus motorcycle and a sharp spike in terms of monthly registration. So they're up over 150% on a month-on-month basis. The rally really reflects renewed confidence when it comes to localization, scale, but also execution. Let's also talk to you about something called Maharashtra Seamless that was in focus on the back of streamlining its corporate structure. The company has voluntarily struck off its step-down arm into Novia Natural as well, and this is a move that it says will have no impact when it comes to operations or financials. But the action really reflects a tidy-up exercise, keeping the core business focused and uncluttered. Let's also talk about GM Breweries that reported a mixed fourth quarter performance. Revenue jumped nearly 20% on a year-on-year basis. The stock was down about 3% in trade, but you did have that revenue jump really coming in on the back of strong volumes, while EBITDA surged over 80% as well, driving a sharp margin expansion. However, you do have higher tax outgo that really weighed on the bottom line. So that was weighing on the stock as well, with net profit falling about 11% on a year-on-year basis, despite the operating strength. Let's also talk to you about something like an Anand Rathi Wealth that delivered a steady fourth quarter showing as well. Net profit rose modestly quarter-on-quarter basis. And you do have the total income that's in fact jumped over 16%. The stock was up about 4.5% thereabout. And you do have that strong market-linked activity that is getting reflected here. Sustained client engagement also something that you're looking at. And the numbers point to stable execution even as broader market volatility persists. Let's also get you some other news and updates as well. The government is accelerating the monetization and restructuring of India Tourism Development Corporation as well. And you do have 3 hotel subsidiaries that have already been transferred to the respective state governments. The flagship Ashok Hotel in Delhi's Chanakyapuri is now set to be taken up under the National Monetization Pipeline 2.0 through a public-private partnership model. An interministerial group meeting will be discussing this particular plan early next week. So that's really what you're marking on your calendars, but this is part of the centre's broader strategy to exit non-core and loss-making assets while also cleaning up ITDC's balance sheet. Moving on then, let's get you some business news. The World Bank has maintained a positive outlook for India's economy in financial year 27 despite rising global tensions and oil price risks as well. Now, in its latest India development update, they've projected India to remain one of the fastest growing major economies, also highlighting resilient domestic demand, but also robust services and manufacturing sectors and continued policy support as key growth drivers. However, the report also cautions that prolonged geopolitical conflicts in the Middle East and sustained high oil prices could really pose a downside risk when you talk about higher inflation and also import costs. Talking about the International Monetary Fund then, that has warned that rising global defense spending could lead to higher budget deficits and increased public debt over the medium term. Now, in their latest fiscal monitor, the IMF in fact has noted that several countries are significantly increasing military budgets in response to geopolitical tensions. While this spending may support short-term growth through higher government outlays, it also risks widening fiscal gaps if not accompanied by revenue measures or spending cuts elsewhere. And onto a US court that has ruled that Anthropic will continue to be labeled a supply chain risk for the time being. Now, this decision comes in a case where the AI company was flagged due to its significant reliance on foreign technology, but also potential national security concerns. The court, in fact, rejected Anthropic's request to immediately remove the designation, and this label could really impact the company's ability to access certain US government contracts and partnerships. Moving on then, researchers have uncovered up to 25,000 active users on Telegram groups and channels trading non-consensual intimate images and videos of women, mainly in Spanish and Italian networks. The investigation traced nearly 80,000 files, mostly photos and videos, including real explicit content, AI-generated deepfakes, and some child sexual abuse material as well. The content is being monetized through one-time fees or monthly subscriptions. The report, in fact, also highlights doxing and targeted harassment. Moving on, then, the Magic Kingdom is tightening its belt as well. Walt Disney is preparing to cut up to 1,000 roles, focusing largely on marketing and corporate teams as it reshapes how it really sells stories across films, television, and streaming. When you talk about this particular layoff, it's going to be impacting less than 1% of its global workforce, according to reports. And this is part of Project Imagine, which is an internal drive to simplify operations and cut costs. As Disney doubles down on efficiency and integration, the message is clear. Even legacy giants are re-engineering for a leaner media future. Moving on, then, let's get you some national news now. The Indian-flagged LPG tanker Green Asha has safely arrived at Mumbai port after successfully crossing the Strait of Hormuz. Now, this marks the latest successful voyage of an Indian vessel amid the ongoing tensions in the Middle East. When you talk about this particular tanker, it was carrying a substantial cargo of LPG, which is going to be helping bolster domestic supplies and support energy security. The safe arrival comes after multiple Indian LPG carriers have navigated the high-risk route in recent weeks under escort and diplomatic coordination. Moving on, then, Petroleum Minister Hardeep Singh Puri is scheduled to visit Qatar this week amid concerns over LNG supply disruptions caused by the ongoing Middle East conflict. The visit aims to secure long-term LNG supplies and strengthen energy cooperation with one of India's key suppliers. Qatar, in fact, is a major source of LNG as well for the country, and any disruption in shipments could really impact domestic power, but also fertilizer and industrial sectors. The minister is expected to hold high-level meetings with the energy officials to ensure stable and uninterrupted supplies. Moving on, then, the 2026 Assembly election cycle has kicked off with high-stakes contests across Assam, Kerala, and Puducherry, with strong voter turnout reported so far. In Assam, in fact, you do have the BJP that is aiming for their third straight term, facing a multi-party opposition here. When you talk about Kerala, you're looking at the CPIM-led left front that is eyeing an unprecedented fifth consecutive term, while the Congress-led UDF is also pushing for a comeback in what is shaping up to be a tightly contested battle. So keep an eye on this one as well. And in Puducherry, you do have the Congress-DMK alliance that is taking on the incumbent NDA-led bloc, setting the stage really for another crucial electoral test. In fact, overall, over 5 crore voters across these regions are casting their ballots. Moving on, then, Parliament is set to hold a historic session to discuss the Women's Reservation Bill, which aims to reserve 1/3 of seats in the Lok Sabha and state assemblies for women. Now, you do have PM Modi who's urged all parties to really support the bill here, calling it also a landmark step towards women's empowerment. The bill, if passed, would be one of the most significant legislative reforms in independent India's history. The government is expected to introduce the bill in the ongoing session with extensive discussions planned across both houses. Moving on, then, Foreign Secretary Vikram Misri has launched a dedicated India-US trade facilitation portal to strengthen bilateral trade and investment ties. Now, when you talk about this particular portal, it aims to provide a single window platform for resolving trade-related issues, but also sharing information on regulations and promoting easier market access between the two countries. It's going to be helping businesses navigate procedures, address non-tariff barriers, and facilitate smoother cross-border commerce. The initiative is part of ongoing efforts to deepen the strategic economic partnership between India and the United States. Moving on, then, let's get you some international news. Then, tensions in the Middle East remain fragile with a ceasefire between the US and Iran already under strain. In fact, you do have Trump who said that American forces will continue to remain stationed around Iran until a real agreement is fully honored. He's also warned of strong military action if Tehran breaches the deal, even as both sides differ on key terms of the truce. Let's also move on and get to some more updates coming in terms of the war as well. The United States has asked its allies to quickly prepare plans to secure the Strait of Hormuz following the recent ceasefire with Iran as well. The move aims to ensure safe passage of oil tankers and prevent any future disruptions when it comes to the critical waterway. US officials, in fact, have emphasized the need for coordinated international efforts, including possible patrols and mine-clearing operations. In fact, you do have several Gulf nations and European partners that are also expected to contribute to the security framework. Moving on, then, Israel has raised concerns over Pakistan's role in mediating the recent US-Iran ceasefire talks. Israeli officials have questioned Islamabad's neutrality, also citing its close ties with Iran and past support for militant groups. The ceasefire, which includes the temporary reopening of the Strait of Hormuz, was facilitated with significant Pakistani involvement. Israel has expressed discomfort with Pakistan being a key interlocutor and has also urged the US to ensure that future negotiations are conducted through more neutral channels. Moving on, then, Iran has announced the creation of alternative maritime routes in the Strait of Hormuz. The new routes, in fact, are intended to provide safer passage for oil tankers and commercial vessels while reducing reliance on the main shipping lane that was blocked during the conflict. Now, Iranian officials stated that these corridors have been mapped with international coordination and will be operational immediately. The move is aimed at restoring global oil flow, but also rebuilding confidence when it comes to shipping companies. Moving on, then, tensions in the Middle East are intensifying further, with Israel claiming it has killed the nephew of Hezbollah chief Naim Qassem in a targeted strike. Now, this particular development is coming in amid ongoing cross-border attacks between Israel and Hezbollah, raising fears of a wider escalation at this point in time. The situation remains volatile, with both sides warning of further retaliation. On to some more updates. Bangladesh has raised the issue of Sheikh Hasina's extradition during talks with India, with the foreign ministers of both countries, in fact, discussing the matter. India has responded by stressing the need for constructive engagement, signaling a cautious diplomatic approach. The development adds a sensitive layer, in fact, to bilateral ties, with both sides expected to handle the issue carefully. On to some sports news and updates, then. It's a mixed day for India at the Badminton Asia Championships. Ayush Shetty continues his impressive run, moving into the quarterfinals with a strong performance. However, PV Sindhu and HS Pranoy bow out of the tournament at this point in time, ending India's campaign in those categories. The spotlight now shifts to Shetty as he looks to carry the momentum